Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends.
It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open, and if there is one company, one chief of a company who's keeping the world going in this sense, as far as equities is concerned, it's NVIDIA and Jensen Huang. So it's going to be an interesting morning, guys, and maybe we see IT stocks continue their recovery mode because of what we're seeing with NVIDIA.
Yeah, and the whole AI trade per se, but you're right, Tamanna, if there is one company which is actually keeping it going, and you can quib about the fact that his guidance is maybe a couple of $1 billion lower than what the optimistic scenario was, but frankly his commentary is constructive.
$78 billion.
To my mind, the guidance is better than what was expected.
Yeah, so the average, from what I read, the average was 72, 78, but they said, oh, but the optimists, a few had 80 billion. So
because it's 78 plus minus 2%.
He's already beaten this quarter's revenue target, right? But if you think about it, if you rank the top triggers for global markets and you put jobless claims, you put certain other aspects on economy in the US, and then you put NVIDIA, nobody is going to scoff at you. It is that level of impact.
Yeah, no, and also it reaffirms the kind of wealth creation AI is going to bring, because if you look at the last quarter or so, that had come into question. Are we in an AI bubble? So I think that question gets put to bed. So Jensen Huang, I think the world is watching what you're doing right now. But let's get on with the other global cues that you should keep in mind before we start trade. US markets closed with gains as tech stocks rebounded in trade, and that was what was really leading the pack. Even your SaaS companies were doing okay in trade. Let's pull up those indices, please, if we can. Okay, I think you've pulled up futures. If we can pull up how US markets closed. And also, let's look at what NVIDIA also did, Salesforce also did. NVIDIA earnings beat expectations in Q4. NVIDIA's core data center business clocked 74% revenue growth, and this is now accounting for 91% of their revenues. They've also upped the revenue guidance to $78 million for the next quarter. And how it closed was about 1.5% up. Now, Salesforce in post-market hours actually dropped, because even though the numbers were good, their FY27 revenue guidance was below estimates as well. Let's listen in to what Jensen Huang said during the conference call.
I am confident in their cash flow growing. And the reason for that is very simple. We have now seen the inflection of agentic AI and the usefulness of agents across the world in enterprises everywhere. You're seeing incredible compute demand because of it. In this new world of AI, compute is revenues. Without compute, there's no way to generate tokens. Without tokens, there's no way to grow revenues. So in this new world of AI, compute equals revenues. And I am certain that at this point, with the productive use of Codex and Claude Code and the excitement around Claude Cowork and just the incredible enthusiasm about OpenClaw and the enterprise versions of them, all of the enterprise ISVs who are now working on agentic systems on top of their tools platforms. I'm certain at this point that we are at the inflection point. We've reached the inflection point, and we're generating profitable tokens that are productive for customers and profitable for the cloud service providers.
All right. Now, meanwhile, bond yields rose slightly post Trump's State of Union address yesterday. He spoke quite a bit about the economy, including talking about how well the American economy is doing. The 10-year was at 4.04%. Crude prices have steadied as U.S. oil inventory rose by 16 million barrels. Brent was under the $71 mark. Let's pull up Asian indices for you and see how they're doing right now. A bit of a mixed bag over there, with the Nikkei about 0.5% up. And take a look at the India implied, if we can, nearly 45 points in the green at this point, as we look at maybe a decent start to the morning.
Absolutely. As much as we thought that there would be an outperformance or a recovery somewhat in the Indian equity markets after what has been a pretty turbulent 2025, that hasn't panned out in 2026. And I saw some data points that I'd like to point out, and that underperformance of India in the global stage continues. The Nifty 50 down about 2.5% year to date. Meanwhile, South Korea's KOSPI is up 44% in the year so far. The MSCI Emerging Market Index is up 14% in 2026, and the MSCI Asia ex-Japan is up as much as 12% in 2026. So if you thought that the Indian equity markets would play catch-up, then this is a sobering reality to look at. We've got Jeffrey Dennis, independent emerging markets commentator, joining us this morning. Jeffrey, thanks so much for taking the time. And comments about what you thought of NVIDIA's results and what it means for the ongoing AI-related trade.
I don't really follow the individual companies that well, but obviously NVIDIA continues to grow, and I think that's very important. But I think the market is somewhat split now between investors who are still very, very bullish about the tech sector and specifically the AI sector, and those who are very worried about the capex that's going to have to be put in place, particularly on data centers. And I think that's the worry people have. Also, investors have got a lot of worry about all the cross holdings of assets that are building up within some of these leading AI companies. So I feel basically there's nothing here in the Nvidia results that's going to cause this AI bubble, which is a bubble, to pop. But I think investors generally are a bit more cautious now, and I think it'll become harder as we go forward for there to be positive surprises from the AI and from the big tech companies. And this is why I think you'll probably see some of the more traditional sectors doing a little better as we go forward.
Jeffrey, good evening to you. Because AI is still front and center, if you will, what did you make of, or what are the rumblings that you heard of this India AI summit? Because anybody except for Jensen Huang, of course, was present there. And if India was told as or spoken about as one nation or one economy which didn't have an AI trade, this kind of put that to rest, if you will. Do you reckon flows in some fashion because of the underperformance of 2025 and because of now some foot in the door in the AI trade could well happen in India, or are valuations still a problem?
I don't think valuations are a problem, particularly, especially after a very disappointing 2025. And I don't think that, suddenly creating one or two AI companies in India are going to be the thing that really pulls people back in. Although, of course, if you were to see some large listings of AI companies, I think that would be pretty good. But I think India from here on is going to have to move based on more conventional fundamentals, I think. The valuations in relative terms to EM, and in particular to China, have pulled in quite considerably given the poor performance in 2025. I know inflation's picked up a little bit, but real rates are still positive. There may be room to reduce interest rates. The fiscal side seems to be under control. So I think we just need a trigger here to get some of these foreign flows in. Now, meanwhile, while Korea is blowing the doors off and while Taiwan is also doing very well, we're not sure what that trigger would be. And certainly I don't see AI specifically at this stage anyway being a catalyst. It could be down the road, but obviously it's nice to see an AI summit in India, but I think we got a ways to go from that to India's AI sector specifically attracting a lot of foreign money into the market.
Jeffrey, last thoughts on this whole tariff conversation, because you're obviously going to see back and forth between all of the trading partners of the US, and the news, of course, over the weekend and at the start of this week was that those 15% tariffs did not come into force. The latest update, of course, is that they're going to try and do it where applicable. And this seems to be a climb down from what was stated over the weekend. How do you see this panning out? Do you think that this is something that we can finally put in the rearview mirror?
Oh, I don't think so. I think it's going to continue to be a source of volatility, frankly, within the markets generally. Now, I think it was no surprise the Supreme Court knocked down the previous tariff regime. And then, of course, what they did is simply refer to a different law for Trump to be able to announce these 10% tariffs, which then he said would be 15. And now he's saying maybe it's only going to be 10. And of course, as I'm sure your viewers know, this is a law that only allows these tariffs to be general tariffs at a 10% level to be in place for 150 days, 5 months. And so, between now and then, you've got to get Congress passing a bill or, getting an act passed and signed by Trump to get them being more permanent. And I think that's going to be very, very hard to do, especially as we push up towards the midterms, where, frankly, the Republicans are increasingly unpopular around the country. So I just think, the White House is committed to tariffs without any question. And if these are rejected again, or they run out of room because the 5 months are up or whatever, I'm sure they'll try to find something. We've got sectoral tariffs. Steel, of course, is a good example, autos. But general tariffs on individual countries, we're now relying on a different act from history. And how long they can sustain that, given the 150-day limit, remains to be seen. But I'm afraid to say this book is not over. This book is not finished. It's going to continue to be a source of volatility, I think, to markets as we head through 2026.
At some point, I hope that we can shelve that book. Thanks so much, Jeff, for taking the time for speaking to us. Pleasure speaking with you as always. All right, let's talk about Indian equities. And we gained in trade yesterday, but we ended off the day's high. And foreign institutions net bought equity worth close to 3,000 crore rupees. This is positive. And IT was the brightest spot, though gains cooled quite sharply through the trading session. And you had the Nifty IT, which gained 1.6% at the end of the session, but it dropped 1.5% or thereabouts from the day's high. IT gained after 4 days of declines, of course, and it's only a little bit of a salve to those portfolios that are heavy on IT. The Nifty 50 gained about 0.2% and down about 0.7% from the day's high. So quite a bit of selling in heavyweights put pressure on the benchmark Nifty 50. Reliance Industries ended up being the worst performer on the benchmark with cuts of over 2%. SBI was not too far behind, and HDFC Bank also underperformed with cuts of about 0.33%. The others that underperformed were ITC as well as Bharti Airtel. Broader markets actually outperformed the benchmarks, and you had those indices that more or less held on to the gains that they had earlier on in the session, just about 0.1% or less than 0.2% off the high point of the days where they ended up. The Nifty Bank, however, underperformed and ended flat. Not surprising if you think about it when you look at HDFC Bank's underperformance, State Bank of India's underperformance as well. Nifty Metal was a bright spot yet again for a second day in a row, gaining 2.5%. Pharma and auto were the other strong sectoral performers. Market breadth, though, shifted to neutral and in a 1:1 ratio practically after favoring advances at the start of trade. And this is really what panned out, particularly towards the end of the session, Neeraj.
Yeah, and in some sense, some of the predictions that have been made off late on our shows by any of us, or we don't predict really, but just kind of spot trends. But what Kush and Parag bhai day before yesterday spoke about PSU banks kind of turned out to be true, right? Because yesterday, PSU banks came off.
There was profit taking.
Yeah, so I'm glad that we are having those meaningful conversations here. But frankly, range-bound trades continue because the markets wait for breakout moves. I don't think breakout moves are happening on either side, and which is the problem for this market currently for people who are wanting to take positional trades. Now, less people thought that Bank Nifty was the stronger one, and it was until it wasn't, because the Bank Nifty is now looking slightly vulnerable due to the PSU Bank trade unraveling. Yesterday, as Alex highlighted, PSU banks were amongst the worst performers, and could this continue, and therefore could the Bank Nifty continue to get impacted, because until now it was the safer bet versus the Nifty on the long side. Now that changes at the margin, so remains to be seen. I think the best strategy is not to take oversized bets, because these days no matter how convinced you might be about the fundamentals of a trade, but global factors, any commodity move, any geopolitical move could come in and hit the portfolio in any fashion. You may have been very constructive on the valuations, for example, of the solar module companies, and you didn't know that US will come in and impose that 126% tariff on modules, and the stocks will get smashed 5-10%. So if you had an oversized bet into those buckets, it would have hit you. By the way, just speaking of that, and I think one of the conversations that we did yesterday with Vari was circulating amongst a lot of people. But I think the question marks most part of the day remain that is there an issue with this, or what is it that the companies are saying with regards to this duty and whether cells are made elsewhere or no. So I think the summation seems to be that duties are imposed based on the country in which the cells are made and not the modules. And if the cell, for example, is made in Kenya or Ethiopia or some others, this is what companies have eventually told fund managers in the second half of trade yesterday, after they spoke to us and a few other media outlets in the morning. But they clarified in detail over calls during the second half of trade that if a cell is made in any country, Kenya, Ethiopia, etc., and if or any other country, and which may have a 10% duty on the cells, and if the duty on modules are made in India, where the duties are 126%, the actual duty eventually will be 10% and not 126%, which is what they clarified.
That's their interpretation.
Yes, precisely.
My only point is it's their interpretation.
Of course it is. But at this point of time, What you have to go by is the company's interpretation of what the duty is, because they are exporting it, right?
Yeah.
So the belief in the fund management circles is that maybe there could be a bit of a turn after the smashing that some of these stocks have taken yesterday. So just watch out for them. I'm not saying they will or they won't. Impossible to predict it in the current circumstance. But the feeling among fund managers is that now that this has been expressly said by multiple companies, maybe, just maybe, there could be a semblance of sanity.
No, but logically, then even India has a lower duty. It doesn't have 126% duty. Why does it only have to be from by that logic?
No, they
are keen to impose 126% duty. I'm saying, look at the intent behind the imposition
rather than the letter of the law.
They are trying to find a way to understand how they will go and position themselves, that but my cell came from here and my module came from here, but the intent on the other side is to tax. They will find a way to tax,
because the intent
I think that's also the fear playing out in the stock prices, perhaps.
So if there is an arrangement, can they disrupt that arrangement as well? But then the question is that is the arrangement with countries which are, well, friendly to the US in some sense, or
but
whatever
that's
it is. Yeah, exactly. But can they do multiple such arrangements? Because see, frankly, think of it this way. The Chinese data shows that they have circumvented a lot of these tariffs in a meaningful way and shipped goods to the US despite the fact that tariffs were on.
Through Mexico, etc., all of those things. But the point is, and I think it's a valid point, is that the intention in this case it's not trade, it's protecting domestic manufacturers.
But the intention in the China trade also with the tariffs that are there on China was to protect the US trade and get tariffs, right? That's what I'm trying to say.
I think it's a tricky one. Okay, let's wait and see what happens
just
with Bari and
watch,
Premier. I don't think there's an endorsement that they will recover or any kind of call that they will they'll be punished further. But just wait and see what happens. Though some of the other factors to watch out for, I would say silver again hitting $90. So that's one pocket, Hindustan Zinc, etc., that I would watch out for. Defense stocks, the Prime Minister in Israel gave, for the first time, an Indian leader who was addressing the Knesset and gave a very detailed speech. There are some important defense announcements that could come in. I would watch out for some of those. But when it comes to core markets, despite a minor recovery on Wednesday, the Nifty's long upper shadow on the daily chart suggests that every bounce is being met with aggressive selling. The Nifty 50 finds itself at a technical crossroad. The index is stuck in a no man's land between the 200-day DMA and recent short-term averages. Index has been oscillating between 25,300 to 25,700, indicating indecision. A decisive breakout beyond this band is likely to determine the next directional move. The resistance wall now is 25,600 to 25,700. Massive call writing at 25,600 makes this a ceiling. A move above 25,700 is required to spark a short covering rally. The support floor now at 25,300 to 25,400. If the Nifty slips below this 25,300 mark, expect a quick tumble towards 25,150. For the Bank Nifty, it's showing more resilience than the Nifty, holding above key moving averages. Key levels at 61,000. The support is at 60,500 and resistance at 61,500. So those are some of the levels that you should perhaps look at today. But Puneet joining in for the FNO setup.
Well, thank you for that. Largely, if you're getting space specific, even in the Nifty 50, you're only seeing moves on the metal pack. The value picks in auto space, you saw Hero being a key mover yesterday, and largely a couple of names that continue to be in favor as PSUs, but not seeing with rigor. So there seems to be a lot of consolidation even in the winners for now, is what we're seeing for the Nifty 50 now, down to almost 25,450 odd levels, and that has been a key support. So you should expect to go up from here in the near term, but seems to be a lack of triggers for winners, especially at this point of time. While IT has seen some pullback from the lows, today will be an important trading session. Yesterday was just a blip, so continue to monitor that. While in terms of the banking index, steady state at 61,000 odd levels. The PSU banks are holding up to the moves that we've seen, and occasionally we do see some build-up of shorts on a day-to-day basis on certain names. Yesterday it was in SBI and Indian Bank. So continue to monitor this, while the larger cash inflow that we've seen yesterday in the cash market, almost 3,000 crores for foreign investors, 5,100 for the domestic investors, was a strong day for inflows. while the index long has now stabilized at around 21 to 22%. Now, to remember, we went to 29% just this week itself. So post the expiry, we seem to have consolidated at the 21 to 22% mark, and this will be important for the next leg of rally that we see for the Nifty as well as for the broader markets as well. Put call ratio largely maintained the 1.15 yet again. So the put inching to the calls at this point of time, but largely continue to be maintained at these levels. While in terms of the open interest distribution, and we've been missing this chart for a while now. So in terms of 25,600 continues to be a level where calls seem to have been consolidating, and so has 25,700. But look at the candlestick on 26,000. It's a out of money option that investors are still banking on. While in terms of puts, also the middle level of 25,500 and 600 continues to be one key one that we continue to monitor. Finally, in terms of stocks, Vari Energies, of course, features on this list, and so does Premio on the build-up of shorts. IRFC will be a very interesting play today yet again. And in terms of the open interest losers as well, not too much rigor in the open interest change, but continue to monitor the tech space yet again with the PSU basket as well. But continue to monitor all of that and a lot more in today's trading session.
Okay, let's monitor some stocks as well. Thank you for that, Puneet. All right, first on my watch list is KSB. A strong set of numbers for the quarter. Revenue was about 8% up at 784 crores. EBITDA has grown nearly 32% at 130 crores. But the margins is what stands out, with a 300 basis point pop from 13.5% to 16.5%. Net profit was also up about 10.8%. This and Sanofi, both strong set of numbers, but we'll talk about Sanofi in a bit as well. We were talking in detail about some of these solar module exporting companies, and MV Photovoltaic has come out and put out a clarification. It stated that it is insulated from US solar import duties as its manufacturing is aligned more with domestic demand. Now, while you have had a lot of clarifications coming in from all of the companies, most of the others were very export facing. For example, Vari is talking about where it gets its cells from. MV is saying that our manufacturing is more aligned with domestic demand. So let's wait and see how it performs today. Poonawalla FinCorp is the other one. Initiation note from UBS. They've initiated a buy with a target price of 640 rupees. They say it's a solid franchise in the making. Strong management and promoter-driven AAA credit ratings are key positives. LAP and gold loans to be anchor products. ROA to reach 2%, that's return on assets, to reach 2% by FY28 estimate, supported by margins and costs. Wonder if we can pull up the one-year chart for Poonawalla FinCorp, because this, after a long time, is a very positive view on that company as well. 1 year has actually not done too badly. About a lot of changes that the management also made. There was a management change, and now perhaps UBS finding it more positive than before.
Interesting stocks. I've got Satvik, Green Energy, and a few of these stocks have been reacting to order wins, and this could be one of them. It's not the largest order, bear that in mind. Just about 87 crore rupees from an EPC company, once again from the perspective of the renewable play, and this is to supply solar photovoltaic modules. Orders set to be executed by March 2026, which is in this quarter itself. The second and third are both brokerage notes. The first one is on SBI. This is CLSA. They've got an interesting line, who says elephants can't dance? And the target price is 1,275. Not too much of an upside, but what they're saying about the bank is actually quite interesting. They say that it's a good performance on growth and profitability. It's a core portfolio stock, and they've de-risked the balance sheet while also going faster than the industry, which is something that was spoken about. We've spoken about it, the fact that their loan growth has picked up and has been revised twice over the course of the last couple of quarters. They're seeing a pickup in CASA growth. This is current account, savings account, very important from the perspective of bank because it's low cost deposits, and this is one of the big strengths of State Bank of India. This growth after a period of 3 years of muted performance in that pocket, and several other factors are also playing in favor of State Bank of India. The last point is HSBC on Indian tractors, and this is on the back of an outlook for weak monsoons. Of course, bear in mind that we're still early in the year, and we don't know how this will pan out, but there is an expectation of an El Nino effect this year. This could affect reservoir levels and thereby affect what has been a pretty decent performance for tractors in some pockets. The long-term penetration, according to HSBC, remains attractive, but the regional reservoir levels are slightly negative for Mahindra and Mahindra. They have maintained a buy on Mahindra but cut its target price to 4,150. They've maintained their buy on Escorts as well and cut their target price here to 3,600 rupees. It remains to be seen though. Mahindra and Mahindra, it's interesting because when tractors underperform, they will have an automotive segment that tends to perform, and so they've got that covered.
Yeah, but I mean, tractors, the forecast is that if the monsoon does well, then they might be in a good shape as well.
Sure.
So it could be interesting. But yeah, costs and margins could be a very interesting factor for the next few months for some of these auto companies. Okay, very quickly, United Spirits is in focus. Diageo fell 13%. The natural corollary would be, oh, will United Spirits see some action? Maybe it could. Who knows? But in the con call, the United Spirits management, or the Diageo management, excuse me, noted strong performance in India within its Asia Pacific portfolio. They highlighted double-digit growth and momentum in United Spirits, driven by prestige and above portfolio and brands such as Black and White, Signature, Royal Challenge. Also flagged reopening of the operations in Andhra Pradesh. Imagine in a global call, they're talking about one state in India and the reopening thereof being so important for them. In fact, the CFO confirmed that USL, which is Diageo India, is conducting a strategic review of its Royal Challengers Bangalore. That's actually RCB's Bangalore. So Royal Challengers Bangalore stake as well. So all of that came into conversation on the global call. Just highlights how important the Indian ops are for Diageo, really. Watch out. So because Diageo had corrected 13%, maybe the stock sees some correction, but the commentary about United Spirits especially in the con call was positive. So be mindful of that. It will be a fake downtake if it does happen. Aditya Infotech was interesting because promoters as well as Dixon Tech, which had I think above 6% stake, offloaded some of the stake, but the nature of the buyers and the names of the buyers is interesting. Yes, a clutch of very interesting mutual funds domestically bought in, but what also was there was ADIA, Abu Dhabi Investment Authority, as well as Kedara Capital and others were some of the key buyers. So the names of the buyers might just enthuse the street. Keep an eye out for that. Shelley Engineering Plastics is the last one on my list. Received an order worth 423 crores from a domestic pharma company. Just to put it into perspective, the whole of FY25 revenues were 787 crores. They've bagged a single order, which is half the size of the annual revenues of FY25.
Delivery?
So a large one. The details were not there, but be that as it may, just that the order book filling up in such large fashion may just excite the stock today.
I think it will. I think Shelley might just end up being one of the stocks of the morning.
No, they pulled up the delivery chart. I was talking about the delivery of this order. so no, there's no connection
between producers who are listening to every word you say, Alex.
Yeah, there's no connection between what Neeraj was talking about and the logistics company delivery.
Yeah, in terms of how will they deliver or what is the timeline in which they will deliver. The fact that they're seeing fit to have such a large order, I think, is what is being highlighted. Yes Bank, just want to quickly highlight the story very quickly. What Yes Bank has said on its prepaid Forex cards, they've said fraudulent transactions have been seen on LATAM merchants. They saw unusual increase in transaction decline, unusual increase in Forex card transactions decline. So that's the transaction decline notice that you get. They've seen an unusual increase in that. They have hence come out and implemented safeguards for prepaid Forex cards. So this is just going to become a really big thing. I know IDFC First is just about recovering, and there is a note today on IDFC First kind of like downgrading the stock as well, because at the end of the day they paid it up very quickly, but a couple of things don't fit. Why did they pay? Is that the bank saying that it was our employees' problem? When will they recover it? Is there going to be then a reversal of what the state government has said, that they will de-impanel them? How does it all pan out? How could this have happened in the first place? So I think some of those questions are still there. So Yes Bank is well in focus.
Yeah, and you know, the interesting thing, what is coming up in Yes Bank conversations these days because of the MUFG transaction, the Japanese culture coming into Yes Bank, if they indeed fold a lot of their current ops into the listed entity Yes Bank, then it's a very interesting play in the making. When it happens is anybody's guess. But if MUFG does do all of that and brings the Japanese culture into Indian lending, it could be a force to reckon with.
Yeah.
I just so many have tried to come and culturally change
this
how,
diamond.
This diamond.
How business takes place here. Okay, very short break. We're talking about more stocks on the other side. We're giving you the top trading ideas. Don't go away.
Some moments in life are lifelong. Some memories are lifelong. Blessings are meant to be lifelong. Trust is also placed lifelong.
Heart lifelong, love lifelong, bond lifelong, memories lifelong.
True love is lifelong, isn't it?
Love lifelong, bond lifelong.
We respect our loved ones lifelong too, don't we? Some relationships stay shining lifelong. Just like Tata Power Solar Roof. Best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice.
The latest trends. It's a lot.
Welcome back. Let's take a look at the implied open and some positive opening at start. Whether it sustains or not is what we will have to wait and see, and whether you have a real mood shift. Some specific stocks might get a boost because of earnings trickling in still, and one that comes to mind is Sanofi. Mahima joining in with what seems like blockbuster numbers for Sanofi. Mahima?
Yes, Tamanna, absolutely. So for Sanofi Consumer, this is the second consecutive quarter where their overall top line has grown over 40%. So good growth coming in for sure in terms of all four numbers. Sustained growth momentum has been the case across their business segments. Overall domestic sales saw growth of around 23% and export sales saw growth of around 9 times. Of course, this was on the back of a lower base as well. In terms of numbers, revenue saw an uptick of 47%, EBITDA an uptick of 44%. EBITDA margins at 35.8% versus that of 36.5%. Slight downtick in terms of margins because of higher raw material cost, but net profit saw a growth of around 50%. But overall, in terms of the growth that's coming in bottom line. The stock in trade was reduced by around 67 odd %. Depreciation was reduced almost by 2 times, and other expenses also did a significant reduction of around 47%. So that's overall the reason as to why the bottom line is boosted as well. So this is the overall view as to how Q3 has panned out for Sanofi Consumer.
So Sanofi Consumer in mind as well. So a couple of good results might lift that mood. You will have to wait and see what happens with your solar module exporters. But let's get in. Parag and Kush this morning. Welcome as always. And let's hope for a better day. Kush, any signs of some improvement over there?
पहले तो आपकी सारी टीम्स को काम पे लगाओ, कुछ ट्रिगर लाओ, डोमेस्टिक, इंटरनेशनल, ट्रम्प को बोलो कुछ बोले. दिस मार्केट नीड्स ट्रिगर्स.
नहीं ट्रम्प को किसी को बोलने की जरूरत नहीं है. I know. I think be careful what you wish for, Kush.
On that front, I agree. But कुछ ट्रिगर लाओ. This market needs triggers badly. It's consolidating to a point.
I would argue this market has enough triggers. It needs to start reacting to some of them.
Not for the last couple of days at least. And in that instant gratification, dopamine deprived market लग रहा है फिलहाल हम लोगों को कि है तो सही, बट इतने बड़े नहीं है कि मार्केट कहीं भी ब्रेक करे. अगर आप निफ्टी पे देखो 25,300, 25,400 has been acting as a support, that's been respected, लेकिन ऊपर नहीं जा रहा है. So that's what's happening. There are buying indications at lower levels, but at the top you've seen that selling pressure also. So what's happened is that on Nifty you've seen the resistance bands shift lower. 25,800 I've been talking about consistently as that resistance band, the first one that needs to be broken. That's now actually shifted lower to 25,600. I think Tamanna, you also mentioned that there is heavy call writing at 25,600. True. So that the resistance band has shifted lower. FII buying yesterday, FII DI, in fact, if you combine, the net buying in the cash segment was to the tune of 8,000 crores, right? Of course, there was an impact of, a lot of block deals, but this doesn't feel like an 8,000 crore kind of, a net cash buy figure in the market. Still, saving grace, FIIs have been buyers in the cash segment and in the FNO segment as well. So we'll take heart from that. Also, as I said, the supports are being respected. Consolidation with a negative bias, momentum indicators flat to negative. But I think again, the index to talk about is Bank Nifty. If Nifty is consolidating with a negative bias, Bank Nifty is consolidating with a positive bias. Don't go by the closings yesterday. I'm talking about the movement since February 4th, once that trade deal announcement was done. Since then, here too, we've seen some consolidation. In fact, I must thank Neeraj for bringing this up, that we did mention that PSU banks could see some sort of profit booking, in particular SBI, and that's been down about 3% from Tuesday's high. I think some more correction is underway, because if you see the volumes over the last 2 days, especially yesterday, have been on the higher side. So I'd be comfortable buying SBI close to the 1150, 1140 mark. But let's see if the markets actually give us that level. All in all, in a nutshell, indices are something that you want to avoid right now from a very near-term perspective. Stock-specific action is a plenty. So this consolidation could continue until we get fresh triggers for the market. So focus more on stock-specific action. Long positions, if you have on Nifty, if you have on Bank Nifty, with key support levels as your stop losses, you could continue to hold.
The other part of what is in that nutshell, what are the stocks that you're looking at?
Quite a few of them. In fact, I've been including more updates these days because the markets have been giving you those opportunities, and those stocks have been doing well. Just to name a few, Bank of India, Torrent Pharma, Torrent Power, these are some of the stocks that we've discussed on the channel about anywhere from week to 15 days ago, and they've been doing phenomenally well. So you could continue to hold these or book profit and rotate into what? These three: RR Kabel, Ajanta Pharma, and Bank of Maharashtra, something that we discussed yesterday. I'll take some time on Bank of Maharashtra, but first levels on RR Kabel and Ajanta Pharma. 1545 and 1580, these are your targets. 1475, that's your stop loss. Ajanta Pharma, 3050, that was the first target that we discussed, very close to that. So now you can buy or hold for 3130, but bump up your stop loss to 2965. Now, Bank of Maharashtra features again in the list because yesterday we discussed it with the second target of 75, very close to that. But above the 7350, 74 mark, there is a long-term rounding formation breakout that comes about. So I would not suggest that you book profits in Bank of Maharashtra, maybe at lower levels, because we've been discussing this since 69 odd levels, right? So maybe partial profit booking, but you want to continue to holding on to Bank of Maharashtra for levels of 78 and 82 now, and keep your stop losses at the 70 mark.
Sometimes inactivity is a trait which is not given enough regard, and it's great to actually have not too many triggers and for the markets to stay played and people not doing anything. Inactivity, as Buffett says, right? Inactivity is a great trade. Don't do anything for 3 months. It doesn't matter because you don't have to try and face the music every single day. But yes, of course, is it good to see the markets going higher every single day? Yes, it is. So I can almost fault all of us for wanting that action every single day, Kush. But you are right, it's not happening. But since that is not happening, would it be prudent to limit the bet sizes right now, even on things that you have a table thumping buy on?
So basically, it is going to be a stock specific market for sure.
Agreed.
We are not in a runaway rally kind of scenario because for that many things have to fall in place. So it's a stock specific market, sector specific market. So we have to be, for example, we have been discussing FMCG. Now I have zeroed it down to affordable housing as a good space, affordable housing finance, which is a good space, 100% secured loan. Very good names, very good ROAs and very reasonable valuations. If you see Aadhar housing kind of stocks or say Home First where there is a block deal today, 2.2 times FY28 price to book, ROA of about 4%, growth rate of 17-18%, PE of 13-14% on PE of 13x on FY28 earnings. So I would say that, and you are lending to a person who is not going to default. The credit cost is hardly anything, 25 bips. 10 lakh rupee ticket size, good margins, 5.7% NIMs and 4% ROAs. So I think these are the businesses. So day by day, every day you have to study new sector and you have to.
So is this a new sector you are spotting as at the start of a potential upcycle?
Absolutely, yeah. Okay. And plus there were some worries, for example, due to tariff or due to due to this trade war thing, jewelry, textile, all these sectors were likely to suffer. So all these companies were seeing some build up in gross NPAs in first 9 months. But my channel check suggests that now that in March quarter, everything has eased out. And the cost of funds has also been coming down for them because repo rates are cut by 125 bps. So from everywhere there is a tailwind. There is improvement in asset quality, there is reduction in cost of funds, and as usual there is good growth and disbursement growth is now picking up. So it's a beginning of a good cycle for them.
And topics over there?
Aadhar housing for sure.
Okay, Aadhar housing is the topic. Okay.
Affordable housing, there was a call just before the budget to adjust the definition of affordable housing because there are SOPs that are received there, but that didn't take place. I wonder if that will take place at some point in the near future. But let's talk about the stocks on the watch list today. We've already spoken about a few. KSB on the back of earnings, pretty solid set of numbers. You should watch out for that. Zinc on the back of the return of silver to that $90 mark. Certainly something that you should watch for, apart from the rest of the metal pack, which has been buzzing for the last couple of sessions. Network Technologies and a couple of others actually. One in particular, you have E2E Networks, generally reacts on the back of a good performance by NVIDIA because of the expectation of what pans out after that. Shelly Engineering, key order win. There's another one that I pointed out to you as well. Satvik Green Energy, not the biggest order, but keep an eye on that stock. MV Photovoltaic has come out with a clarification, as have a few others, about the impact of that 126% tariff on PV modules by the US. And they've said that they're more or less insulated because of their domestic focus. Zydus Life, they've got a launch of semaglutide. We spoke about this yesterday. It's getting pretty crowded in that space. RBL Bank, the RBI has given approval for SBI Mutual Fund, not NF, Mutual Fund, to increase its stake to 9.99%. This is pretty standard stuff. Aditya Infotech, there's a block deal here, and that includes ADIA as well as Kedara Capital. NCC, MH Seamless, you're seeing evidence of a promoter buying. Home First Finance, there's a block deal likely, so could be some pressure on the supply side. RFC, it's a negative because the green shoe option has not been exercised by the government in its offer for sale, which was done yesterday. Lupin, the GST department, has initiated a search operation at one of its facilities. So quite a few stocks that you should keep on your list, but not necessarily as much as we've seen in the recent past. You know what? I want to go to Kush this time on the metal pack, because often we've asked you about this and you've said, look, be careful, be mindful, but these stocks just keep running higher. Kush, what do you do at this stage?
Same thing, you buy on dips. The only thing is, like I've mentioned so many times in the past, the dips could be sharp, and that's what's happened, especially if you consider Hindustan Zinc, which was on your list, Alex. There has been a very sharp dip. The volumes had dried down on the way down, up until a few sessions ago, and now you're seeing the stock recover gradually with that volume surge also. Again, the volumes aren't extraordinary just yet, but they're just picking up on the way up. So I would be very constructive. But if we take a moment away from hinging, the likes of Tata Steel, JSW Steel, Jindal Steel, these are stocks that have been doing well. The corrections also haven't really been as meaningful. So if you want to buy something that is relatively less volatile in a volatile metal pack, I think Tata Steel and JSW Steel are something that you should keep on your radar.
Okay, let's get to that segment we're all waiting for, and of course Samit back fresh from his break, joining in with what he's heard on the street. What's all the chatter this morning, Samit?
Well, not much that I'm hearing right now when it comes to the chatter on the street. But firstly, what I'm picking up, one thing that I'm picking up is on Bandhan Bank. The bank met a lot of investors, and the commentary that is coming in from over the commentary that the bank had given to investors was quite positive. So that is one stock that we need to watch out for. Apart from that, IT stocks is one thing where we could see buyers that could come in going forward. So a couple of counters that we need to watch out for is, on the IT side is Infosys, because the ADR was also up around 3% and Wipro ADR was also up around 3% in trade. So IT is one thing, and the second one would be Bandhan Bank, as positive commentaries has come in to multiple institutional investors. So there could be some buying action there as well.
All right, so an impromptu heard on the street from Samit. Thank you for that. But also want to talk about why gold financiers are in focus this morning.
Right. When it comes to Macquarie, they are saying that gold loans are the new personal loans, and they're seeing a rapid growth on the gold loan front, and they're expecting RBI to be more watchful regarding the faster growth that we are seeing when it comes to gold loan. And they say that if such kind of fast growth continues on the gold loan front, then there could be fresh round of restrictions that could come in from the RBI side. Along with this, Macquarie also says that gold prices is something that we need to be watchful, and if there is a sharp correction in the gold prices, so that could impact growth and recovery potentials as well going forward. The second one is from Jefferies, and they say that the momentum has been quite healthy when it comes to gold loan growth, and given the fact that the momentum is quite strong, the competitive landscape is also evolving. Competition is rising with new entrants coming in and new branches that have been added by multiple NBFCs and existing gold financiers. They're also saying that the proposed ease of regulatory norms would lead to more such branch additions, and NBFCs could go ahead and defend their market share as well, specifically when it comes to gold lending. They're saying that gold prices are up nearly 17% on a YTD basis, and this along with the loan to value ratio acts as a buffer and can support healthy growth going forward. And when it comes to stock specific action, they are quite bullish on Muthoot Finance given the sharp correction that we have seen currently. They believe that the risk reward is quite attractive, specifically for Muthoot Finance.
Got it. Okay. Thanks so much, Samit, for that. Parag bhai, you consistently maintained that you don't like the gold financiers. And it's primarily a valuation issue for you. And you actually like some of these models. You like the way that business is done, but you don't like the valuations. You want to comment on the possibility of more regulations in the space that curtail the frenetic pace of growth that they've seen?
It might come. And I remember I was negative at around 4,000 when the results came and they showed 100% growth in profit. Yeah. At that time I was negative because I feel that the tonnage was not increasing. It is just the value of the gold kept as a pledge with them that has increased. So the loan to value increases, and so your loan book growth expands. So everything, generally I don't like the sector or stocks where everything is looking very good. Okay, I like the stocks and companies where something is bad. So you get a better price. So this is one of that. As I said on that day also, Muthoot is a great company. They are doing very well. They have revised the guidance also upwards. So in near term momentum, I would not be buying personally or in my fund, but at this price it doesn't it look very risky to buy this. But from RBI side, definitely regulations can come, because this space is growing at a very fast pace. In lending, if you grow at a very fast pace, it is always going to cause accident. That's why I like these affordable housing finance companies where you have a home or a property of a very small person as a mortgage, and you are growing at only 20% only.
No, but Parag bhai, the argument around valuation and the tonnage notwithstanding, it's not that gold finance companies have come off, because the growth over the last 6, 7, 8 years has been pretty strong, right? It's been stable growth for a Muthoot.
Yeah, stable growth, but I would say that after the gold price has seen a big spike from $1,800 to $4,000, that is the time that actually the AUM growth has happened.
Yeah, because LTVs have also gone up, loan to values have gone up.
Yeah,
so even
correct.
if they maintain at 60% or 57% or 55%,
correct,
you're talking about a doubling of gold prices over the last 1 year. So they're lending significantly.
And generally what happens is when business do so well, now it attracts a lot of competition also. So there will be a lot of competition in this space now.
So more players will come in. I think the big factor to watch out for, I agree with you, is what the regulator now does. This there won't be too much of a tolerance to this one bucket of
and of course Muthoot will be complying with all the regulatory requirements. That is for sure.
So then biggest, safest bet is
Yeah, because I'm just looking at the numbers, right? FY19, they did a revenue of I'm just using one yardstick revenue, right? 7,600 crores of top line. Went up to 11,500 in FY21, went up to 15,000 FY24, and now in that spurt has gone up to 27,000 trailing 12 months. But the spurt gave a big spurt, but it's not that they haven't grown in the preceding years as well. So they're a stable growth.
The recent growth is mainly driven by gold prices.
So that's high cholesterol growth, but there is still growth coming in. On charts, Kush?
Manappuram, I would avoid. Muthoot actually looks very well. It made a double top formation, gave you that breakdown, but the support has come at the 78.6% retracement level. So with that low of 33.50, I would consider a positional long on Muthoot for targets of about 36.40 and 37.60. So this is a good recovery underway. Volumes are still thin. Markets are still, trying to understand whether there will be a big breakout. But definitely seems like a bottom formation is in place. So 33.50, that's your stop loss.
Okay, so that's some deep dive on gold financiers. But let's talk about United Spirits for a bit. It's in focus after its parent company Diageo lowered its 2026 sales and profit outlook. What are the details, Mahima?
Right, Tamanna. So the parent company, of course, of United Spirits, that is Diageo, has fell in fact yesterday 13% in trade, and this is because the company has lowered its 2026 sales as well as profit outlook. It's now expecting organic sales to be 2 to 3% lower and operating profit to be flat. The company reported that weaker demand from North America and China has affected the earnings. However, the management did note that India's performance has remained strong, and this is largely backed by the premiumization wave, the growth coming in from the prestige and above category, and this is despite of the higher base that it saw last year as well. The management also highlighted that the resuming of operations in Andhra Pradesh is going to augur growth for the India business going forward, and the commentary from CFO Nick Yangyani also confirmed the consideration of stake sale in RCB. So this is the development coming in, and United Spirits will be in focus on back of this.
It ended about 0.6% lower. There's another stock, of course, that we spoke about, Mahima, this morning, and that's IRFC. And this is on the back of its offer for sale, which the government is not utilized the green shoe option for. What is the update here?
Right, so the idea was that the announcement that came in earlier was that there's going to be 2% offer for sale and 2% green shoe option. So overall an offer for sale for around 4%. But since the since the offer for sale got undersubscribed yesterday, the green shoe option of 2% is not going to be subscribed. So the total offer for sale is now going to be around 2%. So overall, the size of shares available for offer for sale is going to be around 26.1 crore, and for retail investors, it opens today. So around 3.7 odd crores opens for retail investors today. In other news also, just to give viewers update, the company has signed a loan agreement with consortium of SMBC as well as MUFG, and the loan agreement is to raise around $400 million. So this is the overall update coming in with regards to where IRFC stands for a second in a row.
Got it. Okay. Thanks so much, Mahima, for both those updates. Specifically on IRFC, we spoke about this yesterday, Parag Bhai, and you said that you would not want to buy at this stage. The stock is down now 4.5%, pretty much where that price was, right? So therefore, do you change your mind at this stage?
No. So basically, and as Mahima said, right, that they wanted to actually sell 4%, but the appetite is lesser.
Yeah.
So I would say that I would just request government just to pay attention to market momentum also. Right now, market wants metal stocks. Give them metal stocks.
That's a good point.
Yeah,
you can't argue against
right
that.
now, market wants metal stocks. Why you are giving IRFC? You should give metal stocks to market. Hindustan Copper sell 5%, or market will want 15%.
Exactly. How would you look at Hinzink today? Again, silver prices
So
are...
everything is up. So no brainer. Stock will go up. So government should sell. I keep my view.
Yeah, but you know,
sell in this rally.
The promoter is selling. Promoter is selling.
Yeah.
I think the government sell.
Yeah. No, but for investors right now who are sitting on the stock, it's a hold.
Yeah, it will give you very good dividends. But ultimately, you have to remember in commodity cycle, when the cycle will turn, nobody will know. Nobody will know. And especially when you are at a euphoric cycle, nobody will know. So you have to keep selling on every rise. That is the way.
You know, but I haven't verified this, so people should do their own checks. But yesterday there was a lot of talk around the disruptions in Mexico and the importance of Mexico in the whole silver supply chain. And if that disruption comes in and therefore production of silver gets disrupted from Mexico, what it could do to silver prices. So I think that's an important variable that people who want to trade silver on the long side or the short side might consider or should consider.
Let's come back to our favorite topic every morning, which is IT stocks, only because of what we saw happening with NVIDIA. In fact, I would extend that. Let's look at E2E. Because NVIDIA is also talking about its data center play, right? And E2E and Anantraj, some of those players also could be in focus today, and already there was a bump up. But you know, did you look at some of those numbers, Parag Bhai, NVIDIA and the kind of I think it's silenced critics more than anything else.
So basically, for near term, though, it looks like they are on a strong footing. Even the next quarter's guidance, which they have given $78 billion revenue, I think was above what most of the consensus estimates. And margins were also good. So right now, everything is looking good. Let's see how it sustains.
But specifically on the data center play, Parag Bhai?
So basically, we have always liked Anantraj at a price. That has been our thing. Of course, E2E, because L&T has taken stake in that company, that is also under our radar. So we are looking, we want to buy it on a dip.
And to extend that, if you're talking about the requirement for cooling stations for energy, how would you play those if you're talking about data centers?
So basically, see, as we spoke, you know, LG Equipment is our large holding, 7% of our PMS holding. And today, incidentally, there is an investor day from that company after many years. So those kind of companies, of course, Cummins and all those will do well if this sustains. But I think the stock price is also reflecting, in many cases, stock price is reflecting that kind of a narrative. I would say, like Cummins has continuously rallied, right? From the day this data center things have, discussions have started.
So you like Anantraj at a price. Is this the price at which you like Anantraj?
Yeah, I would start accumulating,
You would start accumulating Anantraj. Okay. Anantraj is the stock, and Parag Thakkar believes that it's a stock worth accumulating.
Of course, with a disclosure.
All disclaimers, Parag.
All disclaimer. Please.
But Kush Bora, on the charts, the likes of Anantraj, Cummins and some of the others, how do they look?
Cummins has been a call, has done phenomenally well, will continue to do well, but right now you want to book profits and perhaps buy it at lower levels. My concern is with something like an E2E, Anantraj, the story is there, right? But वो प्राइस में नहीं दिख रहा है क्योंकि आप देखो हायर लेवल्स पे सेलिंग आ रही है सो मे बी इट्स अ वेरी लॉन्ग टर्म काइंड ऑफ अ स्टोरी यू वांट टू accumulate gradually but momentum is not something that I would play for when it comes to Anantraj and E2E. Cummins, fabulous momentum, now reaching overheated territories. Like I said, book profits and again buy on declines.
Okay, so Cummins, book profits, stay away from the other two.
Yeah.
All right, let's put the focus on the commercial vehicle space. A lot of analysis this morning on India Market Open. We try and give you as much information as you need to prepare for the morning. So commercial vehicle stocks have surged around 40% since mid-November, raising questions on stretched valuations. Brokers like HSBC, Nomura, Ambit still see value backing names such as Tata Motors CV with buy ratings and higher targets as demand and the CV upcycle gain traction. But can it sustain? Puneet joining in with a special report.
Well, thank you for that. Definitely been a stellar run for all the CV company names. We're focusing on the top two ones. So Tata Motors and Ashok Leyland feature on our list today, largely because of what's happening in the MHCV space. So the outlook does suggest that a lot more could be coming now going forward. Now we've taken the returns from 12th of November when Tata Motors CV actually demerged and listed as an independent entity. So almost a 56% return just since November 12th. For Ashok Leyland also it has caught up, and very interestingly, if you see, for the Nifty Auto, it's just up about 3.5%. So it's been a one-way move for a couple of these players. You also see what led to this outperformance was the GST rate cut benefits, because a lot of buyers, especially in the light commercial vehicle space, the smaller trucks, were on the sidelines. They seem to have come back now, at least in this way. So the MHCV side of things is still not in the price because we've not seen that happen yet. Now, when you look at the Q3 numbers, up 24% for Ashok Leyland, a 20% growth for Tata Motors as well. So, at a time which is not usually a strong quarter for the CV makers, they did report this growth led by the GST rate cuts as well, and the momentum seems to be continuing for now. When you also look at what could have led to this rally and what's going to happen in near future as well, there are 4 key reasons we are pointing out. One is the average age of the truck. Essentially, it's been 10.5 years since someone might have purchased a truck in the fleet operator space versus the normal of 7 to 7.5 years. So you have the replacement cycle for the fleet operators that's still not started yet to replace these age-old trucks. The other aspect that Ashok Leyland's management on call, Mr. Shinu Agarwal, and also speaks regularly to NDTV Profit, spoke that even to come back to the 8-year mark for the average fleet or the average age of the fleet would take some few years to come even from these levels. So you could see that momentum continuing going forward as well. In terms of the other key aspect, the onset of quick commerce has been one of the biggest factors for the light commercial vehicle industry to boom, and all these players feature in that as well. The third key reason that exports are only 7% of the light commercial vehicle or the smaller trucks. So this momentum is more medium term than near term. And the final reason that the other avenues up like buses is still yet to show growth for the truck makers. Finally, in terms of Nomura, and a very interesting note, because they feel we are still in the early stages of the CV cycle. Now, it's generally a 6-year cycle. They feel we are still very early into that because volumes are yet to peak from the FY19 levels. Also, 2 key points. They expect an 18% EPS CAGR between FY26 and 28 for Ashok Leyland, and over 11 to 12% over the consensus for Tata Motors. Finally, the other analysts, what they feel is that, benign commodity prices and lower discounts are some of the key positive factors. And for Ashok Leyland, 61% buy calls. For Tata Motors CV is almost 87%, and valuations still at 11 to 13% EV EBITDA, which has been the historical trend. So that's the picture on the CV side. A lot more to watch out for.
So what is the conclusion? Can the rally continue or not?
Well, the conclusion is that the rally could continue. The conclusion also that the valuations are still not stretched because we've seen the bigger trucks yet to come in at this point of time.
Okay, thank you for that, Puneet. Do you concur with that analysis, Parag?
So basically, I was always saying Tata Motors CV. From 400, I think we have spoken, and luckily it is now 480. So I have booked my profits. Because I made 20% on that narrative that CV cycle is going to play out well.
Is it just a narrative, Parag bhai?
No, it will play out. But who knows, after 3 months, 6 months, some disruption can happen. Right now, everything is getting disrupted. And you cannot form a very long-term view on anything right now. So that's why I have booked my profits, because it gave me very good alpha. But I think I can, but I think the CV story is here to say Tata Motors CV is doing very well. So it is a buy on dip for me.
Are you booking your losses in IT, Parag bhai?
So in one of the cases we have booked.
You have?
Yes. In one of the cases we have booked.
I was just trying to think because I see you fairly nimble in your portfolio.
Absolutely.
On fundamental bets as well. So because it's a lesson. Not too many people can actually somehow, I'm not talking about him, but not too many people can book losses. Or profits 5% में book कर लेंगे, लेकिन losses can write 10, 15, 20, 25%.
And it's very tough. It's very tough.
So, but just out of curiosity, while we're on the subject of this, there'll be some people who would have decided to buy on dips on IT, right? What was the cause for your decision to?
No. So I just thought that right now
losses.
it is very dangerous to be in mid caps and small cap IT. So large cap IT I am still holding. Infosys, TCS, Tech Mahindra, those I am still holding. So I just decided that right now it becomes very, and that too when we are hearing that this mid cap guys are going to acquire large companies, then the stock might just not do well for next 2-3 years because they might have to integrate all that. So large cap IT I am still holding. But the weight wise I have reduced because of I have booked, as Neeraj said, some loss in some mid cap stocks.
Okay, so be nimble, I think is the large message of the day.
Yeah, you cannot go right every day. You have to accept it.
Make your own informed decision.
Absolutely, yeah.
And then be nimble when it doesn't work. Sometimes it doesn't work, that's also okay. What sectors are we watching this morning? Pre-open rates are in. Let's pull up Hindustan Zinc. Silver is at a 1-month high near $90. And there's some reports, as Neeraj just said, of Mexico and what's happening there, maybe choking supplies further. Nothing much with Hindustan Zinc at this point. Home First Finance, we're looking at the housing finance pack this morning as well. Home First, a block deal likely. You're going to see some pressure there as that block deal passes through. And that's what we're seeing maybe. I would look at ONGC, Oil India, OMC, and look at what's happening in light of US-Iran talks scheduled today. Although the amount of crude that the US is holding and the latest reports that have come in 16,000 million barrels means that it's blunting any kind of impact of what's happening between US-Iran. NetWeb Tech, E2E Networks is what we should look at after blockbuster results from NVIDIA, and you might see a bit of a spark there. IT stocks, are you seeing more short covering or more pain? HCL Tech, Tech Mahindra, Persistent. Let's look at some of those this morning as well. And no, nothing really to save them that's coming in. What's really moving though this morning, I want to see what's happening with some of the numbers that were really good. So a KSB, we talked about a KSB, blockbuster numbers there. Let's look at a Sanofi. Aadhar Housing Finance, just by the way, because we spoke about it in some detail. KSB, they're doing well, Sanofi doing well. Aadhar Housing Finance, one of Parag Thakur's calls this morning, 2.5% up. Poonawalla FinCorp, we spoke about a USB note on it, and initiation actually from USB on Poonawalla FinCorp is looking interesting. And Vari Energies, let's look at whether Vari, Premier and MV Photovoltaic is seeing some improvement. Well, we're only halfway through the pre-open session, so we'll have to wait for these to settle, but these could see a spark as well. But let's go across to Sharad Dubey now, joining with the big brokerage call of the morning. Sharad?
Well, yes, you see the major consensus in the street is coming to the life insurance stocks, and a little bit of stability is something which the street is looking out for, especially in the BFSI space. And Antique has initiated a buy rating on Canara HSBC Life with a target price set at 190 rupees per share. Now they're playing on the banker-led growth, and the bank insurance will be driving the industry forward going ahead in the near-term basis. Also, the product mix, that they have been bullish on that, and they expect it to improve in the favor of protection and annuities. Remember, these are recurring income, and also on the higher margin side, the VNB, the value of new business margins, which we call, will improve despite the investments coming in the agency channel. And also an important ratio to track in the insurance sector is the persistency ratio. That is also improving going ahead, and the solvency ratios, they still remain strong. So that's what the views coming in on Antique by initiating a buy rating on Canara HSBC Life.
Thanks so much, Sharad, for that. Shrikant Chauhan, Executive Vice President and Head Equity Research at Kotak Securities, joining us this morning. Shrikant, as always, thanks so much for taking the time, and good morning to you. Do you anticipate that the index level move is something that is going to be hard to call at this moment? And do you think that directionally we're heading upwards, or do you see the possibility of continued selling on every rise?
Good morning, Alex. Good morning, Tamanna, Neeraj, and everyone. So, yeah, absolutely. What you're saying is right, that the market is finding difficulties to sustain at higher levels. 25,700, 25,800 acting as major resistance for the market. But at the same time, if we go through with the downside of the market, then 25,400, 25,300 acting as major support for the market. So whenever there is a dip in the market, we see some rebound. So broadly, I am of the view that the market is consolidating, and eventually we can expect upward breakout because already IT stocks have fallen to their extreme. So now we can expect some sideways sort of activity in IT. So no major dent expected in the near term, and that may stabilize the market. That's the view. Otherwise, if we go through with other macros and other things, then they are like positive. Asian markets are doing well. Eventually, I am expecting market to move towards 26,000. That's my view. And in case if there is any correction and if it holds 25,300, then like again we should look for taking some contra bets of going long. So final stop loss should be now 25,300 for holding any long position.
25,300 for holding any long position on the indices. Would that the same be true for stocks, Shrikant? And what are the stocks you're recommending today? Are you recommending any future buys or would you recommend only cash market purchases?
No, like we track broadly cash market stocks. I'm going to say cash levels we track. So based on that, I have designed this trading strategy for the day. In that specifically, we like two-wheelers, but most of them have rallied yesterday. We also like metals, and there we are expecting further more activity as most of the stocks like Tata Steel, Jindal Steel and Power, JSW Steel, they all have crossed their immediate and all-time highs, which is positive. So JSPL, I'm specifically bullish. I'm expecting stock to move towards 1310, 1315. We can keep stop loss around 1230 for the same. The other stock on which we are bullish is Axis Bank, and the way there is weakness in IT companies, now we can expect some extra buying momentum in private banks. So in that, Axis Bank looks good. There we have a target of 1450. We can keep a stop loss around 13.8 for buying at current levels.
Just take a look at some of these mid-sized banks as well. You talked about Axis. Look at J&K Bank looking quite interesting this morning. So is Vari Energies. I think Vari Energies, are you tracking on the charts, Shrikant? After yesterday's drubbing, would you say that there is scope for some recovery?
Yeah, it's on our track, but we try to give positional calls whenever there is a correction in the stock. Some few weeks back when the stock was around 2600 levels, that time we initiated a buy call because I'm of the view that now 2500, 2600 is going to act as major resistance for the stock. At the same time, at higher levels, there is resistance. So close to 3,200, 3,300, the stock is having good amount of resistance and it is still forming lower top, lower bottom series. So till the stock is not crossing 3,300 convincingly, we can expect range bound activity. But the way the company is reporting its number and the way there is a lot of activity in the sector, ideal strategy should be to look for adding long position whenever there is a deep correction in the stock. Like yesterday also the stock was down, but there was like some news flow. So it is like very difficult to act on that. But yes, in case if in the near future, if we see the stock is dropping back to the levels of 2600, there we should look for taking some long position.
Okay, just want to highlight a news report which may not have impact, I'm not sure, but SEBI has ramped up broker dealing room scrutiny, something that the Economic Times is reporting this morning. They're saying authorities are investigating trades focusing on institutional and high net worth clients. SEBI is seeking granular details on how trades are initiated, routed and executed across high value clients. Now, we don't know what the outcome will be or who is at the receiving end of this investigation, but could this be a sentiment dampener, Parag?
No, I don't think so in the immediate future, but the people who will fall into this, who will be caught into this, definitely they will be affected. And if they are larger ones and bigger ones, then there will be some impact. But as of now, immediately it doesn't look like to be.
Yeah. You want to say something, Kush?
Yeah, see, a typical dealing room for any broking house, be it Insti, be it retail, be it any, already has a lot of checks and balances and compliances in place. So this will perhaps just add a layer to that, but I don't think this is going to be sentimentally very negative, because it's not going to hit their revenues, or it's not going to hit any major operations. Some operations here or there, definitely, but I don't think this is going to have a meaningful impact. The dealing rooms are anyway highly regulated.
But I don't think it's about adding more layers to SOP. It's about
compliance.
It's about checking specific ones. And what that article at least claims is that they want to check possible front running.
And that's why this is
it's investigative. Yeah,
exactly. That's why this is a good step. So it won't really hurt the sentiment for the broking firms or the broking pieces of a lot of these financial firms. No.
By the way, it seems like the frontline IT company is going to have once again a decent start to trade. At least the initial indications are to that end. The top 4 counters on the Nifty 50. I wonder if this is going to be the case in a minute. Infi, HCL Tech, Wipro, TCS. Any last call on that?
Not on those, but you could keep your eyes on Colgate, Palmolive and Bank of Maharashtra, both of them doing rather well.
Shrikant, the last word before the start of trade. Any counters that I have mentioned or otherwise that stand out to you?
No, I think IT stocks have fallen to their extreme levels. And for next couple of days, I'm expecting range bound sort of activity in the stocks. So yes, intraday traders can get some opportunity to take some long positions. But otherwise, I'm of the view that it is better to stick to two-wheelers as well as metal stocks. And in that, we also like JSW Steel, which is currently trading around 1275. There we have a target of 1300. And with a very nominal stop loss of 1250, we should look for adding at current levels.
Emerging as a bit of a consensus today is JSW Steel. In the morning, Kush Bora had spoken about it as well. Keep an eye out. Not necessary for a day trade, by the way. Bear that in mind. But here's how the markets are starting off today. A rub of green, a little, if you will. Yes, indeed. For starters, yes. Let's see if this lasts. Banks are kind of flattish. Mid caps too, okay. The market breadth is not bad. Maybe the small cap index is doing okay. Bring that one up once before we take to the main headline movers and shakers. I mean, par for the course, about 0.25% for each of the indices. Let's get the heat map up on the screen and see what's moving and what's not. Even Stevens, no, actually a lot more red, a lot more green, very little red. IT is bouncing back. Tech Mahindra, Infosys, Wipro, guess who's smiling? Parag Thakkar. TCS up 1%, Eicher Motors up about 1%, BEL about 0.6%. So it's essentially IT led, something that Tamanna spoke about in the morning, I believe. The Nasdaq bounced back, leading the IT pack alongside. Let's see if this lasts. Adani Ports 0.5%, Trent 0.5%, Maruti 0.5%. Everything else could move between the red and the green. Reliance, though, fortunately, is 0.5% and giving that bit of a support. So IT and RIL lending that bit of a support, now about 0.3% higher. What is not doing well? Actually, not too much, frankly. Eternal had started off about 1% lower, but is right now just about 0.25% or less than that. Bajaj Finance less than 0.5%. So really nothing much in terms of losers. A few gainers. Not a bad start, you have to argue, and IT leading the way.
And if we stay like this, nothing to complain. Can't complain at all after the kind of volatility we've seen. Let's pull up Nifty contributors very quickly before we get to what's happening with the broader markets. And there you have it. It's not just the IT pack, even Reliance Industries, RIL coming in, so all the heavyweights coming in. Financials are a little weak today. ICICI Bank, Bajaj Finance and Axis also on the side, which is pulling down the markets. Let's pull up the small cap and mid cap indices. Let's look at what the broader indices are also doing this morning, and where they're landing about 0.25% up on the Nifty mid cap. 150. The small cap is also about 0.25% up. Advanced declines are looking fairly decent, I would say. The sectoral heat map should give you a clearer picture. Nifty IT is likely to lead the pack. It is definitely about 1% up. Nifty PSU Banks was also doing okay. I wonder if SBI is contributing. Possibly is. Nifty Realty flat, actually. Can't complain. And this could be with a little bit of kindness seen as a total green screen, because this is barely any kind of drop that you're seeing even on these sectors. Let's get to specific stocks this morning and see what's happening there. And we talk to you about our watch list. Every morning we give you the list of stocks that we think will move. Our hit rate has been quite good so far. Let's see if it continues. So we talked about results. and look at KSB and Sanofi. I mean, it's pretty much results season is in hindsight right now in the rear view mirror, but even then you have some winners coming in, both about 6.5% up. Poonawalla FinCorp was on our watch list because of a positive call from UBS, and that is also looking like it's about 2% up. Has Nvidia's sheen rubbed off on some of our data center plays? And admittedly we have few, but even though in E2E networks, we talked about it in the pre-open session, and as we opened the show today, E2E networks is doing well, so is NetWeb technology. We told you this at 9 a.m. this morning. IT stocks in focus, and of course we saw some of the top lines there, but even a Coforge recovering, a TechM, of course, Infosys, HCL Tech, that whole line also doing pretty well. Will solar modules recover or not after they have gone to great lengths to tell investors and mutual fund community that they're not going to get that hit? There is some recovery, I would say, that we are seeing. MV Photovoltaic, though, seeing a bit of a downtick. So overall, I would say that it's not a bad start at all, Alex.
Yeah, absolutely, Tamanna. It's a pretty decent start. Not the biggest move at the index level, but the IT index building on those early gains, now trading with gains of about 1.5%, or close to 1.4% or thereabouts. And really, it's across the board for that pack as a whole. Second day in a row. The only question is, do you see profit taking towards the second half of the session that you saw yesterday if there's a sharp up move right now? A few stocks that are not necessarily reacting to news. Tejas Network is up and about. It's close to 7% higher at this point, and one of the top gainers in the broader market, 6.5%. Hexaware Technologies, 3.75% or thereabouts. Newgen Software, Brainbees. These are stocks that are reacting pretty sharply. They're moving quite sharply at the start of trade today. Maharashtra Seamless, another one that is moving sharply, up about 3.2% or thereabouts. First Source Solutions, close to 3% higher. Techno Electric, also 3% higher. eClerx Service is 2.75% high, and these are all stocks from the broader markets that are reacting. Home First Finance is taking a bit of a battering at the start of trade today. We already told you about why that is. It's 5.6%, 5.7% lower this morning. Afcon's Infra losing about close to 2%. Vardhaman Textiles, Manappuram Finance down about 1.5% each. You have CDSL that's losing about 1.3%, but not too much in the way of big losers this morning, even from the broader market. So the question to you, Kush, and then I'll go to Srikanth on this view as well. A couple of these stocks stand out. Hexaware Technology seems to have been in the gainers list for a couple of days in a row, for a few days in a row. Is that something that you would trade on the upside? And Tejas Networks, it's now gaining about 7.4%. What's happening here?
Yeah, so I think this is more of a recovery, from those oversold levels. The stock had not done anything. Tejas Networks, in particular, I'm referring to right now. So mild consolidation, a pop here and there. Volumes marginally higher, but nothing to write home about. So I will be a little cautious, a little mindful. 360 to 375, that's the resistance band. If that is taken on, do you see any kind of meaningful recovery? Otherwise, this could just be a pop, in the middle of a long, downturn that the stock is facing. Actually similar for Hexaware as well. The stock has taken a battering for the last about 6-7 odd weeks, practically fallen off the cliff kind of a fall. You're seeing some recovery, but again this is more of a recovery play rather than any meaningful rebound. Just a quick word on the on the banking stocks, particularly the PSU pack. I think what's happened is that SBI has passed on the baton to the other boys, Bank of Baroda and Canara Bank, because yesterday if you see the PSU bank index was down, but the breadth on that was positive. That is because SBI was lower and the rest of the pack was actually doing well. Same thing is happening today. Could this be the last leg of the rally, or maybe it could just be SBI cooling off and the others taking charge? Could well be so, but right now that pack seems a little overheated. There is momentum, you could continue to play, but I would be a little cautious in terms of holding them for a very long time. I would book my profits along the way.
Okay, Srikanth Chauhan, anything that you want to add to what Kush has already said? And beyond that, I have a couple of stocks that I want to ask you about. One of them is Sirma SGS, which seems to have a pretty positive start today. Does it build on that? It's 2.1% and off the high point of the day, in fact. So does it head higher from this point? Would you initiate at levels of close to 850? And then maybe also speak to us about the PSU banking pack, where the view for quite a few people seems to be a little bit of caution is advised at this moment. Maybe take some money off the table.
Yeah, so for PSU banks, yes, I totally agree with Kush that it is means the formation is much better, and we can expect further more activity in stocks like PNB, Union Bank in the near future. But specifically, if we go through with any particular stock after opening, then we like Shriram Finance. There we are expecting further more activity. The stock has already spent almost 10-12 days within the range of 1100 and 1060. Again, it is breaking out of that particular zone, so we can expect further more activity. There we have a target of 1200 eventually. But in the near term, I'm going to say today or maybe tomorrow, we may see the levels of 1150. For Sirma SGS, yes, the formation is much stronger. We saw a vertical rise in the stock, and whenever there is such type of activity and correction, we look for adding some long position. So here also, I think 830 going to act as major support for the stock, and again we can expect upward activity towards 900. But if we consider the overall, let's say, view of next 2 to 3 months, then probably the stock can even hit the levels of 1100.
In some sense, it's been that EMS stock, a stock of the EMS sector, because everything else has had extreme volatility as well. Dixon, Amber, a few others. Sirma has been rock steady and is in fact gained all through FY 2025 and has not done too badly in 2026 as well. Yes, Keynes Tech, another one which has been volatile, but Sirma SGS has actually not been that, which is actually a very interesting thing. Okay, what else? There's little movement, if you will. If I'm not wrong, pull up Nifty IT up 1%, but the Nifty is completely flattened out in some sense. So no big movement per se, except for the IT names. The Nifty next 50 is not doing too badly. So keep an eye out there. Canara Bank, Bank of Baroda, etc. We discussed that. Adani Energy is now at 1032, so that's not doing too badly for itself. And Divi's is perked up a little bit, so keep an eye out for that. Taman, I think the MNC, TND related and CapEx related names are not doing too badly today. ABB is up, Hitachi may not be up, but there is some buying there. So that's a set of names that one may want to keep an eye out for.
Yeah, ABB, even after its numbers, though there was a mixed view initially, was looked at quite favorably. So maybe some of that momentum is continuing. But the Yes Bank story is a curious one. The stock's doing okay this morning. No big issues there, 1.5% up. But they have talked about a fraud, a major fraud actually in their currency forex card business, in their multi-currency forex card business, which has affected more than 5,000 customers and is linked to Latin American merchants. Sharad is joining in with more details. Sharad, there's been a statement from the bank as well, isn't it?
Exactly. Looking at Yes Bank, there's an important update coming in. Their multi-currency forex card has faced suspicious international transactions. To put that in perspective, around 5,000 forex card customers have been hit by fraudulent transactions worth $280,000. Remember, Yes Bank's multi-currency prepaid forex card is issued in partnership with Book My Forex. Now, the bank's management has declined almost 688 unauthorized transaction attempts and able to safeguard roughly $100,000. Bank is also working with the card network to get the things in space. And where and when this fraud was carried out, that's a very important take on this issue. The fraudulent transactions which were there was carried out on 15 merchants, which was based in a Latin American country, and the transactions were done in the early hours of February 24th. The fraudsters exploited the lack of two-factor authentication, and some sensitive card details were also compromised. Bank's response, importantly, is coming that they have restricted these e-commerce transactions from the affected region, and also they are working with the card networks going ahead. But net, the street seems to be overlooking this matter because the amount size is smaller. But in case if more developments happen, we'll get you that updated news flow on that.
All right, thanks so much, Sharad, for getting us those details. You want to comment, Parag bhai, on Yes Bank? What are the prospects? Is it too early to talk about what will happen when the ownership changes and all of that?
No. So basically, this, as Neeraj was pointing out, this Japanese ownership coming in is a very positive thing.
Yeah.
Structurally, it is good, and the bank was run very well by Prashant Kumar, who was ex-SBI. they were less focused on growing too fast, but they actually grown profits very good, in a very good manner. So I would say asset quality is also under control. So I would not like to draw conclusion on these things which keep happening. These are
no,
might be
but frankly, this is in that sense not negative because they flagged it themselves. They found the problem. They fixed it. Quite different from what we've seen with, say, AU Small Finance and IDFC. But just talking about Prashant Kumar and Yes Bank, he really steadied the ship. Now when we look at Yes Bank, we tend to forget the circumstances in which Prashant Kumar
and the way
came on board, and the government has actually...
Government and RBI has managed Yes Bank fiasco was fantastic.
Yeah, to look at what was a real problem and turning it into an attractive acquisition target for a global player is quite a journey that we sometimes don't look at. So
in fact, the biggest achievement on financial side of this government is PSU Bank turnaround and Yes Bank turnaround.
And it's positive for State Bank of India as well from that perspective, right? So there you go.
Everything is going well for them.
Okay. Shrikant, Parag and Kush, thank you so much for joining in today. Going across to Puneet for a setup on Centum Electronics, who we're speaking to next.
Well, most certainly, it's a big order win that the company has gotten at this point of time. It's firstly from a very prestigious player, Hindustan Aeronautics. Now, specifically, this is for the AESA radar system, and the total value of this is roughly around 668 crores, which is executed over 2 phases. The company has specifically mentioned that the phase 1 will be delivered in the next 2 years, and phase 2 subsequently will take 5 years to get delivered, and the order value is also split in such sense. So phase 1 will be roughly around 66 crores, while the estimation of almost 500 crores will be in phase 2. So that's largely on a big order win that the company has gotten. But in quarter 3, the company did report almost 200 crores of a one-time expense. So that will be the second quick thing I'll be watching out for from this conversation, because they've written down some of the key expenses in subsidiaries in Canada. And specifically also, they reported a loss of 153 crores in one of its key subsidiaries as well, which was Centum TNS Group Society as well. So apart from the big order win, this will be also one thing in terms of clarification of what's the expectation going forward from the management that I'll be watching out for.
In fact, Nikhil with us. He joined Managing Director at Centum Electronics, speaking with us this morning. Nikhil, very good morning to you, and thank you so much for joining in. I think the order with HAL is what's in focus and what is exciting right now. Knowing that these are sensitive areas, what can you share with us about details and the order book outlook?
First of all, good morning, Tamanna, and thank you very much for having me on the show this morning. Indeed, this order from HAL is a big milestone for us at Centum Electronics. Not only because it's a major development program, but also it marks a strategic evolution for us as a company, from being a provider of the subsystems or the building blocks of critical platforms like this to a full system integrator. So just to tell you a little bit about what we're doing here, the scope of this order is to deliver this AESA radar for the utility helicopter marine. What this radar is intended to do is essentially to play a very critical role in enhancing the situational awareness, improving the surveillance capability, and overall strengthening the operational performance and effectiveness of the helicopter platform. And what we are going to be doing as part of these 2 phases of the order that was just mentioned. The first phase is clearly the development of the platform of the product. So we will be designing a few prototypes, ensuring that they meet all the required performance parameters that have been set out. Undergoing a very stringent qualification and certification for the product, and then finally, of course, the integration on the platform itself. So yeah, major program for us.
Major program, and I think a lot of your investors will be very keen to hear about what the prospects are going forward then, because you've called it a milestone. What are the implications? So this order is certainly a very large one, Mr. Malavarappa. I hope I got your name right. And so therefore, the question is, what are the prospects on the revenue side and potential order wins on the same platform going forward?
Yeah, so for first of all, as I mentioned, our typical business has been at the subsystem level, a typical order value may be in the range of about 50 to 60 crores, for at this level. But as I mentioned, going up to the system level represents an order of magnitude larger order size. So it clearly represents a bigger addressable market for us. So this program itself, like we mentioned, is close to around 600-700 crores in terms of this platform. But once the technology is proven, we can clearly try to integrate and deploy this on other platforms as well. And that will further increase the overall addressable market, multiple times as we go into the future. And not only that, this is one of the products. We've also working on various other type of systems. Another one that we had won in the last quarter was for an air navigation system, which was actually intended for ships, and that again represents a significant opportunity of about 400-500 crores over the next 5 years in terms of order booking. So clearly, the shift of going up the value chain, becoming more of a systems player, is proving to be a good opportunity. And I think what we're targeting for in terms of growth, especially in this part of the business, is to do 30% or more. And these type of wins really solidify and give us stronger visibility and confidence in meeting these objectives.
All right. So then a follow-up to that, Nikhil, is a question on the order book. Where does it stand right now post this milestone, as you pointed out? And where do you see yourself ending FY27 at?
Yeah. So, if we talk about the end of Q3, our order book was close to around 1,800 crores. That includes all different parts of the business for us. This quarter, apart from, of course, this significant order, we are expecting some other important opportunities to also come in Q4 that's related to space-based orders, as well as a few other critical programs that we've been working on. So we expect, and I'm only considering the phase one part of what we talked about of the program. So, which is about 70 crores. So we expect our order book to further go up in Q4, a fair amount. And again, like I said, will give us a fairly strong visibility to continue a healthy growth rate going forward of 25 to 30%.
25 to 30% growth. Okay, well, good going there. In quarter three, you spoke about a new semiconductor equipment customer beginning serial deliveries. What is this about? Tell us about this semiconductor segment. Is it a higher margin piece? Does it scale up?
Yes. So this is also very strong driver of growth for us in the next few years. This is a slight shift over into our EMS part of the business. We have what I was talking about in terms of the HAL order was more on the build to spec or the product business where we design and manufacture the products. The semiconductor equipment customer that we're added and we're ramping is more on the EMS side of the business. So here, this is one of the large players that provides the capital equipment that go into semiconductor fabs. And we have been one of the first qualified supplier for them in India, and moved very quickly in terms of qualification and ramp up over the last couple of quarters. And we expect that also to grow at a very healthy rate for us in the next year and onwards from there. So this again it should be for us.
Nikhil, allow me. Yeah. Nikhil, I mean, you've already mentioned, right, that from 10 million annual run rate, it could go to 30. So we know the growth is strong there. Right. Is it going to be margin accretive? And do overall margins for Centum move up from what they would be in FY26 to what they could be in FY28, let's say?
Yes. So first of all, it's important to just clarify that the EMS part of the business typically attracts about 10-11% type of margin profile, whereas the build to spec side of the business maybe 20% to 25% EBITDA margin. So we do expect, first of all, a gradual expansion of our overall margins, driven basically by two things. One is perhaps a slightly favorable mix towards the build to spec side of the business. and also some operating leverage kicking in as we progress. So we do expect some couple of basis points improvement in our EBITDA margins going forward as well.
Want to understand, Nikhil, about just wanted to understand about the losses reported by Centum TNS Group, the associate Anonym. This is your subsidiary, right?
That's right.
Right.
Yes.
And those were actually more than its net worth. Has that pain been absorbed in your last quarter, or do you see this sort of pairing out through the next few quarters as well?
No, this is something that we decided we'd take it as one shot. We don't expect any continuing, major losses being coming in because of the subsidiary. So this is why we had two parts of it. One was the Canadian operation, which we have already discontinued. The second is our French business, which we are also going into a restructuring process. But to be fully prudent, we've taken a full impact in terms of impairment in all our investments in the subsidiary in the last quarter. So we don't anticipate any further losses coming from there.
In case you've already said it, apologies, but what is the margin outlook then, now that the sort of books have been tidied, all of this loss has been absorbed, and you talked about your two segments of business? What is the margin outlook, the range you're looking at? Are you moving to double digits?
Yeah, so very simply, if you look at our numbers as a standalone and a consolidated level, the standalone numbers represent essentially what will be a continuing operation for us. And this has been in the range of about 12 to 13% already. And as I mentioned earlier, that we will expect to improve by a couple of percent over the next year, and so on. And with the subsidiary has really been the drag in terms of the overall profitability, and with us discontinuing that, we expect the overall margin profile also to clearly be well into the double-digit frame.
Okay, clearly well into the double-digit frame. All right, thank you, Nikhil, for joining in and answering all of our questions this morning. Focus on Centum Electronics. Also focus on pharmaceutical companies. Now, an interesting trend that we're spotting for you. India's drug makers are gearing up for an entry into semaglutide as the patent on the main molecule expires in March 2026. Nearly 10 companies are preparing affordable versions with generics expected to launch at significantly lower prices. Hiral joining in to give us more details. Hiral, my question is, even as Indian companies are gearing up for this launch at significantly lower prices, the OGs, the originals in that sense, have slashed their prices as well.
Absolutely, the originals have slashed their prices much in advance, and I think what they are trying to do is trying to match what the generics would come in at as soon as the patent expires, which is on the 20th of March 2026. Now, to add to this dilemma, the other question is, what happens in terms of the size? The size is still expanding. The generics are already working, Tamanna, in terms of a 80 to 90% gross margin profile on all of these products. And hence, you're not going to see a major impact coming in there. But yes, if they would have got X amount, the pressure would continue on that front. But let me quickly take you through what's happening. If you have to look at day one of semaglutide launch, 10 companies are preparing for affordable multiple launches. Now you have Sun Pharma, Dr. Reddy's, Zydus, Cipla, Lupin and Alkem. You have Novo Nordisk, who holds the secondary device patent, which goes into 2030 as well. Now the generics are planning a 50 to 60% price, which would be lower, 50 to 60% lower price versus the innovator brands. And there's a possibility that the prices could go down by almost 80%. That's what we are looking at. And they're saying that the monthly therapy could actually fall to 3,500 to 5,000 rupees. So that's that price band you should be watching out for. Indian companies are also expecting early exports to non-patent markets. Now, on this aspect, if you see, innovators like Novo Nordisk and Eli Lilly are fighting back by slashing prices, as Tamanna mentioned. And the Indian companies are saying that they will face high customer acquisition costs versus global brands. So that is going to be the pressure point for them. Generics will also crash prices. and the first 12 to 18 months may see some supply shortage. So on the back of the supply shortage, there could be some bit of a comfort that could be coming in, because manufacturing these complex peptides at a billion dose scale is something which is going to be incredibly difficult in a short period of time. So yes, we are talking about pricing pressure over here. Two, we are talking about pressure in terms of scaling up to the kind of volumes that will be needed to sustain the kind of business. But I think the key is going to be, as soon as the innovator patent expires on the 20th of March 2026, the impact will be known. Very quickly, Sun Pharma, again, semaglutide and novel GLP-1 portfolio is what they are focusing on. They have received the DGCI approval, and they are in phase 2 trials. Again, Dr. Reddy's, they're doing the generic version of semaglutide. Zydus Life, liraglutide and semaglutide, both are these products that they are working with. Cipla is also working with semaglutide as well as tirzepatide. And you have Biocon, which is again working on semaglutide, which is the API and the finished version. Now, why this becomes important for Biocon is because they've secured a US approval for liraglutide. And this would actually mark their entry into this fast-growing weight management segment. The approval is actually strengthening their portfolio and expanding the company's presence in the US market as well. To talk to us more about this, Siddharth Mittal, CEO and MD of Biocon, joins in. Welcome to the show, Siddharth. Always a pleasure to speak to you as well, and always, it's glad to have a candid conversation. My first question coming to you is, semaglutide is on the cards, I understand. Liraglutide is the conversation that we are having over here. When are you expecting that commercial launch in the US?
So we are, you just received the approval yesterday, and now we are preparing for the launch. We, of course, had a back order for supplies in Europe, but for the US, we are expecting that within the next 30 to 45 days, we should be able to launch the product.
Okay. And what's the kind of revenue contribution you're expecting liraglutide in terms of FY27? And let's accommodate for both Europe and the US markets.
See, US and Europe, we have to understand that over the last couple of years, the patients have moved to Ozempic and Mounjaro, and hence liraglutide market value has shrunk. But that said, there are still a lot of patients who continue to take this drug. And of course, right now we've got the approval for generic Saxenda, and there are limited number of players who have commercialized generic Saxenda in the US. So we still think there is a good opportunity. As per the latest IQVIA data, the sales in the US is roughly $130 million, which is already at the generic pricing. So we are hoping that this will be a meaningful contributor for us. And we are, of course, awaiting our approval for Victoza as well in the coming months. So when I look at both the markets, European and the US, I think somewhere between $50 to $100 million in revenues it can contribute in the next fiscal.
The market size in terms of liraglutide is shrinking. What is the market share then you're targeting in the next 2 to 3 years?
Again, depends on the number of players. As I said, right now it is a limited number of players market. So anywhere in the high teens to low 20s is what we will target. And in Europe, there are, of course, many more companies who have got approvals. And there, again, each market works very differently. So in certain markets, we have a much larger market share already, like Netherlands, which is a tender-based market where we and Biocon and our partner Zentiva jointly, we have secured many tenders, and there we do have a majority of the market share. In certain other markets, the market share might be lower, so you have to really look at it country by country. But we are definitely hoping that, again, like US, we will be in mid-teens to 20s market share, because the overall number of players for liraglutide continue to be limited, given that a lot of companies who had filed for this drug many years back did not receive approval, and they've moved their focus to semaglutide. So the competition is still limited for liraglutide.
So competition is limited for liraglutide, so pricing pressure will not be as prevalent on that space. Now, given the price cuts that we are seeing in the entire portfolio, if you have to look at GLP-1 as a category, are you expecting aggressive pricing in the other products as well, like a semaglutide?
See, that's a bit speculative for me to comment on because the pricing pressure is bases the action between the two innovators who are commercializing these GLP-1s. And over the last 12 months specifically, we have seen intense competition between, let's say, Ozempic and Mounjaro, and that's impacted the innovators. So now, what will be the flow-through effect of that on generics and liraglutide? Yes, there will be an impact because at the end of it, the payers and the insurance would look at monthly treatment cost, and as the monthly treatment cost comes down, there will be an impact on the generics pricing.
Okay, so if the monthly pricing comes down, there will be impact in terms of generic pricing, which actually means that all the Indian manufacturers from the generic side are going to face that pressure in terms of costs and an impact that comes in terms of margins as well. Coming to semaglutide, Siddharth, what's the timeline that you're looking at in terms of a semaglutide launch?
The semaglutide goes off patent in US and Europe in 31, but in other emerging markets, it goes off next month. So we have commenced our filing in some of the large emerging markets, and we will continue to file in many other markets. And the best case, we are looking at an approval in calendar 27, but more likely, I would build in revenue growth coming in from somewhere in calendar 28.
Okay. And Siddharth, very lastly, because this conversation is with regards to GLP, what is the broader US obesity strategy going to look like for a Biocon over the next 5 years?
Yeah, but I mean, you have to look at it really from a generic perspective. And as I mentioned today, the only product which has gone off patent is liraglutide, and semaglutide goes off patent in 31, and in the tirzepatide goes off patent in 34. So until then, we do not expect the volumes to increase in the US as more and more patients have moved to some of these newer drugs. And until then, we of course would launch the product, and with a limited competition, we expect to have a good FY28, and after which the growth specifically from US market for liraglutide will taper once you have achieved that market share.
Okay, thank you, Siddharth, so much for joining in. It's always a pleasure to speak to you and have this candid conversation. With Tamanna, Neeraj and Alex, the interesting part over here that we need to understand is the anticipated challenges. As Tamanna was mentioning with regards to where price cuts are concerned, to the high customer acquisition cost that any of these Indian generic makers will face, and that's going to be the challenge. And third is ramping up to the kind of capacity that is needed. These are going to be three challenges that we need to focus on from here on.
Yeah, absolutely, Hiral. And in fact, I'm going to take that question to Vishal Manchanda, Senior VP Institutional Research at Systematics, who tracks this space very closely. Vishal, thank you for speaking with us. I mean, what we're trying to understand is this weight loss play. And I'm not getting into the details of whether it's semaglutide or GLP-1, but the weight loss play that Indian companies are getting into because the patent is expiring, is the timing getting mismatched? Because just before that, you've had some of the global players just smash their prices down. How is that going to work out for them?
Yeah, so I think so. This was expected, and probably we'll see more price cuts happening once generics come in. So unlike typical generics, wherein we see generic companies taking a larger share of the market, I think for this specific opportunity, the innovators are going to fight it hard, and they're also well positioned in terms of their cost of manufacturing and they are better in terms of the cost of manufacturing to take a meaningful market share even when generics arrive. It's just about what supplies they have and whether they would want to prioritize the India market. If they think they have enough supplies and they would want to supply to the India market, they can compete in terms of the pricing and cost of manufacturing.
Initial demand trends showing us on whether the global players or the innovators, as you're calling them, Vishal, will want to compete in the India market. And how does then that pan out for some of the domestic players who have been positioning themselves to come in aggressively in this market here?
So markets are going to expand multifold as the price points come down. So my sense is like we have about 20-25 million people using GLP-1 pens in US and Europe. So like if we have even half of those patients using GLP-1 pens in India, so we have a similar population size like the US and Europe put together. So even then, the market is going to be very large, maybe in excess of 10,000 crores, and even after assuming a substantial discount to the current prices.
So you're saying that volume will make up for any losses that could come because of price erosion at this point. Which are the listed players you think best positioned to take advantage of this opportunity? You saw Dr. Reddy's taking a bit of a knock yesterday. Biocon has been in focus as well. How would you stack some of these players up, Vishal?
So I would prefer to own names which have which have a strong branded presence in the market, strong front end presence. So if you look at Sun, Eris, Lupin, and to an extent Cipla, they have a strong front end presence when it comes to diabetes in India. And like same goes for emerging markets. So if you have a strong front end presence in emerging markets, then that company is probably better poised to gain market share. I think from a manufacturing cost standpoint, all of them would probably be at the same around the same levels.
And do you see a further competition boost coming in and upsetting these plans? Because as you mentioned, we're going to see prices dropping even more. You've seen a 50% price cut now, and then you're going to see prices dropping even more.
Right. So prices, I think I can't tell you a number where it can come down, but my sense is from 30,000 to 50,000 per patient per annum is where I think prices can go. But not sure on whether this would come down to the bottom in the first year or they will gradually erode. Because what we are presently seeing is about 15 to 20 Indian players would probably be launching semaglutide in the first wave. So there is going to be immense competition. However, we'll see the market in terms of however we'll see the market share getting concentrated within the hands of the top 4 or top 5 players, while the other players would only try to kind of take some share on back of a lower price point, and that will actually compel the other larger players also to reduce prices.
Top 3, top 4 players are the same that you mentioned before with Sun Pharma, Lupin, Eris, etc. in the semaglutide section?
Yes. Probably Reddy's is working hard around this opportunity. They are trying to kind of, although they don't have a very strong presence in diabetes, but they are putting in all efforts to kind of make it big in this space. We'll have to see how Reddy's tries to kind of go about the GLP-1 opportunity.
Some recovery in Dr. Reddy's as well. Thank you so much, Vishal, for speaking with us and adding your inputs as we look at this conversation. I mean, I don't know what you guys think. I think the opportunity has also been overestimated to some extent. The idea or the sense is that Indians will embrace this extent of medication at the same pace as, say, the US has. And that still has to, that's a theory which still has to be borne out by any evidence. Of course, doctors are now more comfortable prescribing it, that's for sure.
Yeah. See, but I don't know if it's going to be a situation where I know that it's been described, and I think it was Ramesh Damani who said that women want to use this to look better. I don't know if it's that extent of it, because I've heard that it can be very...
I think a lot of men also want to use it.
Men. People would like to pick this up to look better, because what I've heard, and I've not used it myself, so I cannot comment on what you experience, but...
Yeah, it's a diabetic, I think it's a diabetic plus kind of a solution which more and more people, at least doctors, the medical community is getting more comfortable prescribing, because that fear, that bogey of side effects is kind of now coming down, because you have enough evidence and enough people who are using it to say that nothing really is, like your eyes are not rotting and all of that stuff is not happening. So so maybe
out of all of the things that could happen, I hope that that's the last thing.
Yeah, so maybe that's something that we'll have to wait out and see.
Yeah, well, I trust Tamanna's judgment out here on this one for sure, amongst everything else. So yeah, should be interesting. Let's see how this shapes up. But if you had some inkling of knowing what's happening in that pocket, I hope the conversation just before this helped you. If you have some inkling about or some interest in the private credit industry and all the fears around AI disrupting that, at least globally, if not in India, then the next conversation is for you. A sharp conversation with Sachin Desai, MD of Investments at Mosaic Asset Management, and Rubin Chedda, MD and Head Special Situations Credit Fund at Neo Asset Management. Gentlemen, both of you, thank you so much for joining in. And the genesis of this is every day wake up to a fear of what disruption can AI cause. And in the Western world, AI disrupting the tech world, and therefore some of the lending that is being done by the private credit industry to this space is going to be challenged. That's the narrative, and everybody's subscribing to it. Sachin, would you subscribe to that or no? Why?
Yeah, basically, the thing is, I think no one really knows in the ultimate analysis how this will play out. What has happened is that you have these very capable AI models and the agents that, say, Cloud has released, and they are able to kind of automate, or you can say vibe code some of your workflows. A lot of the software that otherwise used to come via SaaS can be done in-house. And the fear is that more and more companies will maybe just hire a bunch of experts slash maybe even part-time coders and do in-house a lot of stuff which otherwise had to be done professionally, and where it was a per seat kind of an arrangement in terms of SaaS with annual increases. The detractors, on the other hand, are saying that no, this is not the case because this is enterprise grade software where data integrity, compliance, regulatory compliance, etc. is very, very important. So people are not just going to wipe their way to enterprise grade software. And yes, AI will add a layer which will be very useful, but that is something that has to be necessarily done by experts, either SaaS companies. I think the market is kind of in what you could call in economic terms a Knightian uncertainty. You do not really know how this will play out. So whatever growth and PE multiples were baked into the companies, valuations have kind of come down drastically. Maybe the fear is well-founded and the companies deserve lower valuations. Maybe the fear is unfounded. And
Sachin, I'd like to come in here because, frankly, I mean, the valuation is one part, but, and Rubin, I'd like to get you in this conversation. One part is the valuation, but the other part is that could there be genuine losses on the loans that have been given to some of those firms? And then I'll tie it to the Indian context, whether there is merit or no. But Rubin, could there be genuine problems for private credit loans, if I can call it loans, or money is extended to global firms on the tech side because AI is disrupting them?
So, not at all. We are actually far from it. See, I'll give you some very simple yet very impactful statistics. If you look at the Indian private credit market, we are a very small niche.
Rubin, sorry to interrupt you. Right now, I'm not talking about India. I'm talking about the West right now.
See, in the West, yes, I am a little concerned because in the West, private credit has now become a mainstream. US private credit market currently is around $2.3 trillion and annual deployment is $600 to $700 billion. So in the overall GDP context of US, which is say around 30 trillion, it has become a mainstream and it is a little worrying the way things are right now.
Okay. Fair call. Now, before I come to the Indian private credit scenario, Sachin, could it happen that if there is a private credit winter in the West, could it have an impact on how people view the private credit industry in India? Factually, maybe correct or incorrect is a separate question altogether.
You see, definitely we have informed investors. It's a well-networked world that we live in. So any event that happens abroad will definitely pose questions as to whether something similar could happen in India, because we live in an interconnected world. But I believe, as Rubin was alluding to, the reality of the Indian markets is very, very different as compared to the US. For instance, here we have essentially close-ended funds and where only qualifying investors can invest. So the guardrails are in place, unlike US where a lot of private credit funds also take leverage. They have quarterly windows and a lot of retail participation. So here we believe that when we explain the differences that are structurally present in India versus the US market, that should be a good message to give to the investors as to why the two markets are fundamentally different. And it's unlikely that what is playing out in the US would play out in India as well.
Fair point. And I'd like Rubin to add to this, but viewers, the reason why this becomes important to have this conversation as well, because while a lot of retail money may not be going into private credit, we've seen this industry in India grow leaps and bounds over the last 5 years, and there is a significant amount of capital that now rests with the private credit firms, which they are co-lending, if you will, or lending into the Indian infra and other ecosystem. Now, Rubin, you were making that point earlier about how India is different. Sachin alluded to it. You want to make that point as well?
Yeah. So in India, we are right now in a very early stage of evolution as far as the private credit industry is concerned. If you look at the total private credit AUM in India is just about $35 billion. And annual deployment is in the range of $12 to $15 billion. Now, in the context of our GDP of say $4 trillion, and in the context of our relevant market, which is say the corporate bond market and the wholesale loan market, that's about $1.7 trillion. So we are just a small niche. We are a blip. We are just about 2% and in a very early stage of evolution. So there is no systemic risk, number one. Number two, Indian private credit firms operate very differently compared to the West. Our leverage levels, when we lend money, we are typically lending at below 4x debt to EBITDA. In US, typically private credit funds exceed 6x. So there is an inherent risk there. Our structures are very different. We are typically lending in senior secured instruments or senior instruments. In US, typically you have a lot of fancy structuring like mezzanine, junior tranche, etc., etc. So there is a very fancy slicing that happens in the US market. Number three, most important point, we are a very collateral heavy and covenant heavy market. In US, there is very loose covenants and very low collateral because these are all typical syndicated loans. In India, we have bilateral conversations and very heavy on both covenants and collateral. And lastly, very macro point, if you look at our current corporate balance sheet strength, bank balance sheet strength, we are actually in a very nice zone. Thanks to the post-COVID rally, a lot of corporates have deleveraged by raising equity. Banks are in very good shape in the last 2 decades, I would say. So in India, contrary to what's happening in the West, we are actually in a very benign credit cycle. And this should last for the next 4 to 5 years at least.
Okay. Yeah, the cycle in India different. It started off late, maybe still at the nascent stage. Let's see how long it lasts. But clearly, the two experts who, of course, remember viewers, run private credit funds in their own right in India, believe that that space is very different in India versus what's happening in the West currently. Thank you so much, gentlemen, for joining in for this very quick conversation. We need to slip into a very quick commercial break on the note that the markets are flattish. We come back and get in a market conversation going with Vikas Prasad of MNG Investments.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. Welcome back. You're watching India Market Open. Time for the large conversation on Talking Point. Vikas Prasad, Portfolio Manager, Asian Equities, M&G Investments, joining in this morning. Vikas, very good morning to you and thank you so much for speaking with us. It's always a pleasure. Let's start with something which has been on top of mind for markets. I'm wondering whether you think the AI scare is overblown to some extent from the Indian market perspective, or is this a problem that is going to keep dogging momentum as far as Indian equities are concerned?
Good morning, Tamanna. It's good to be back. Good to see you in the studio, not in the snows of Davos. I was in the studio the last time we were there. On the AI, as you know, we are long-term investors. We're very stock-specific. However, we do think that these AI headwinds are quite real for a large portion of the Indian benchmark. We have remained underweight the IT services sector throughout 2025, to start 26, and also now. There are some small and mid-cap companies in particular in India that have been, we think, unfairly punished. Some tech platforms, some IT services that are listed in India but have a majority of the customer base abroad, but are very different from the heavyweight benchmark components that everybody is focused on. So again, we are seeing opportunities in this. There are some stocks that are down 20 to 40% just in February, as this SaaS apocalypse, as some people are calling it, has taken root all around the world. But if you just focus on the IT services sector, the revenue headwinds are real. The cost structures are still high, given what might happen or the revenue opportunities that we might see in the next couple of years. So we remain underweight the IT services sector here.
You're underweight IT services sector, and everything that we're hearing and seeing from all of these companies to convince investors that they are going to be AI ready, the deals that they're cracking with some of these large companies, whether it's Anthropic or OpenAI, these partnerships, not convincing you, Vikas?
It's a little bit too little in the short to intermediate term. These things will take time to play out. But it's not just about the revenues. And some companies did have healthy backlog growth or order book growth in the most recent earnings season. But when you look at the cost structures also, some of the companies have issues there. It's hard to identify operating leverage to come, positive operating leverage to come. And then there's a question also of what do you want to pay for a business like this or businesses like these today? Many of these companies are trading at the lower end of their forward PE multiples in the post-COVID world. But if you look at them, many of them are towards the high end of the decade prior to COVID, before tech spending really took off when everybody was sitting at home. And we're looking at things not just in the 2, 3, 4 year context, but over the last 15 to 20 years as well. What I should add is we're very aware that all these companies that have been listed since the late 90s, early 2000s, have reinvented themselves many times. After Y2K, after the GFC, during COVID, and it's possible that they can do it again. But this environment is different than what they have had to deal with in the past.
Because sorry, extending that point further, but and good morning to you. But could it well happen that it will not be a single shade painting all companies, and there will be some which could turn out to be winners, and there will be some that turn out to be extreme losers in this wave. So net, could selective bottom-up value buying happen within the IT space? Are you also doing that?
Yes. So yes to both of those questions. There will be some dispersion, or a lot of dispersion actually, and we see more opportunities for now beyond what are traditionally called the IT services companies in India, but tech-based companies that have genuine moats. There's a lot of work that we have done and others have done also to identify what really is a moat in this AI world. Having proprietary data is a very big moat. And companies that are integrating the APIs from various LLMs, from various world models over time, they have an advantage over simple or simpler transaction processors that don't have proprietary data. And over the past 2 weeks, we have selectively added to our holdings where we think that there are moats, with the proprietary data being a big driver of that.
Okay. Because the other thing is this almost lackadaisical move that we see, and not just for 2026, for better part of 2025 because of FI selling, that was indeed the case. But no matter what the trigger might be, no matter how solid the macro may appear to be, no matter the fact that Q3 was not a bad quarter, in fact was a pretty decent quarter, there seems to be this lack of follow-through buying happening despite the SIP flows continuing. What will it take for the markets to start performing? Or do you believe the headline Nifty may stay stable and it will be specific pockets only that will show performance in 2026?
Well, there's two parts to my answer. First, when I was in the studio last month, it was just before my trip to England to meet a series of clients, and the feedback was actually quite encouraging on India. This time last year, I met many of the same clients. The question seemed to be, why India? Now, after near 50% repricing of India relative to other emerging markets, it's now become, why not India? And our response was that the drivers of this market had made it the best performing market in the world for about a quarter century, compounded at about 14% a year in local currency terms for almost 25 years. Those drivers remain intact. Meanwhile, we've had this material reset in pricing relative to emerging markets, so that's helpful. But it will always be stock specific. It will be a good home for active management. In the short term to medium term, it's hard to see the flows reversing. Yes, we've seen more buying by FIIs in February, but you look at the Korean market, going back to Liberation Day last year, the KOSPI2 index has tripled. It was up 90% last year. It's up another 50% just year to date in 2 months. This is the overall index. And we've seen a lot of companies that are part of the AI supply chain that still do not look demanding on valuations go up 100% to 200% year to date already. And when you have that opportunity set available in South Korea, in Japan, in Taiwan, it's hard to see investors rushing back to India. But stocks follow earnings. India for a long time has been the highest growth market in the world in aggregate, and then by sector after sector. And we see that remaining intact for the next couple of decades at least.
Vikas, what are you then spotting in the Indian equity ecosystem right now? Is it time to look at non-IT, non-AI disruption kind of businesses, more maybe EPC, infra facing companies, and maybe consumption? Is that something that you're finding interesting? What really are you looking at right now from an Indian perspective?
That's a fair question. And to your point, we've seen a lot of positive developments that should be supportive of the Indian market over the past month. We saw the EU-India trade deal, starting the US-India trade negotiations, and that deal as well. I thought that the budget had some good things for long-term equity investors. Yes, there's some noise around capital markets and trading-related companies in the short term, but that has proven to be an opportunity. We are overweight in healthcare-related names, very broadly defined. That includes services, that includes medtech. I would encourage investors to spend time on healthcare services here. That's a largely domestic story. You have in India a market that in a world that is increasingly interconnected and linked, has over 70% of revenues for the NSE 200 coming from domestic sources. And that number is growing. Whereas for the S&P 500, the number is less than 60% domestic revenue. That number is falling. So you have a lot of very domestic stories. Healthcare is a good place for that. The manufacturing story is a good place for that. Auto components, looking beyond the two-wheelers and the CVs and the four-wheelers, where we do have exposure. But in the auto component sector as well, there's a lot of opportunity there. That's a broader and deeper universe of companies than I think many investors realize. So healthcare, manufacturing, defense is still interesting to us. There's been some volatility there this year. But on a long-term view, we remain constructive on defense, just as we have been for the past few years. And it's not because we have been, we're looking forward and we see opportunities in defense as well.
Defense, would you say that some of the core defense names are not overly valued and more opportunities exist? What are the kind of defense companies you're looking at right now, Vikas, and same for auto anchs?
On the defense side, less software, more component companies, and there's many of those. I'll be visiting some of them soon in India. India has the largest and most liquid and deepest pure play defense ecosystem in Asia. So there's a lot of opportunities for investors there. I do think that earnings estimates on a 2 to 3 year view remain low compared to where they will be relative to earnings delivery for the next 2 to 3 years. And this is up and down the market cap curve. And you asked about the manufacturing sector.
Auto ancillaries.
Yes. So we're going to see domestic demand as a key underpinning of the earnings growth here, but we're also going to see more export opportunities, more international related demand as well for a lot of these companies. And yes, over the past year, especially going back to Liberation Day, many of these companies have done very well. But relative to where they will be, a lot of these market caps are still very small. The valuations are not demanding. On the IPO front, we're seeing some high quality IPOs come here. Last year, we only invested in 3 IPOs out of the near 400 IPOs that there were. And 2 of them were in the healthcare space and 1 was in the auto ancillary space. And so we continue to like both of those.
Vikas, did you play the commodity upcycle via equities, and are you still inclined to play it?
We have had exposure to that over the past 2 years. We have had exposure to cement, to steel, to aluminum and copper. Cement is one area where we have lessened our exposure in recent months, but we still have exposure to other parts of the commodity cycle. If you broaden the conversation and you look into construction, building materials, that's also another area that we're spending time on. This again is a very domestic story. The one I was asking earlier about infrastructure, CapEx, if you look at pipes, cables and wiring, those companies have done well. The multiples might look pretty full on a 1 year view, but we are doing our work there. And perhaps next time we can talk about some newer exposures in those sectors. But for now, yes, we still have exposure to the commodities, steel in particular.
Okay. So continuing that exposure, if you will, I presume, Vikas, what you're also trying to say is that stocks which benefit out of copper, zinc, etc. rising, selectively you still have exposure and will continue to have exposure to them.
Yes, I should highlight that we have very strict filtering mechanisms for sustainability, for coal and all that. But yes, we like what we own in the commodity spaces.
Very interesting. Okay, great. Vikas, lovely talking to you. The next time we'll broaden this conversation, as you said, hopefully maybe in our studios. But thanks so much for joining in today.
Thanks so much.
All right. Well, that's a bevy of things and interesting thoughts Vikas has, considering the fact that he's just gone to the US to raise some capital, Europe and US to raise some capital for India investments, and people are saying the conversation is slipped from why India to why not India. It stood out for me.
It did, but let's hope it goes beyond conversation is all I could say, because that FII flood that one was hoping for post the trade deal getting tied up is a little less than a trickle right now. So I think we'll have to rework what works and what doesn't work. But another interesting point that we wanted to highlight is Prime Minister Modi's Israel visit. In his address to the Israeli Knesset, first for any Indian Prime Minister, he reaffirmed India's unwavering support for Israel, underscoring the depth of bilateral ties and expanding cooperation in trade, defense and technology. All right, let me go across to Mahima now, who's joining in to talk about what is that kind of opportunity that exists for defense companies.
Right. So, Tamanna, over a period of time, the relationship between India and Israel, especially in the defense space, has evolved, and how, right? From a buyer-seller relationship to now a deep, multifaceted strategic alliance is what we are seeing in terms of partnership that focuses on co-development as well as co-production. India and Israel, in fact, India is Israel's biggest defense customer and accounts for 34% of all Israeli defense exports has been between 2020 to 2024. In fact, the bilateral defense collaboration has reached around $8.6 billion in early 2026 as well. Now, speaking about the partnerships in different areas of defense, air and missile defense, the two most important ones were Barak 8 as well as the flagship joint development between DRDO as well as IAI. In terms of drones, there is extensive use of Heron TP Searcher as well as Hermes, and different other products like 900 UAVs plus Drishti Trend, plus there is also India use of Harop as well as Harpy kamikaze drones. In terms of the partnerships in terms of precision strikes, there is India that has recently approved around $8.7 billion package, Spice 100 guided bombs plus Rampage air-to-surface missiles, and air LORA ballistic missiles is also on the cards. In terms of ties, that is in terms of joint ventures, well, major Israeli firms like IAI plus Elbit plus Rafale have JVs with Indian giants. The companies that have exposures or JVs or partnership with these companies include Adani Defense Aerospace plus Bharat Forge, Tata Advanced Systems, Mahindra Defense, Larsen & Toubro, HAL, BEL as well as Bharat Dynamics. In terms of treaties, 10-year roadmap for AI, cybersecurity, quantum computing has been there. Bilateral investment treaties signed in September 25 aimed at turbocharging defense investments. In terms of the ties between the two countries for missiles and bombs, there's key systems that includes Spice 2000 guided bombs, Spike anti-tank missiles plus Rampage air-to-surface missiles. For something like a surveillance that India uses, Israeli Falcon AWACS is something that they've got from there, advanced radar systems as well. And lastly, for manufacturing hub, there are different JVs in place. You have Adani Elbit Advanced Systems, PLR Systems, Kalyani Rafale Advanced Systems, and for emerging technologies that we're looking at, that includes some things like laser weapons, Golden Horizon missile, as well as something like a cyber security and AI in combination. So this is the overall view of what one can make from this visit of Narendra Modi, and plus how defense has been the ground for India and Israel relationship.
Okay, so that's going to be an interesting space to watch, and I thought it was quite coincidental that Vikas Prasad also in our conversation spoke about defense stocks. But let's listen in to one of the comments that Prime Minister Modi made in his address to the Israeli Knesset.
Defense and security is another important pillar of our partnership. In November last year, we signed an MOU on defense cooperation. In today's uncertain world, a strong defense partnership between trusted partners like India and Israel is of vital importance.
All right. That's pretty much a wrap on India Market Open, but just want to look at where we're leaving the market. Some recovery on the Nifty from the lows of the day, not quite where it had opened. A bit of patchy range-bound trade, but it's Nifty IT really that's shining once again, nearly 1.5%. So yes, that kind of short covering or recovery or whatever you may want to call it is continuing for IT stocks, and that's going to be on top of mind and focus. I want to pull up Muthoot and Manappuram. We told you this morning that gold financiers may be under the spotlight while you have gold loans rising rapidly. It's something that that the regulator might not like and might look at very closely. So you're seeing some impact on both of them. But with that, it's a wrap. And Neeraj, it's been an exciting morning.
It has been a very exciting morning, and I'm sure it continues that way on Ask a Profit, wherein you post all your queries and we get you all the answers. Thanks so much for tuning in.
we respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand.
Welcome, you're watching NDTV Profit, and of course this is Ask Profit. I am Mahima Vachhajani and with me is Puneet Zaveri. Puneet, like we were discussing.
You started laughing before you started.
Everyone in the studio today, of course we have Kush Bora also in the studio with us because it's Thursday. Thursdays with Kush Bora, I think we can call it that. And all of us are wearing blue. And that's what the markets are looking like. Is that what we're feeling? Of course. It's the weekend is nearing and that's how we feel, and that's how the markets have been feeling for quite some time now. The Nifty 50 right now is trading just 0.2% higher. In terms of the overall sentiment that we were expecting, considering the implied open as well, that's kind of not played out. But the Bank Nifty also is just flat as we speak. Let's try to pull up the Nifty 50 heat map to see as to what are the counters that are contributing positively. You have Tata Motors PV on the charts today, which is topping the charts, in fact, up 2%. Something like a Tech Mahindra continues to be in the green today. Shriram Finance also second day of green in trade. SBI Life, Max Health, as well as HCL Tech, Adani Ports, Infosys and HDFC Life are some counters gaining in that range of 1%. But on the flip side, you have something like a Coal India as well as HUL, which are in the red. Not seeing a downtick of over 1%, but slightly down. Coal India down around 0.9%, Power Grid around 0.5%, HEL around 0.6% as well. So that's with regards to where the benchmarks go. Let's quickly pull up the sectoral indices to see as to how sectors are looking like. Pharma is leading the pack today, up 1%, followed by Nifty IT. A 1% gain is what we're seeing there. FMCG continues to be under red, down by about 0.25%. Wondering what Nifty Metal is doing. It's just up by about 0.07%. So that's with regards to where the sectors go. Quickly, advanced decline ratio, if you can pull that up, because that will suggest as to how the broader end of spectrum is looking like, in the green of course. But right now around 1700 odd advances versus that of 700 odd decline. So good ratio, and that breadth has continued since at least after the half an hour of trade, if I'm not wrong. So that's how it is looking like in the broader end of spectrum right now, Puneet.
Well, largely the advanced decline ratio does give us some indication today, and the mid-cap index also in the green. So, and we'll just update and get those rates for the small cap as well, because largely a lot of individual stock movers. Mahima covered Sanofi Consumer today. That stock is flying up in trade today. KSB is the other one that's on my radar as well, up almost 8% at this point of time. And when you look at the BSE 500, that will bring up the other names that are individual names that are up in trade today. Largely a day where over the last couple of days we've seen the metal pack and the value in the auto space being clearly visible, and IT has had its own way. But today you're seeing KSB of course being the leader in the BSE 500. Tejas also on the back of that order win. Tejas Networks is up, Tanla Platforms, Orient Electric, as well as Chemplast, Sanmar are some of the other ones. But in the loser side, you are seeing Chola Finance down. Home First is also down almost 4.8% as well. But at this point of time, let me also welcome in Kush Bora. He's of course in the studios with us today, as Mahima highlighted, as well as Shaina Mukaddam on the fundamentals, and she's also an independent market expert. Both of you, thanks so much for joining in and helping us with our stock-related queries for today. The first one that's coming in is from Ekambara. He is a regular viewer asking on NCC. Now he's holding 400 shares at 202. Shaina, should he average down right now given the underperformance of this counter? What would you recommend?
Yeah, actually they have got a very good order book position, and I believe that one can average, but slightly lower levels I would prefer, because it is showing a bit more softness. So I would prefer he can average around maybe 140, 139, 140 type of levels. That would be a better level to add, because then you could make decent amount of money over the next 6 months to a year.
All right, we have visuals coming in from the ED office. Anil Ambani was supposed to be participating in ED questioning today, and those are the visuals coming in. Okay, so he's already gone in, but this is with regards to what happened yesterday. He had provisionally attached his Pali Hill residence in Mumbai, and the value of the house is more than 3,700 crores. So we'll have to wait and watch out for as to how the development pans out there. So that's with regards to the visuals that you saw. But moving on to the next question, Pavitran is writing us from Trivandrum, holding 40 shares of HG Infra at the levels of 816, wants to know as to what should be the next course of action for him. Kush, I'll come to you on this one. HG Infra, what are the charts suggesting?
First up, a very good morning, guys. And if we are going to say the blues with such a smile, doesn't feel like blues, right?
Plus, I mean, you have to be happy at the end of the day. So
absolutely. And I think next time we should give Shaina also the memo that we are all wearing blue.
Oh,
so
yeah,
we could all sync up. Now, that's on a lighter note. But HG Infra not having the best of the times, at least not for the last about year and a half or so. There has been constant selling. I would suggest you continue to hold for a very simple reason, that now the daily setup is showing a positive RSI divergence. So is the weekly setup. Mild or first indication that there could be an uptick coming in, on this one. So I would suggest continue to hold for any scope of profit. 525, that's your stop loss, but don't expect it to recover fully in the next 3 to 6 months. I would suggest a gradual exit at about 650 and then about 725 odd level. So keep exiting as the stock rises.
Got that view, Kush. Our first call for today is Bindu dialing in for a stock query. Bindu, very good morning. Welcome to the show. What's your query?
Good morning. So I hold 1,000 shares of Fidelity,
at 44.
Okay.
So my view is totally short term.
Okay. And this is
If the stock has fallen some more, I can add more.
All right. And you bought into this counter very recently in the recent fall, Bindu?
Yeah, very recently. Yeah,
Okay.
recent fall.
Got it. Well, Kush, Sagility, amongst the other IT names has been hammered. What would you recommend on this counter?
I would suggest a hold. My view from a medium-term perspective, medium to long-term perspective on Sagility is rather favorable. So yes, along with a lot of other names, Sagility too has taken a beating. But the good point is that Bindu's entry point is not too far from the current price, which is actually an excellent entry point. I would suggest continue to hold. She also mentioned that if it falls further, she wouldn't mind buying at lower levels. I don't suggest averaging. Not a big fan, so I would stick to that view. Instead, I will do what I usually do. I will suggest a stop loss at 38. That's the medium term support zone for Sagility. If that is broken, the structure will get disturbed massively. So hold it with a stop loss at 38. Don't average. But yes, I mean this is something that you can favorably hold for let's say at least a couple of months time.
Okay, all right. So that's the view coming in on Sagility India. But the next question that we have is from Raghunathan, who's writing us from Chennai, asking about All Cargo Logistics. He's bought at the levels of 39, 50, 500 shares is what he's holding. He wants to know as to what's the view like and can he average at the current level. Shaina, I'll come to you on this one. Well, I mean, the stock is tanked and how? 39 is the level at which he's bought, so sitting on significant amount of loss. Should he book losses? What is the view like?
I would say that, he's sitting on a lot of losses. And in terms of performance also, our cargo is not really doing that well in terms of numbers also. So, the profitability has been declining. I would suggest that it is better to switch out of the stock. If he's a long-term investor, if he's a trader also, I think maybe he can wait for a bounce and then exit because numbers are not supporting a performance at least in the near term of the next quarter and onwards.
That view, Shaina, but another caller dialing in from Hyderabad, and Chandu has a stock query for us. Chandu, good morning. Welcome to the show. How can we help you?
So, very good morning for all. Yeah. So regarding my query related to pharma, I want to buy Mankind Pharma.
Okay.
The right time to buy for short term or long term, we both I want to know. Or anything better than this, I want to know.
Got it, Chandu. And do you have any other pharma plays in your portfolio right now, Chandu, or will this be the first one?
This is the first one actually. I will play with mainly pharma base, but I want to go for now. Yeah, like a stock. That's the reason.
Got it, Chandu, and thanks for your query. Shaina, on Mankind Pharma, is there a good time to enter? Is what Chandu is asking for the long term. What would you recommend?
No, I would suggest it is better to wait for further dips if he wants to buy specifically Mankind. Because if you see, the numbers were, not really very attractive. They have acquired Bharat Serums, and that actually is resulting in a huge amount of debt increase, which is impacting the profitability because of higher interest. So I don't think this would be the best time to buy it. Maybe look at it after 1 or 2 quarters. Business is good, but they still have to integrate the acquisition into their business to show increased turnover and profitability. So I don't think that would be my best pick in pharma as of now. You could probably look at some other company like Biocon, in my view, which actually has this would be the last quarter where they would find the impact on higher interest costs. But I think over a medium to longer term, maybe 2 years, I think that would be a better performer because of the number of products that they have got targeting the US market. So I would suggest maybe Biocon, maybe Aurobindo is also doing pretty well. So as of now, I wouldn't say it's the best pick. Better to buy it at dips because of US FDA, which has actually issued certain, I think they've got 9 observations. So it's better to buy it maybe 1 or 2 months down the line when the stock stabilizes. But I think these are the 2 topics of mine in the pharma space.
Con, has that psychological 400 mark, right? It reaches 400 and then finds a new low from there. Is that something that you are also picking up? Because it's always been the case, unfortunately, with a lot of investors who are stuck in that range for Biocon.
So brilliantly spotted, okay, and this has been the case for Biocon, not now, I'll tell you when, since 2021.
Wow.
the stock tries to cross that 400 level, makes it as much convincing that oh, is bar to ho hi jayega, and then just gives it up in a massive way. So for me, unless that is taken out in a big way, I wouldn't really be constructive. But while we are on the subject, I like Ajanta Pharma, I like Lupin, and I like Torrent Pharma. So over Mankind, I think these are your choices if you want to pick.
Okay, all right. So those are the pharma picks coming in from Kush. But we've got our next question, which is on Yes Bank. Pravesh is asking this question, wants to know if this is a good time to enter. Of course, we talked about the fraud today, but that's not reflected on the stock, of course, of around 2.25 odd crores, if I'm not wrong. But technically, do you think it's the time to make an entry?
Not really. When you talk about Biocon, I think Yes Bank in a lot of ways falls in the similar bucket where it's not gone anywhere. And when you put this in context where what the rest of the banking pack has done, doesn't make a case for Yes Bank to be accumulated, at least from a near-term perspective right now. I think you should stick to, the quality mid, PSU banks which have done well. Although I right now believe that they are a little overheated and could cool off. But once you've got that cooling off process done, the likes of, Canara Bank, the likes of Bank of Baroda, all of these banks will do well. My pick, by the way, has been Bank of Maharashtra for some time. We've discussed that as a stock today as well in the opening pick. So that is something that I would consider from a medium to a long-term perspective from the banking space.
Got that view, Kush. But we were showing you the live visuals of Anil Ambani going into the ED office in Delhi. Now, that is something that we are continuing to track as well. Let me actually get in my colleague Saurabh Gupta, who's getting us the full report right now. Saurabh, over to you.
This is an ongoing money laundering investigation in connection with Reliance Communications. The ED pegs the entire amount to be at 40,000 crore. There are, of course, a list of properties that the ED investigates, and of course, it has already attached about 15,700 crore worth property in total in connection with this case. Now this questioning comes close on the heels of Anil Ambani's Pali Hill residential property being attached, which is also pegged at around 3,700 crore. And earlier too, there have been properties that have been attached by the Enforcement Directorate. Now this is in connection with, like I said, the money laundering case that the ED is investigating. It's been an ongoing investigation. In fact, several summons have been issued, and in fact Anil Ambani responding to those summons. Now this is also connected with the alleged Reliance Communications Limited Arcom bank fraud case that the ED is investigating. Yesterday, of course, the ED had gone ahead with this attachment, which is one of the largest attachments in this case. In fact, earlier also there have been property attachments as far as this investigation is concerned. But Anil Ambani, of course, appearing before the Enforcement Directorate is the latest on this case as the investigation continues.
Okay, Saurabh, thank you so much for getting us those details. In fact, viewers will keep you updated with what's being developed in this story going forward as well. So do stay tuned for that as well. But taking the next question, Tom Zwergis is writing to us asking about Paytm. He is holding 100 shares, bought at the levels of 1367. He wants a view from the next 12-month perspective. Should he hold or exit China? What is the view?
I would suggest that he can actually hold it, but otherwise, I would say that in terms of medium term, it is better to get into some of the other private sector banks. Something like Federal Bank, in my view, should outperform a Paytm in maybe the next 6 months. So I would prefer a private sector bank over a Paytm.
Okay, all right. So that's the view coming in on Paytm. But we've got our next caller. Ravi is calling us from Hyderabad. Ravi, hi, a very good morning to you. What's your query about?
Yeah, very good morning. I have query on NBFC. Since I have choose two stocks, like one is L&T Finance and the other is Mahindra and Mahindra. So I can hold for next 1 year. Just want to know which stock is best for next 1 year. If yes, at what price it's good time to enter.
Okay, can you repeat the second company for me? You said L&T Finance and?
Mahindra and Mahindra Finance.
Mahindra and Mahindra Finance. Okay, and I believe that you want a fundamental view on this one.
Fundamental as well.
Got it. Okay, Shaina, your view between L&T Finance and M&M Finance?
I would go with L&T Finance for now because there has been a lot of restructuring that has actually quite improved the overall performance in terms of numbers. And I would say that at current levels, it looks like a decent buy. So he can not only go in and buy it at current levels, he can keep a stop loss if he wants, because the way the overall market has been quite volatile. Keep a stop loss close to about, I would say, 260 to 70, 260 to 70, those type of levels. That would be a level which he should review if it at all goes down to those levels. Otherwise, he can look for a target of about 330.
That view, Shaina. But another caller coming from Bengaluru. Meghna has a stock query for us. Meghna, good morning. Welcome to the show. What's your query? Hi, Meghna. Can you hear me? Well, we still have a query, so we'll probably just take that. She's bought Pine Labs at 551, holding 260 shares. Not too much on the chart. So, Shaina, if any view that you might have on Pine Labs recent listing, but what should Meghna do? She's bought it at 260 rupees per share.
I don't actually track the stock that, so I will let this pass.
Okay, I don't think we'll have enough data on the charts as well, correct? Okay, no worries. Maybe next time we'll take it up, But moving on to our next caller, I think Manya is calling us from Bengaluru. Manya, hi, a very good morning to you. What is your query about?
Yeah, good morning, ma'am. Like it's regarding RVNL. I got the short stock numbers around 450 and an average of 392. So, like, I just want to know, like, what could be,
okay,
like, what do I have to do now?
Sure. And you saw the fundamentals of the company while buying this?
Yes, ma'am.
Okay, all right. Shaina, then I'll come to you again on this one. RVNL, what is the view like?
I would say it's a hold. One is because they've got a very strong order book position, which is about almost 90,000 crores, which is 3 times its revenues. So basically, while there has been some issue regarding its execution, I would believe that given the order book position and the overall, growth in the overall railway business, I would suggest that it is a good hold for the longer term, because if at all they are able to improve their execution, then we could see a very good growth in their revenues and profitability. So as of now, it's going through a bit of consolidation, but I would say you can continue to hold.
Got the view, Shaina. But the next question is on NMDC, Kush, and our viewer Sunil from Pune, who is a regular viewer, is asking if it's a good time to enter. What could be some of the targets and stop losses?
It's a good time to enter. It's not a bad setup at all, because there's a rising trendline support on this one. The stock's been in a consolidative but a positive pattern. Not a bad setup. Last few weeks it's just gone into a range, but the markets have also, right? So I would suggest that you could enter at the current levels. Don't expect momentum, so there will not be an immediate uptick on this one. But with a stop loss at about 77 and 76 zone, that's the recent swing low, you could keep your stop losses there. On the upside, for targets of about 88 and 95, you could buy this, but remember, this is more of a positional bet.
Okay, all right. So that's view coming on at MDC. The next question that we have is from Malika, who's writing us from Mumbai, asking about IRB. She's bought at the levels of 55 and 400 shares is what she knows. What she holds, and she wants to know as to what are the prospects for this share going forward. Kush, what are the charts indicating? Today the stock is up around 1.5%.
The buying price you said is 55, is it?
55, yes.
That's fairly high.
High price, yes.
Yeah, and I have a concern with this stock. There is a descending triangle pattern on this one, which is not a good sign. The support level for that one comes in at about 40. The stock did breach it a couple of times, but has been able to regain. If there is a conclusive closure below that 40 level, I think the structure could worsen even further. So my suggestion would be to exit this stock right now. There isn't much going for it. The markets, even though they've rallied, not in the at least in the recent past, the stock hasn't participated, and on the verge of breakdown. I think it's a good idea to exit out of IRB right now.
Got that view, Kush. The next one's coming from Jay Krishnan, who is also a regular viewer. And he's asking a question on CDSL. He's holding shares at 1510. Not mentioned the number of shares, but he's asking what he should do now. Shaina, what would you recommend?
Yeah, CDSL in the shorter term is seeing some bit of impact in the changing norms by SEBI, So I would suggest that he can actually, it's a long-term investment stock, so he can buy in staggered way over maybe over the 4 quarters, next 4 quarters, he can buy in a staggered way. There could be some impact, as I said, of the changing norms, both in futures options, which could impact some bit of their revenues and profitability. So I would say, yeah, if you're a long-term investor, you see major dips, you can buy.
Okay, all right. So that's the view on CDSL. But it's time for our first rapid fire round of this Ask Profit edition. China and Kush, you both know the drill. Try to keep your answers as short as possible. Lenin from Hyderabad is asking the first question. He wants to know the fresh entry levels for Union Bank. Kush, your view?
Yeah, so there could be a bit of a dip that could come about. I would prefer to enter this one at the 185, 190 zone, between that zone.
TCS is the other one. China bought at 3166. 3-year time horizon by Mohit. Should he average down right now?
No, don't average now, but hold.
Okay, Pidilite Industries is the next one. Shruti from Bangalore wants to know as to whether she can enter at the current price for the next 5 years. China, your view?
Yeah, you can buy it and hold it for 5 years. Yes.
Shriram Finance, China bought by Mohan at 920. He's asking a 2-year view on the stock.
I would say you can add.
Okay, Engineers India is the next one. Krish from Bengaluru bought the counter basis your recommendation, Kush, at 171. He's sitting on profits. He's saying that should I add more or should he exit and buy GE Power?
First, you should go and celebrate. Second, you should book partially and hold the rest of the quantity with a stop loss at 205, 2010 zone.
Vardhaman Textile, Kush bought at 514. What's the short-term view that you would recommend?
I am having some difficulty bringing it up. Oh no, just give me a second. Yep, got it. What's the buy price again? I'm sorry.
514.
514. You should continue to hold this one. Keep your buy price as your stop loss. So that's a trailing stop loss. Continue to hold.
Okay, Bank of Baroda is the next one. This is also for you, Kush. Bhavna from Bengaluru has bought at the levels of 252 and 200 shares is what she has. Sell or hold?
Brilliant. Continue to hold. Keep a stop loss at the 295, 300 zone.
VST Tillers, Kush bought at 5875. Our viewer wants to add more. It's done very well. What would you recommend for the next few months, I would say?
Okay, so for few months, I would suggest just hold whatever you have. Don't add. Momentum is missing.
Okay, Lemon Tree Hotels is the next one. Kushit from Delhi wants to know if you can continue to hold this from a long-term perspective. He's bought 400 shares at the levels of 147. China?
Yeah, you should hold it.
Is Lupin a good bet for the next 1 year, China? What would you recommend?
Yes, it's a good bet. You can hold.
Okay, the next one is on PNC Infra. Lakshmi from Hyderabad is bought at the levels of 350. 100 shares is what she holds. Can she continue to hold this? Kush, your view?
Continue to hold. Keep a tight stop loss at 200. Exit on any bounce that you get.
One in the private and the PSU banking space, China, is what our viewer Ishwar is asking. A recommendation that you would have for the long term?
I would say Federal Bank for the small, for a smaller bank, and for the larger bank, you can go for ICICI Bank. And you also want it for a small cap bank.
PSU.
Maybe, yeah, PSU Bank. I would go with a BOB or a PNB.
Okay, the next one is on Premier Energies. Is this a good time to make an entry? Jeet from Kolkata is asking. Kush, your view?
You could start nibbling into it. I wouldn't buy the entire quantity. You could start buying. Keep your stop losses at the 675, 680 zone.
Okay, all right. So that's the view coming in on Premier Energies. But viewers, with that, it's time to slip into a very, very short break. But don't go anywhere. We'll be right back answering all your queries on the other side.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen up there. But before we do that, quick address on Chola Finance. It's in focus after, there's no update in terms of whether exiting. Equirus has said that they spoke to Arun Selvan, the CFO, and he highlighted that no such update in terms of Mr. Velayan exiting is going to come. So that's the update coming. Of course, the stock is down by about 3%, but we'll keep a watch on this particular counter and we'll see as to how the updates coming from here on. But with that, let's also take a look at how the F&O setup is looking like. And as always, we've Sharad back joining us and telling us as to how F&O markets are shaping up. Of course, today's monthly expiry as well, Sharad.
Exactly. So we might see some kind of volatility coming in for Sensex monthly expiry. But remember, we are trading with a positive bias for the last two trading session. And despite a little bit of choppiness throughout the day's trade, nevertheless, technically, we'll take that. Let's look at the IT names. That's where we are seeing a little bit of, short covering coming in. Eternal also trying to get its foot back. A good sell-off was there. Interestingly, Reliance is also holding up, Infosys is also holding up, and that is giving a little bit of strength to the markets. But what's not working, we're seeing some sell-off or profit booking in SBI and Power Grid also. These stocks have been buzzing in the positive stance over these days, and largely we might see a little bit of range-bound movement, and in the last 1 hour or 90 minutes, we might see volatility coming in. Let's see the long build-up, how things are looking like. Of course, the BankX also is something which we talk about. But Mankind Pharma, that has picked up after a long time. Volumes are coming good. Vodafone Idea, traders' favorite, that's also up 2%. Slight dip coming in. But let's look at the short covering candidates, and this time it's the IT players. Of course, Coforge is missing, but it's nearby. Persistent Systems and Oracle make it to the list. Long unwinding, no major trade to be honest is happening here. We can go a bit forward. And let's talk about the short build-up, and we just discussed Chola Finance. It's actually on a recovery. It fell almost 5-6%, 7%, and now it's at 3%. But nevertheless, a good short build-up was there. And United Spirits, which Mahima tracks, that's also down 2%. So these are the important stocks in the F&O space today.
Well, thanks so much for that, Sharad. But another caller coming in from Bareilly, and Abhinav has a stock query for us. Abhinav, very good morning. Welcome to the show. What's your query?
सर मैं अरविंद गुप्ता बरेली से बोल रहा हूँ सर. मेरा क्वेरी है कंप्यूटर एड मैनेजमेंट सर्विसेज जो कंपनी है इसके 748 पे मेरे पास 100 शेयर्स रखे हुए हैं. तो मैं इसका फंडामेंटली और टेक्निकल दोनों जाना चाहता हूँ. मेरी होल्डिंग पीरियड है 1 ईयर की.
शाइना
अभी मैंने रिसेंटली बाय किए थे.
गॉट इट अभिनव. शाइना कैम्स पे आप क्या व्यू देंगे अभिनव को? उन्होंने 748 पे लिया है 100 शेयर्स. व्हाट वुड यू रेकमेंड?
I think, while the stock has corrected a lot over the medium term period, I still think that, at current levels, there could be a further downside. तो यहाँ से जो मुझे लगता है कि for the shorter term यहाँ से और थोड़ा correct होगा. अगर आप hold कर सकते हो तो अच्छा है, because business तो मतलब it is good business for long term. जैसे you have number of investors going up longer term में, तो वहाँ से तो ठीक ही रहेगा. लेकिन आपको अगर होल्ड करना है तो होल्ड कीजिए विद अ स्टॉप लॉस नाउ ऑफ क्लोज टू अबाउट 670. एंड आपका अगर ये लेवल नहीं नीचे जाता है इससे तो आपको 800 रुपीज एक साल में एक या 2 साल में मिल सकता है.
Okay. The next question that we have is from Sailaja, who's writing in and asking about SBI. She's got 100 shares at the levels of 899. She's asking if this is the right time to book profits. Kush, would you recommend that?
So by the looks of it, she's a long-term investor. And from a medium to a long-term perspective, there are no worries absolutely with the stock. However, if she's a regular viewer, she would have heard me in the last 8-10 sessions saying SBI might perhaps see some sort of profit booking. We're starting to see that. But mind you, that I speak from a very near-term perspective. I think SBI has a good solid structure. It's a good idea to continue to hold. Yes, there could be some more profit booking that could come about. The stock could fall to about 1050 odd levels. But I would, from a near-term perspective at least, go out and buy and not sell. So SBI from a long-term perspective, medium-term perspective is a hold.
Got that view, Kush. But the another query that we're getting is, we have addressed TCS, but Godfrey Phillips, actually this counter is back in focus along with ITC after they've passed on some of the price hikes. But Shaina, Raj Sekhar actually is holding 2,400 shares bought at 3,100 and hence putting the focus. It's a large position on this one. What would you recommend, for him to do? Because there is regulatory uncertainty in that sense. Volume growth might be impacted, but what's your view with Godfrey Phillips? Should he continue to hold, average down? Your view?
We'll have to see actually what is the impact on volumes in the quarter. Because while they have taken small price increase, we have seen normally that volumes do come down. So I would say you can hold as of now. Hold with some sort of a stop loss, maybe close to about 2,000, and let's watch and see how the quarter numbers going forward come out.
Okay, so that's the view coming in on Godfrey Phillips, but I think we have Teja who is calling us online and asking about Sagility. Of course, we did address this, but Teja, go ahead and ask your question. Okay, we've lost him as a caller, but since he's sitting on a loss of over 2.8 lakh rupees, I was just wondering if we can get a view on this, Kush, because I mean, it's, a lot of people are stuck in this. So just give a brief view as to what he should do now.
Yeah, so one thing, I think, he just got stuck on the wrong side of the trade because of whatever's happened in the IT space. This one being a relatively smaller name has taken, a hammering as well. Like I said, medium term, I am a little positive on Sagility. The loss is deep. I would suggest that, if he can, he should continue to hold. 38 is the level that I would suggest as a stop loss. If that is broken, the support zones will be broken, and the structure could worsen. So my suggestion, you could continue to hold Sagility with a stop loss at 38.
Got that view. It's actually been a very rank outperformer before this started happening. So at 31, when the IPO came, rode all the way the up move till 50. We took a lot of queries actually at that time as well, but got caught in the regulatory aspect of things as well. The next question that's coming in now, it's on a few stocks that our viewer actually DK has sent across on TCS, Infosys, IRCTC and IRFC. Now he wants a 12 to 15 month view on all these stocks, but let me just be selective because we've spoken about TCS, we've spoken, what would you recommend China on IRFC, because he's holding shares at 112,000 shares is what he holds. Now, yesterday we've seen, very low subscription to the offer for sale as well. So the counter might be weak in that sense, but on the long-term view, what would you recommend?
See, I would recommend to avoid as of now also. Because the major issue that I have over here is that the government still owns about 86% equity. And even if they are able to do the 4% in this run of the FPO, but I would think, valuations are not like a sustaining very good upside in terms of pure fundamentals, and there will be an overhang on the stock. So I would say it is better to actually, exit.
Okay, all right. So that's the view coming in on IRFC. The next question that we have is on Infosys. This is coming in from Subbalakshmi. She's got around 50 shares, wants to know if she can hold or sell some stocks. Kush, I'll come to you on this one. We've been talking about IT stocks, for so many days now. But technically, how are the charts looking for Infosys?
Do we have a buying price?
The buying price is not there.
Fair enough. See, anyway, my suggestion would have been irrespective of that, at these massively oversold levels, it's not a good idea to go out and, sell right now. Do you go out and buy? The buying could perhaps only be for a dead cat bounce because, does a meaningful recovery come from these levels? It well could, but it might not be a V-shaped one. So I would avoid fresh buying. And to her very pointed question of should she sell right now, my suggestion would be no. A bulk of the selling that was to happen seems like it's already happened. Most of these stocks are from a momentum indicator perspective to close to their 2020 COVID lows, right? Not price action. Some of them price action also, by the way, but from a oversold nature. So my suggestion, continue to hold. If you want to exit at rebounds.
Got that view, Kush. But the next question that we have, it's on Zen Technologies from the defense space. Now, our viewer is holding these shares. Richie is holding shares of this counter, and he wants to add on and add rupees 1 lakh into buying more shares now. Would you recommend that, China? Because, the order book was a concern in the sense that it didn't give that kind of visibility as the other defense plays. And I think the stock has been volatile over a period of time because of that. But would you recommend buying into it right now? Is there enough evidence to support that?
I would say that if you're a long-term investor, you could buy, because while there is a bit of fluctuation in terms of the order book, and I would say 6 months back, they had a very low order book and then they got good orders. In terms of valuations, I wouldn't say they're cheap. So you have to be a long-term investor. It's about 10 times their revenues. EVs 10 times their revenues. So, I'm sorry, EBITDA, one sec. Oh no, revenues it is 10 times. So that makes it really expensive. But at the same time, they've got very high EBITDA margins, because of which I would say, yes, you can add at current levels, but keep a longer term view.
All right, so that's the view coming on Zen Tech. But we've got our next caller. Pavitra is calling us from Andhra Pradesh. Pavitra, hi, a very good morning to you. How can we help you?
Yeah, I'm holding 700 shares of ONGC at the rate of 275. So this is for very short term. What would be the short term price action in this?
Okay,
yeah.
I'll
and
get
also, is it a good time to enter Coal India?
Okay, I will take one query per viewer. So you have to choose between ONGC and Coal India.
ONGC.
All right, okay, Pavitra. I'll take ONGC with Kush. Then Kush, 700 shares at the levels of 275. What would you recommend?
I would suggest a hold for now with a stop loss at 270, but my suggestion would be it's not a bad idea that if the stock moves higher just by a bit, even if it is 285, 290 levels, exit because the stock has had difficulty crossing the 280 290 zone convincingly for a while now, and we've seen how how volatile the stock can be just basis the news, the global news flow, right? So while yes, you can continue holding on, stop loss 270, but closer to the 285 290 zone, make it a quick trade and exit.
Okay, all right. So that's the view coming in on ONGC. But with that, time to slip into a very, very short break. We'll be right back answering all your queries. So do stay tuned.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching Ask Profit. The next question that we have is from Ram, who is writing us from Hyderabad, asking about KC International. He says that he wants to deploy around 5 lakh rupees in this particular counter or Kalpataru for the next 2 years. And he says that he is planning his first investment in the power sector, but he's confused to pick one from these. Wants to know as to what he should do. Shaina, I'll come to you on this one. These two names or any other names that you would like in that space? The power is the space that he's talking about.
See, of the two, I would prefer KC International because they have got their capacity that is expanding. And I would say that, with a lot of demand for cables, at least over the next 1 odd year, you need to review it because a lot of new players are coming in. But at least for the next 1 odd year, I think one can hold it. The stock has seen a huge amount of correction. But I would say that you could hold it and then maybe keep a stop loss of close to about 580 types of level or 570, 580 type of levels, and then hold it for the medium to longer term.
Got the view. Shaina, next one's on IFL Capital, and this query is coming for you, Kush. Vedant has actually bought her at 506 and asking what he should do with this particular counter. What would you recommend?
Yeah, I would suggest an exit. It's not got anything going for it. It's got a lower high, lower low formation even on the weekly charts for a while now. There was some participation in the uptick in the market momentum that came about, but fizzled out very quickly. So it's not really gone anywhere. I wouldn't really hang around for a long time just to see how the stock performs. So I know it's a loss, but given the setup, it's a good idea to maybe exit right now.
Okay, all right. So that's the view coming in on IFL Finance. The next question that we have is on HCL Tech. Sudhir from Bengaluru is asking this question. He says he's asking if this is a good time to enter the counter for the next 2 years. Shaina, what is your recommendation?
I would say that it is a good stock to hold. But if you want to add as of now, it is better to add it at slightly lower levels. But in terms of performance, I think it would be one of the better ones in the large cap IT. So I would say it's a hold as of now. Add at depths.
Got that view. The next one's, on Acuitas Chemicals. Now, this one's, of course, formerly known as Ami Organics. It's a stock that's done very well for its investors. So, let's pull up the long-term view and chart of this counter. Our viewer is a long-term investor, bought at 1727. So, sitting on a profit, and there you go, 95% returns in the last 1 year. Shaina, do you track this counter? And if any view, what he should continue to do? He's holding it at 1727.
You said Acuitas
Yes,
Chemicals?
Acuitas, yeah.
I don't really track it closely, but just, with a brief overview, it looks like it's a hold, though it's given you a good one-way upside over the last couple of years. So I would say it's a hold. Chemical stock, things are looking up for the sector.
Okay, all right. The next question is from Balwant Modi, who's writing us from Rajkot, asking about CG Power and wants to know the entry levels for this particular counter. Kush, your view?
So it's already had a good run. So I would suggest if you want to enter, wait for a decline yet again close to the 690 mark. There is the convergence of the 200 and the 20-day moving average coming about around that level. On the whole, the structure from a near-term perspective turned very positive, but it's had a spurt. It's had a spurt from 520 levels all the way up until 720, 730 right now. So maybe the stock could perhaps see some sort of profit booking, and around the 690 zone, the entry point will become attractive.
Got that view, Kush. But, Shaina, the next question is coming your way. We discussed about pharma. You also gave your picks, but something specific on Natco, if you can give a view. Our viewer, GK, wants a 5 to 7 year investment horizon. He's bought it at around 1078. What would you recommend here?
Well, Natco Pharma is looking like, it could do well over the next 5 to 7 years, if that's the question, because, in fact, they have got good US FDA plans. And in terms of even their new launches over the next 2 to 3 years, they have got good tie-ups. So I would say, yes, even including GLP-1, so which is now target for the near-term launches. So they are a good supplier of API. So I would say if you're a long-term investor, you can be in Natco Pharma.
Okay, all right. So that's the view coming in on Natco Pharma. There is one question on Fortis as well. We don't have the name of the viewer, but okay, Meghna is asking this question and she wants to know if she can buy Fortis at the current level for the next 1 month. Kush.
Yeah, incidentally, this is a call that we gave out on our advisory, very recently. So my view then remains very constructive. On a daily charts, it's had a cup and handle formation breakout above that 950 zone. So as long as that sustains, I think the stock is in a good state. From a medium to long-term perspective, also I remain very constructive on the healthcare space, especially hospitals. But right now, from a momentum perspective, yes, you can add Fortis, from a 1 month time perspective. Keep a stop loss near the 920, 925 zone, and on the way up, the stock could very well move to 980 and about 1000 levels. So yes, it's given you a breakout. There is good momentum. You could add now.
Got that view, Kush. But the other question that we are getting is specifically on Action Construction. Now, Sankara Rao is actually holding shares at 1145. Now, Shaina, actually, the management spoke about, those Chinese imports coming in and has impacted Q3 performance, and that's very well visible in its price also down. Let's look at the 1 year chart yet again. What would you recommend Sankara Rao to do? Because he's asking if he should exit this counter now, given the underperformance. What would you recommend?
Yeah, I think it is better to exit. It's better to be in some of the larger real estate plays. So I would say exit. You could exit by something like either Godrej Properties. You have something like a Prestige. You have got good DLF. So you've got good options. So it's better to switch.
All right, the next question is from Nihal, who's writing us from Mumbai, asking about Dabur. He's got 2,200 odd shares at the level of 509. At what price should I sell is his question. Kush, your view?
Sorry, what's the buy price?
Dabur, and buying price is 509.
Okay, so a very recent purchase, I suppose, at least given the current price. I would suggest you should continue to hold. Now, the buying price, even though it's very close to the current price, should act as your stop loss. My concern is around the 525 mark. Multiple attempts, not crossed. Let me push it to 530 also. So that's the resistance band. Continue to hold. If 130 is taken out, you could see a spurt to about 555 levels, and that's when you should exit. So I would suggest a two-pronged strategy. One, exit close to the 530 level, which is resistance, partly booked there, and once that is taken out, you exit at the 555 mark.
Okay, all right. So that's the view on Dabur. We've got Sampath calling us from Chennai. Sampath, hi. A very good morning to you. I believe you have a question on a couple of hotels.
Yeah, good morning, Mahima. I have 200,000 to invest. I would like to know whether to put it in ITC hotels or Lemon Tree hotels. Which will be a better bet? I'm a long-term investor.
Okay, Shahina, your pick between Lemon Tree and ITC hotels is investing about 2 lakh rupees.
I would go ITC hotels as of now over Lemon Tree simply because of valuation. ITC hotels, in my view, at the current levels after this huge fall that we've seen in the last couple of months, I think valuations have become interesting. They've got about 13,000 rooms. So it looks interesting. Lemon Hotels, on the other hand, is expanding very fast, and they have also done well, except for valuations. So I would, maybe buy both. Divide your into 1 lakh each. One is based on valuations, and the other is based on their growth.
Got the view, Shaina. But the next, now it's actually time for the rapid fire round in this edition of Fast Profit. Shaina as well as Kush, you know the drill. The first question is from Murli, holding HBL Engineering at 800. What should he do with it, Shaina?
I would say it is better to exit from the stock because it looks expensive for the near term.
Okay, ITC is the next one. Lata wants to know as to what should she do. Her buying price is 322. Kush, your view?
Continue to hold. Keep a stop loss at the 305 mark.
Gautam from US is actually asking a question on SGS Enterprises. He managed to catch our KYC episode yesterday, so thanks so much for that, Gautam. But his question is, could it be a big multi-bagger? He's bought it at 1352, Shaina. How do you view the space?
I didn't get the name of this
SGS Enterprises, the auto company.
No, I don't track it.
Okay, BL is the next one. Sankar Narayanan is holding 340 shares at the levels of 68. Should he continue to hold his Kush, your view?
Yes, you should continue to hold. I would suggest a stop loss at the 375 mark, deepish.
K Fintech, Kush bought at 700 by Rekha. Should she book her profits right now? It's trading close to 1,000 now.
Yeah, you can book out of it, yeah.
Okay, ICICI Bank is the next one. Rajat from Mumbai is tracking it at the levels of 1415. What should he do, Kush?
Continue to hold. 1380 is your stop loss.
KPIT Tech, Kush, this query is directed to you by Vijay. He's asking a 6-month view on the stock. What can he buy at the current levels?
Thank you for that, Vijay. I would suggest buy 25% of the quantity at the current price. The rest you'll perhaps have to call in again and check.
Okay, IRCTC is the next one. Long-term view from buying at the current level. That is the question from Mr. Kamesh. Shaina, your view?
Buy it at dips, not at current levels.
400 shares Shaina bought at Swiggy at 400 yet again. What would you recommend right now?
I would say exit.
Okay, BrainBee Solutions is the next one. Anuj from Delhi wants to know as to what is the future of this counter. He's bought at the levels of 290. Shaina, your view?
I would say you could switch. It's expensive.
GETND Kush bought at 1500 rupees by Chandan. What should he do with this counter?
Fantastic. You should continue to hold. Stop loss positional at 3500.
Balaji Amines is the next one. Our viewer has bought at the levels of 1920 and 50 shares is what he or she has. Kush, your view on the charts?
Exit.
Samvardhana Madhasana Bell Rise. Shaina, what would you recommend Tejas to do for the long term?
Samvardhana, I would believe that over the long term it should be a decent hold.
Okay.
So you can hold that or buy it even at current levels.
Sirma is the next stock that Anjali wants to know about from a short-term target. Can she continue to hold, and what should be the target, Kush?
Yes, you should continue to hold. Keep a stop loss at the 810 mark. On the way up, you're looking at targets of 885 and about 925.
Okay, so that's the view coming in on Sirma. But with that, completely out of time, Kush as well as China, thank you so much for helping us answer all those 57 queries. We'll have to wait and watch out for whether we do hit the 100 mark today or not. We did yesterday,
We are a little way off from where we ended 11:30 yesterday,
but
unfortunately.
let's wait and watch. So 2 o'clock is where you go ahead and ask all your stock related queries and we'll help you answer them. But completely out of time in this edition of Ask Profit. Do stay tuned. KYC up next.
बिटिया की शादी है हमारी।
बधाई हो, बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. And let's start the show today. Interesting company I have got, but I'm going to give you some hints. Try to guess it. The first one is a company deals with API, but also medical devices. Interesting, unique company, and it was very difficult for me to find the peers. The second, the company recently won 825 crore order, and that is why the street is buzzing about it. Now I'm sure you're about to guess that, but I'll give you some more hints. Also, the stock is up 29% in the last 1 month. For a trader or someone with a 1 month perspective, they must have made money on this counter. And a fourth one also I'm giving to you for the Bollywood fans. Brand is endorsed by Kareena Kapoor Khan. Even Rahul Dravid is also there. in the key products. Let's give you all these hints, but remember the company itself is a pharma specific company, a medical sector company, and the company's name is Morpen Laboratories. This is the company we will talk about today in KYC. But the question is, why are we calling this company? The first and foremost reason is that 825 crore order win. That was one of the major news flows because of which the stock went up a lot over the last 1 month. This is the key details we'll be asking the management, that what is it all about, by when the money starts coming in, and other key details as well. But apart from that, we'll dig a bit deeper into this stock, the CDMO opportunity pipeline, what is it there? Because once you are in a big league, of course, there might be bigger market opening up for you. That's the question to be asked. The third one is the growth outlook for the medical devices. Is there a commoditization at play, or will that be some kind of an up move coming in the business outlook as the global trade issues is trying to settle itself out? Also, let's look at another why question, and that is the capacity addition. Any kind of announcement which would come in. Generally, the company doesn't give out a lot of corporate announcements, and that's also one of the reasons for me. A lot of viewers had written about to get this company in KYC. Tech spends outlook, how does it differ? That's also something which we'll be asking for. But apart from that, the international business growth opportunities, they have exposure. But of course, the majority, 50-60% exposure comes from Indian markets, but international also. What are the growth opportunities coming? And joining us would be Sushil Suri. He's the chairman and MD at Morpen Labs on the show, where he will clear a lot of doubts of our investors who have written to me. But let's talk a little bit more details about the company, what this company is all about. We have given you a little bit of hint, but let's give you the entire picture now. Now it deals with the API and the medical devices. And if you look at it, the company has 4 manufacturing facilities and it's present across 82 plus countries. Now that is a good exposure coming in. 800 products, that means the SKUs are on the larger side. Let's talk about how the medical devices are. They include blood glucose meters, blood pressure, it's called BP monitors, thermometer, ortho supports. This looks like a commoditized play, this segment, but let's see the revenue breakup, how things look. The API global generic segment, this is the Q3 numbers I've taken from their presentation itself. That's around 62% revenue coming in, and the remaining 38% is the medical devices. That's what we are talking about. But let's see how the geographicals play out actually. And India is having 64% revenue coming in. Asia, let's remove India out, that is also having a decent, almost 13% exposure coming in. The remaining for the 17% comes from Europe, and this is where one of the key questions lies, is after the European Union FTA, does the company get more opportunities going ahead? So this is the entire setup for about the company. But the recent order win is something you should be looking at. They have got a multi-year CDMO deal. Let's give you more details about it, because the entire street is talking about this and this only. Second is the value of deal is approximately 825 crores. That's roughly $91 million. And also, let's see if the name can come out of the client. No, it is not, but the company is a leading global pharma major. So Morpen Labs has not given the name of the client, but nevertheless, we can guess it if you can guess the company. The supply begins in 4 to 5 months. That will be pretty much interesting, and we'll ask Suriji about the timelines about this order win, because this is an inflection point for the company. That's what the company claims. The execution is running through Q1 FY28. That means it's going to take some time. Hold on. It is a 12 to 16 month process. The European trade deal, there are some questions I need to ask in our show, and I've started that. The European trade deal, now what's the benefit which comes in for the company? That's the first question. The second one will definitely be, will the focus move towards more of strengthening the CDMO pipeline? I'll say that because one of the key questions, the next one, will answer this query as well. Another big question for this company is, how will the revenue profile be in terms of exports going ahead? Right now, what are the exports are, and how will it change going ahead if the company wants to expand globally as well? Another big question is the medical device segments, and that, is it becoming commoditized? Is there any high margin value product at play, or market perception is making this business segment a commoditized business segment? CDMO, of course, has a good opportunities, and why the short-term debt has ballooned up, and when will this reduce? Is this a working capital measure, or is there something else to it? So these are the big questions we will be asking the management of Morpen Labs, and a lot of investors have written to me in KYC, so we need to address these questions as well. But let's also address you the format of the show, how it is, to simplify it when you judge a company in KYC rating. And for the first time viewers who are listening in, and also our regular viewers, I'll just explain it again and again. These are numbers. These are the holy grail of numbers where you judge a company. Just there might be a news flow, there might be an order flow, but at the end of the day, if the fundamentals don't work, then the thesis doesn't play out. The return ratios, that's also very much important. We see the ROC numbers, the ROI numbers, ROE numbers. That's where the magic happens. Shareholding, what the promoter has been selling, any institutional participation, changes of hands, street cred, क्या पैसा बना कि नहीं बना, be it long term, be it short term. That's the query we'll be putting this company across. Valuations, generally we compare it with peers, but the way the company is set up, they're having two business models, and other companies don't have that similar. And to keep it fair, I'm going to keep it apple to apple. That means only company's valuation across its history I'll take out, and the outlook for the company and the industry as a whole, we'll be talking about it. So 8 rating parameters are there where we'll judge Morpen Labs. Let's talk about the first one, income statement, and that's where the dismal numbers start coming in. Revenue, EBITDA, net profit, last 3 years numbers, all are in single digit. Now the concern starts coming in, because this is the first income statement which I have noticed that this is in single digit growth coming in. There is some respite in Q3 numbers, if you could just get them also to put that perspective, but just the PAT number and the revenue is also in single digit. The only small hope is that 28% jump which is coming in the EBITDA growth and a slight margin bump up coming in. Now, can the company maintain these margins? That's something to look out for. And let's just show the margin trajectory. It's been similar. It just normalized itself. Actually, it's a bit lesser also from its last year. That means it has just normalized. The pressure still remains. There hasn't nothing changed as much. That's why I've given you a bigger analysis of this segment, and that is where the concern comes for me. So income statement, it is a strong thumbs down. Let's talk about balance sheet. Balance sheet is very much important, and you must remember I had asked the question, is the short-term debt ballooning? Why? So we'll talk about that, and this is why the borrowing we talk about it. This is where it goes up from 29 crores, this goes up to 79 crores. That's a concern actually coming in. But net the cash balance looks decent. And one thing is good, which I find a little bit of comfort, and that is the reserves. That is around 1047 odd crore rupees. That means the company is keeping some kind of reserves, be it for a shareholder reward or for an acquisition or for something else. That is something, the question mark is there. But right now, to balance it out, I have given a neutral rating when it comes to the balance sheet. Come, let's talk about the cash flows. Cash flows are also very much important. At medical business, to be honest, there is no lumpiness of it, so it's easy to judge the company. Largely, there were some aberrations in FY23, FY24 also there was an issue, but FY25, this is a good move coming in. Cash flow from operation is something which I was watching out for. This data I liked. PAT numbers also have gone up in FY25, and that is where a little bit of strength comes in. Net cash flows, it's fine, it's decent, it's still doable. So net the cash flow management has been good. So kudos to the company. So a strong thumbs up when it comes to the cash flows. Let's talk about the return ratios. Last 3 years average we have taken out. Generally, you should expect 15 to 20% when you invest in a company like an API company or even a medical device. Slightly lesser, lower ROE is their expectation, but it's still on the lower side. And analysts also, I spoke about it, that's on the lower side. Remember, it's not tracked a lot, so very few analysts track it. And based on that conversation and my analysis, I've given this a thumbs down when it comes to the return ratios. Let's talk about the shareholding pattern. That's also very much important in every counter, and the way things move, you understand where the smart money or the dumb money is moving around. But let's talk about how the promoter holding has changed over the last, say, you could say 3 years. It was around 38% stake, still on the lower side, but interestingly it's fallen down. It's at 36%, and that's what, of course, market gets concerned and promoter stake is coming down. But let's talk about the institutional partnership actually is there or not. Generally for this company it's very low, but I've seen DI also reducing the stake. That's coming down to 1%. So 36%, 1%. Now one more thing I'd like to say is the retail participation is going, and at times it's not healthy that a lot of retail participants starts coming in. So that is why there's a caution or a word of thought when you talk about it. And when the holdings are going down, be it promoters and DIs, I'll give this a strong thumbs down. when it comes to the shareholding pattern. Let's talk about the street cred. Everybody is talking about that order win, and that is why if you are a trader or someone who heard this news and played this theme, congratulations, you made 29% in last 1 month. But if you're a long-term investor, your patience is getting tested. 6 months, the stock is down 7%. Let's play 1 year, the stock is down 10%. And also let's play the longer picture also. Suppose if you are associated with the company for last 5 years, only 50% returns has come in. That's actually lesser than what Nifty gives you in that period. That means the long-term investors haven't made money. Short-term investors on the news flow, order flow, of course, there is a good move. So to keep things balanced out, long-term investor loses, the short-term trader wins. This is a neutral rating when it comes to the street cred. So let's talk about valuations, and to be fair with the company and the peers and in my analysis also, I would like to get this company itself. I would like to see the peak, what has happened. 5-year data I have taken. I've taken the 12 trailing month P for my analysis. The 5-year peak was 91 times. Imagine. And now the 5-year average still at 31 times, and this is at almost a 50% discount, I would say 30 to 40% if you want to be very specific with me. It is just 19 times. That means it is cheaper, 19 times P. But why is it so cheaper compared to the industry standard or to its own standards? That is a big question to be asked. If you are a mathematics and you really like about valuations, but nevertheless it's cheap and mathematically this looks good. So I've given a thumbs up when it comes to the valuations part. Also, let's talk about the outlook. They have received one of the largest single CDMO mandate. That is a very important thing for the company, and they have expanded the global footprint and the long-term programs as well. So a lot of fundamentally good things are also happening with the company, but these are all futuristic. It's not coming in the numbers. The company is evaluating capacity additions also, and it's pretty much interesting. But some concerns also definitely come up because there might be some overhang in the stock because it's not performing. There is a lack of quantifiable guidance coming in. That's why the street keeps on guessing about this stock, what will happen next, apart from the news, because numbers also need to come. So to put perspective in a very balanced way, I have given an outlook of a neutral rating. But let's add up. Let's revise all the ratings for KYC and see where does Mopen Labs actually stand. So let's get in all of these criterias, and then we'll talk about how things are moving. The first and foremost is the income statement. That's a big concern coming in. No major CAGR growths are there. Even Q3 numbers were very mixed. Balance sheet is decent, especially if I talk about the short-term debt concern is there, but reserves is holding up. Cash balance is decent. Cash flow has done well. It's lumpy, but it's in the favor of the data. Return ratios are, could say, a little bit dismal on that. Shareholding, that's negative. I have given street cred neutral. Valuations, of course, after so much correction on a long-term investor, valuations become cheap. Outlook still neutral. Company needs to come out with more numbers and talk a lot with the investors and stakeholders. So as of now, Mopen Lab gets 3.5 out of it. Generally in our average, this is a bit a lower side. So company needs to come up and do a good homework as well, and to give us the entire perspective also. But with us would be Sushil Suri. He is the chairman and MD at Mopen Labs. An interesting trivia about him: he has over 30 years of experience in pharma industry, and no, he doesn't have a pharma backing. He's a qualified CNM fellow member ICA. Imagine someone running a pharma company and he's a chartered accountant. It's a very deadly combo of man wearing different hats. And of course, joining us would be Sushil Suri. Good afternoon, Sushil ji. It's always a pleasure to talk with you. This 825 crore order, that's what the street has got excited, about the company. Just could you give us the details, by when the money starts coming in, timelines?
Sharad, thank you very much for giving an opportunity to speak on this platform. So basically, this first mandate from a regulated market is just beginning of the new positioning of the company. So company had been quietly working with multiple regulatory customers. And of course, the idea was to get a more structured customer program instead of a spot business, which we had learned over a period of time. But now, with all the regulatory skills, with all the, I would say, whether QC or infrastructure or patents or DMF, with all the knowledge, whatever we had acquired, we have been able to get the validation from a multinational, and that too for a long-term supply contract. And these type of things are, this is just a first order from one customer, and we expect the pipeline to grow as we continue. So this is a big change for the company, and I'm happy to see that, okay, the people are also responding. We're getting good feedback from the customers and suppliers everywhere.
And Sushil, just to dig deeper, this is first of many. That's what I'm trying to gauge from your commentary. If it is first from many, can we expect something more? And if yes, anything in the next 1 or 2 quarters, any large announcements coming in? Because it's clearly looking like that CDMO pipeline is something which the company is focusing on.
Yes, Sharad, basically CDMO, and actually these are very long-term programs. And these involves a lot of regulatory, chemistry, and of course infrastructure discussion, and of course, and end of the day, there are commercial discussions. So I will not say that it is coming tomorrow, and the pipeline is not built overnight. So even this first order has taken a couple of quarters to see the light of the day. So certainly, but what the major thing you have to understand is that CDMO programs are not spot programs like our quarterly results. So big companies, they work for long-term supply chains, they work for resilience, they want stability, and of course, they want continuity. So with the global scenario, which is being realigned to adjust to the fluctuations which are happening globally, so we have been able to fit ourselves into the customer's thing. No doubt that there are geopolitical things, but ultimately it's a compliance. So we have been compliant, and we had good experience in manufacturing, good experience in regulatory, good experience in handling the FDA queries. So we have, I would say, we have been validated. That's only I would say. So I won't say much more to come, when to come, but we have taken a new track now.
Exactly, but your smile says something else, but we'll come to that later on that. But the numbers, let's talk about numbers. You're a man of numbers also, apart from pharma. And the margins I'm talking about, it's back to its long-term average. That's that 9.5% ka margin, which everybody talks about. You're back at it. Now, why did these margins go up? What are the levers going ahead? And by when we can see that 10% margin touching?
Sharad, the last couple of years, of course, we all know that global things were not in anybody's control, and we have been trying to readjust our revenue mix. So the whatever revenue mix we had, certainly we had to work within that. But going forward, obviously, we are changing the quality of the revenues. And once the revenue quality shifts from a spot business to a long-term customer-driven programs, which are more structured, then we get better visibility of supplies, we get better visibility of revenues, and of course, we get better visibility of the costs also. So that way, I would say the margins is least to the worry today. Today, the worry is to build a long-term pipeline of the stable business, which we had been pursuing for the longer time. But obviously, for some reason, it took longer than usual. So we are looking much more opportunities in the business of long-term supply contract, which certainly the margin profile will be much better. And you are in the industry, so you know what kind of margin profile these CDMO companies enjoy.
Exactly, and maybe a little bit of internal efficiencies come in and we can see the double-digit mark. But Sushilji, let's talk about the European Union business. There is a decent, a sizable chunk of revenue coming from that segment. Now, why I'm talking about this is very simple. There's an FTA which is already done with the European Union. And a lot of benefits come in the pharma space also. And we'll talk about medical devices a bit later. But just want to get your view on it, how the business has changed. Has the supply chain management changed? Are the inquiries coming more from Europe? Because that's the market which I'm really liking right now. So your view on that, what's happening with MOPEN with that?
That way, I would say, Sharad, the European Union had been always our favorite market. And of course, we have good presence in most of the countries. And it's constituted around 20 to 25% of the total export business. But what we see lately is that there is a better confirmations. Whenever the deals were in transit or these were in discussions, so we always had to fight with, I would say, compete with China. So I'm not specifically saying China, but in general. But now with this deal coming through, there's a clear advantage India has got versus China. So we have 11% better margins as compared to China. I would say tariff margins. So that way the customers are seeing that. More importantly is that after FTA is being signed now everything is in place. So uncertainty is over. And like I told earlier, the customers are looking for more term relationship, long-term relationships and more structured programs. So that is what is now helping us. So when we have uncertainties, and might have seen in other businesses also, uncertainties are in nobody's benefit. So what this deal has done is that, okay, it is giving a stability to our thoughts, it's giving stability to the vendor or to the buyer and even to the vendor.
Okay.
So this is good, happy news for all of us.
Exactly.
And 11%
So, yes,
advantage.
right. So uncertainty is something which nobody likes, and if certainty comes, business also comes. But just to get in more details about the export segment, now if the global trade certainty is slowly coming in, right now you are having around 60 to 62% of revenue from India. 3 साल के बाद, now what happens? The export profile or the domestic profile, does it change from 60 to 40 currently, let's put it, or is it becoming 50-50? What's the number?
To put the things right straight, in API, our 70% of the business comes from export, and the devices, of course, is 99% domestic only. So within the API business, today export is 70%. Going forward, I would say it may go to 80% in 3 years' time, because with this long-term CDMO programs, our exposure to the global regulated market would increase. And of course, we have limited resources and limited capacity. So we will have to let go some of the low yielding business in the domestic market. So that's one aspect. Second, of course, is that as we go for the longer term contracts, we may have to add, I mean, whatever new business will come from that will come from this angle. So overall export profile will go up.
All right, let's talk about a little bit about the numbers also, Sushilji, and then of course we'll talk about medical devices also. The numbers I'm looking at, the short-term debt has ballooned up. Is this a working capital requirement, or is there some adjustment? Just want to get a little bit of clarity here.
Sure. As you know that for last 25 years, we have been a zero debt company. So this was one of the, I would say, planning of the company, that we do not have any banking arrangements with most, for last 25 years, we have been operating like a small scale company in current accounts. So we had retained one banker last year. And of course, it was a bit higher cost. So now we are replacing the high cost debt with the low cost debts. So of course, there's a
right. And Sushilji, what will be the interest rate dates of this high cost and the low cost, if you could share?
The high cost was around 11.5 to begin with. Of course, we are negotiating with them also. Then the new rates are between 7.5, 8.
Okay.
So there's a 3%. So
exactly. That means if this happens, the finance cost comes down, and maybe we get a PAT bump up also in the coming quarters as well. Am I right?
It's nominal, though we do not have a large debt stack. Okay. So we just, I would say, on a 2,000 crore asset base or a revenue base, we just have around 140 crore debt, which is nominal. But the whole idea is to build efficiencies. And as you would see, if we have a 800 crore order in hand, we need to prepare ourselves for the inventory, stocking, and of course, there has to be some capacity balancing, which we are evaluating, because commitment higher levels are required. This is a serious business. We need to be having serious commitments here also.
Exactly. Just as a student of a pharma sector, I just want to ask you one simple question. This entire CDMO play, you talk about long-term story, it is there. So it's like what, 4-year, 5-year, the R&D comes in, everything comes in with approvals. What's the total timeline looks like for a long-term order? Since you already got one, you have given us 12 to 16 months on the exchange filing. But as an industry expert, how much time does it take to actually go from, start to finish?
I would say usually the cycle for our kind of industry, we are not in CRO. There is a difference between CRO and CDMO. CRO is more research oriented. So there it sometimes take 3 to 5 years, because the product is still not in the pipe, is not evolved, not commercialized, and small quantities are there. So we are coming as a CDMO. We have got tons and tons of capacity. So we are, I would say, more closer to the market delivery. So typical period would be, I would say, 15 to 18 months from beginning to end to get the order. And of course, to supply the order is another thing. So we come as a player which have ready-made capacities available, FDA approved. Many of the CROs, or even I would say research companies whom these regulated companies work, they do not have capacities. They offer just a package. They make dossier and they say, okay, this is the 5-gram dossier and this is what it is, or they can give you one sample.
Right, Sushil ji.
So if someone wants just say 100 tons of material, you can supply that.
Right, Sushil ji. You have given us a good industry perspective also and cleared a lot of doubts also of our viewers. Thank you very much for tuning in and giving all your answers to the company and the industry as well. Of course, we spoke about the management and the company's growth strategies, and long-term investors' patience has been tested in this stock. But remember, the company might be going under an inflection. First time they've got a CDM order that big size. So if that happens, maybe a good up move might happen in the future, but we need to see whether the company delivers numbers or not. So that's all, folks, from Open Labs and KYC today. Stay tuned to NDTV Profit.
बिटिया की शादी है हमारी।
बधाइयों बधाइयों।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
the expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company.
It's a tepid day of trade on Dalal Street. Nifty tests 25,500 while benchmarks hover near day's low. FMCG and PSU banks on the back foot. Pharma and IT remain resilient. Sanofi Consumer on a tear, a good set of numbers in the fourth quarter. Revenue jumps 47% while the export sales grow owing to a lower base. Cholamandalam investment in the spotlight. Murugappa Group's Velayan Subaya strikes a long-awaited family settlement. This clears the way for him to exit his stake in Cholamandalam investment. Yes Bank's multi-currency forex card has been hit by a major fraud incident. This affects more than 5,000 customers and is linked to a Latin American merchant. Reliance Group's Anil Ambani on ED's lens appears at ED's office in the national capital for a second round of questioning in a money laundering case. This after the agency attached his Pali Hill property. US and Iranian officials are set to meet in Geneva for a third round of indirect talks today. The discussions come amid the largest US military buildup in the West Asia and with Iran vowing to respond to an attack with force. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar and let's take a look at the markets at noon today. And yes, it's a debit day of trade, but still holding on at reasonable levels when we talk about the market. So Nifty 50 is really showing some momentum with a slight bit of recovery seen in last few minutes, but still has been on the downward momentum. So there you see Nifty 50 at 25,486 levels. It was holding on strong on 25,500 levels for a longish period of the trading session today. So inching at the lower level at the current moment. When we talk about some of the trends that are really picking up in the market in terms of the sectoral play as well as the contribution to Nifty 50. Take a look at the banking space from there. ICICI Bank is the top gainer, adding about 8.5 points. Apart from that, some of the IT with the momentum of recovery seen from yesterday is also really supporting it today as well. Infi as well as TCS adding about 5 odd points to Nifty 50. But apart from that, there is negligible gain and there is more red on the screen as you can see on the heat map. So HDFC Bank, the biggest drag along with the largest bank, State Bank of India, and some of the PSU companies like NTPC, Power Grid, as well as Coal India are some of the draggers in trade. Also to remember that the consumption companies like Trent are also really a drag in the market today. Nifty Bank is also on the flat line with a negative bias. So keep an eye out on that. A large amount of drag is coming in from the heavyweight that is HDFC Bank on the banking front. In terms of the sectors, pharma, defense and IT as well as auto doing well, while on the downward trend is also Nifty Media as well as FMCG consumption is taking a beating. PSU Bank also continues to see profit booking after a great run that we had seen in last many trading sessions. Energy also down in trade. So that's the picture really coming in from the market at the particular moment. And Devin Choksi joins in with more expertise on the market. Devin, always a pleasure to welcome you on NDTV Profit. Looking at the current volatility and a little bit of directionless market, Devin, for the last few trading sessions, is the uncertainty on the global sphere really impacting our Indian markets, though we have seen some FII, buying really come into the market?
Yes, good afternoon. Well, I believe that the market has basically been moving with a very narrow focus. Of last few weeks and months, if you noticed, I think some of the sectors which have participated in the market vis-a-vis the others who did not participate, they include metal, they include public sector banks, and they're largely driven by some policy changes from kind of developments which are happening within those sectors. For example, public sector banks are basically now driven under the tailwind of the consolidation exercise that the government is proposing to bring in, and wherein some of the larger public sector banks will probably invite the smaller ones to get folded into them. So that's a theme on which the market is getting a little bit more excited at this point of time. That's where no wonder they are buying the public sector banks portfolio. Metal, another story. On one side, the demand scenario is emerging very strong. On the other, both for white metal as well as for ferrous metal. And at the same time, the higher amount of input of electricity, which is renewable source, which is systematically bringing down the cost structure, improving the margin for the companies. So such themes are playing around in the market. Across the market, I think I agree with it that entire market is not moving. Only few themes are playing around. Like IT with a negative theme, which is right now because of the AI related attack which has happened on most of the IT companies. So
Yes.
such themes are playing in the marketplace. I agree that I think it is in a way I think a sideways market, but at the same time it is full of opportunities, I must add.
So when you said, Devin, that it is full of opportunities, I want to catch you on that point. Where are you seeing the opportunities at these current levels for medium to long-term investment?
Yes, absolutely, Nisha. I think what probably you are observing out here,
Yes.
some of the large companies are sitting on the bank of opportunities. I think they are unfolding some of the larger programs. Say, for example, largest company Reliance. I think their amount of money that they are investing into the new generation of businesses, this particular opportunity is becoming a sizable opportunity for one to buy into, largely because of the fact that you are basically buying a business which is going to be a global scale business eventually. Similarly, I think you find some of the banks like SBI for that matter, or even some of the largest NBFCs like Bajaj Finance, who are actually driving the entire business on their size itself. Bajaj Finance, for one, I think has started employing the AI to the next level, which others are still not, I think, figuring it out. But they have employed AI to next level. Today, in last quarter, I think 10% of their AUM was funded, I think, through the client acquired through the AI mechanism that they built in. So, in my viewpoint, I think the things are looking quite different for some of the larger companies. So that's where I believe that opportunities are there with some of the large companies, and we believe that the theme of big is getting bigger is now actually playing out. The companies like Reliance, for example, which we discussed, I think 2 lakh crore EBITDA making business, I think is suggesting that next 4 years or so, they are basically going to double the size from 2 lakh to 4 lakh crores. Similarly, I think companies like Bajaj Finance, which you talked about, I think 25% compounding in the business. It is the size which is helping them to grow at this pace. I think vis-a-vis some of the small and mid-sized players who are struggling because they are not having adequate amount of ability to execute. These companies are executing well. So that is why I believe that I think the large big is getting bigger, and that's the opportunity that we see here.
That's a great theme that you mentioned, Devin. And you also expanded the AI conversation from only IT companies pivoting into the AI, thrust to bigger companies adopting with their deeper pockets and also bigs becoming bigger. So that's the opportunity we are looking at. Of course, Bajaj Finance has been known for its disclosures as well as the internal mechanism of data analytics, which they have been using, and the street has really rewarded them. On Reliance, when you mentioned, just last evening they have announced that they have formed a subsidiary level joint venture with Meta Platforms under Reliance Intelligence for more AI thrust, and the sense is that they could be doing AI partnership with many companies. So yes, big becoming bigger also because of the deep pocket. But Devin, my question on the IT sector, even though we saw a huge amount of recovery, there was a huge knee-jerk reaction for several days of weakness. How do you see the Indian top 5 IT companies and the top 5 mid-IT companies pivoting into IT, into AI space, and whether it makes for any investment sense at the current moment?
Yes, absolutely. The great question. In fact, if you look at Indian IT companies, up till now, I think they have been employing their skills largely in the area of consulting and consulting-based assignment, I think where they would be doing coding and ultimately bringing down the production environment in form of softwares and then maintain it. So that is a typical model which Indian IT companies have been following. Now, the given situation of AI, I think consulting and post-consulting the coding, this part is assumed now with the AI kind of an application which today we are having. And most of the Indian IT companies are adapting to AI way of working so that I think they cut down the time to delivery of the software. And then ultimately by employing agentic AI, they also maintain it so well. So they are cutting down that time. Now, this is one model where I think they are transitioning. But the other model which the likes of TCS has started adopting and likes of Infosys has started adopting is an infrastructure model. Here they are putting across the data center. for compute, and that is where probably I think they are now going into the asset based model as against I think the asset light model that they have been operating. So this is the second model which is probably emerging now, which is asset based model. The third model, which is expected to get evolved, and as I see it a possibility, very likes of Infosys who have joined hands with Anthropic, they are basically trying to create the IP related solution, that is the product related solutions. Look at the world, how the world has evolved. Today, Google Alphabet would have products. I think on those products, they are generating the businesses. Similarly, there are many companies, even IT backbone of Amazon, product-based delivery of services. Indian IT companies haven't been having the products. And today, because of the onsurge of AI, Indian IT companies, because of the domain knowledge of last 30, 40 years, could possibly start bringing up the new products. So I think I'm really hopeful the transition is going to be a meaningful. Of course, nothing is going to be seen tomorrow, but I think most of the companies are likely to bring a good amount of transition in the IT space as I see it.
And that may change the pecking order in future according to the capabilities that they build in this particular space. But very well explained the way IT collaboration is also taking place to pivot into the new space. Deven Choksi, always a pleasure to take your perspective on NDTV Profit. Thank you so much for joining us here.
Thank you, Nisha. Thank you so much.
Thank you so much. Moving on to an important corporate development amid the ongoing probe into Reliance Group of companies, Anil Ambani appeared before the Enforcement Directorate today for a second round of questioning in connection with an alleged bank fraud-linked money laundering case. In fact, Anushika Garg, who's our colleague, joins in with more details on the developments at ED. Tell us.
Anil Ambani has just now entered the ED premises to join the investigation. This is the fourth summon that ED had in fact sent to him. Previously, Tina Ambani was also summoned by the ED. Second time the summons was given to her, but she did not join the investigation. But now we are seeing Anil Ambani, who has just now entered the ED premises. We are showing you the visuals of the arrangements that can be seen just outside. ED has also provisionally attached the industrialist house name abode worth rupees 3,716 crore. Now the total attachment against Anil Ambani and his group of companies stands around at over rupees 15,000 crores. And also ED has, in fact, now we are seeing Anil Ambani, who will be joining the investigation soon after he enters the premises. We are seeing that ED had in fact summoned him in an affidavit to the Supreme Court. Anil Ambani had assured that he will join the investigation. His counsel, who's a senior advocate, has also assured that Anil Ambani will not be leaving the country. But yes, we are seeing a 7-member SIT team that has been formed by the investigating agency so that they can probe further in this case after the Supreme Court's guidelines. We are seeing that in this case, ED and CBI both are working parallelly so that it can be in fact ensured as to who was responsible for the loan evergreening and also the 40,000 crore rupees loan that was in fact taken by the ADAG group companies. Not just that, we are seeing that in this whole case, Anil Ambani's, RCOM's, former director Puneet Garg, who has been in fact taken into custody by the ED regarding the Mumbai property that was in fact sold without consulting to the CRZ officials so that they can in fact take into account as to what all was happening. But today is going to be significant in this case, this whole Reliance ADAG group companies, a case where in fact there has been allegations that multiple loans evergreenings were in fact being done. There was a quid pro quo arrangement between the Yes Bank's officials and also Anil Ambani group companies where loan evergreening was being done. No proper authentication of the address and all the formalities were done and loan was in fact given to Anil Ambani without proper authentication of the details. But yes, we are seeing that in this whole case now a significant development that can be seen. Anil Ambani has joined the investigation today. He has just gone inside the ED headquarters, after which questioning will be done and it is going to decide whether or not how he is in fact cooperating with the investigation as to what all further actions can be in fact taken. Yesterday was also significant in terms of the developments in this case, where a board, which is a house in Pali Hills of Anil Ambani that is worth around 3,716 crore, that has been provisionally attached by the ED. Today also in investigation, several of the questions will in fact be asked to Anil Ambani regarding his involvement in this whole case and as to how loans evergreening was being done, whether or not he knew of the fact that these kind of things were in fact going on inside the ADAG group of companies. And now we are seeing that he has in fact joined the ED headquarters in Delhi. He has just now entered the premises of the ED. He will be in fact going he's in fact going to be answering to all the questions that the ED is going to pose in front of him regarding his involvement. And yes, we are seeing that for the former director of Arcom, Puneet Garg, who has in fact been arrested, he might also be confronted with Anil Ambani, whether or not the kind of involvement that had in fact been seen in this whole case. Over to you.
All right, important corporate development there, and Anushka Garg there reporting from outside the ED office. Let's also take stock of the market. Which are the stocks that should be on your radar? My colleague Jasmeet gets us the entire list. Jasmeet, what makes it to your list today? Tell us.
Well, Nisha, thank you for that. I have 3 stocks in my radar for today's trade. The first one is Sanofi Consumers. Well, the company posts a very strong Q4 numbers. If you look at the overall trajectory, this is the second consecutive quarter where they have posted a strong growth, and the growth was driven by the overall segments. While if you look at the overall domestic sales, that grew by 23%, while the export majorly grew in this quarter by 9 times, given the base was low in the previous quarter. While in terms of key financials, revenue is up 47%, while the EBITDA is up 44%. The margins have come in line with what was in the previous quarter, and net profit saw a jump of 50% at 66 crore. But the next stock on my radar is United Spirits. Well, this stock is in focus, given the parent company of this particular stock saw a weak numbers in the financials, and the stock fell 13%. The Diageo stock fell almost 13% yesterday in trade. That's the reason why the stock is in focus. Though the management remains very constructive about United Spirits, and they see good volumes and good amount of sales coming in from the prestige and above category, and they remain positive, constructive, but the stock still remains focused, given on the back of weak guidance by the parent company. But the third one is IRFC. This is on the back of the OFS. While the company gives an update that they won't be applying for the oversubscription option of 2%, given the undersubscription rate, and that's the reason why the stock is in focus even today.
All right, Jasmeet, thank you so much for getting us the entire list of stocks that are really making it on the list today to be on the radar. All right, let's also get into an interesting development and something that needs a lot more perspective. We know that private credit, and that as a space, has been growing pretty fast in the country. Many listed companies in the financial services space have really entered and taking the opportunity in this kind of business of private credit. Now, let's talk about also globally the risk that has really emerged from one of the large giants in the private credit space, where the redemption pressure has hit that particular company, more owing to the AI thrust in the software space, where they have 70% of the portfolio. So that's the crux of the issue that has emerged globally for a space of private credit, which is growing well in India. In fact, Srini Srinivasan, who is the managing director at Kotak Alternate Asset Managers, joins us now. Srini, welcome to NDTV Profit, and to this important discussion. We have had several long discussions about how private credit can really grow as a space in the country, and also where it gets underserved by the banking systems. Private credit can find a big business opportunity. Does this, what do you make of the global risk, concerns that are really cropping in this particular space? And then we'll talk about the India-specific business and its impact.
First of all, I think the opportunity set in India is just about starting. And as you rightly mentioned, there are many areas in which the banks either cannot provide credit or are unable to provide the right kind of credit solution, which is where private credit steps in. With regard to what's really happening in other parts of the world and the example that you talked about, the India market is very different compared to what goes on in the rest of the world. And in many of those funds, in the example that you just talked about, they have periodic liquidity windows that they have assured their investors. And these liquidity windows can be for a certain percentage of their capital commitment. In India, that kind of product is not permitted as per the SEBI regulations. And the ability to provide liquidity by borrowing from the banking system or other lending markets is also not there for the funds in India. So in that sense, the way the architecture of the private credit market is there in India, it's quite different and insulated from these kind of systemic risks.
That point vehemently taken here, Srini, that that particular concern that is happening globally in private credit space is not also, like Indian market is insulated from that. When we talk about the India private credit opportunity, another important aspect is also that it's not the software and tech companies that we are really looking at for an opportunity in India, and the nature of the companies that private credit really serves is very different.
Yeah, I think the trigger point in this particular example, because the underlying portfolio was essentially software and AI, is not the important factor. And as you rightly said, the domestic private credit funds are not really lending to that particular segment. Having said that, the trigger point could have been on any other global event where suddenly you have a situation where a number of investors are exercising the option to get out of that particular product or fund. Now that is exactly the asset liability mismatch which this particular fund has run into. Now, if you have an underlying portfolio of illiquid assets, but you are providing liquidity on your liability side from which you are financing it, you're bound to have these kind of scenarios playing out at some point in time or the other. One was thinking that this might play out much later, but it has happened much sooner. And
That's
India right now is away from this kind of because the product
also,
doesn't
Srini,
exist.
so Srini, very differentiated, insulated this particular product in India, and also it is at a very nascent stage with opportunity for more growth. Thank you so much for clarifying this particular aspect right here on NDTV Profit. Always a pleasure to welcome you here. Thank you so much for this quick discussion and clarifying this particular matter. All right, now I'll hand it over to my colleague Mahima, who's got the management of Sami Hotels with her. Over to you, Mahima.
Right, thank you, Nisha, for that. Well, Sami Hotels has been in focus, on the back of its arm getting sanction from the Karnataka Industrial Area Development Board for plans with regards to the Bangalore land. It's a second hotel that they'll develop with 235 odd keys. To discuss as to how this will pan out, and to understand as to what this means for the company, we're joined by Ashish Jakhanwala, who's the MD and CEO of Sami Hotels, joining us now. Ashish, thank you so much for taking out the time. My first question to you is with regards to this sanction that you've secured. What is the kind of capex outlay that you're planning with this development coming in, and what is the kind of expected growth that you're expecting from this particular development?
So yes, we had acquired this hotel in 2025, and an existing operating hotel, which today operates as Trinity. It's listed on Marriott.com. Adjacent to that hotel, we're developing a new block which will be branded as Westin, which is 235 rooms. The total capex for the new block will be in the range of about 300 crores, and it will be all funded through internal accruals.
Okay, and what is the expected construction timeline, and when do you see this meaningfully contributing to your EBITDA?
So I think since we'll start work now immediately as we've received approvals, we should give it about 36 months for the hotel to open. So that would mean this hotel should open towards FY29, FY30.
Got it. Ashish, from an industry level perspective, we've been tracking the story that largely the growth in the industry has been coming in from the average room rate increase. But for you, occupancies have remained at a healthy level of 73% this quarter. You've also seen an uptick in occupancies, which has not been the case for a lot of companies. Do you think from this percentage, there could be an improvement from here on? Because I believe the global industry average is 75%, if I'm not wrong.
Oh, absolutely, yes. So I think don't forget that last quarter, for instance, almost 2-3 weeks were impacted by the airline crisis. If that was not to be the case, I'm quite certain occupancy levels would have been 75%. And if you're comparing India to global markets, actually our capabilities are to deliver high 70s to early 80s, because Tuesday, Wednesday, Thursday, we are doing almost 80% plus. Our weakness lies in the weekends. And as disposable income grows in India, discretionary spend starts, people start traveling from one city to the other city for a sporting match, rock concert, just to see the city. And the weekend occupancies cross 70%, 72%, which are right now at mid-60s. I think India, when the demand density can deliver much higher occupancy levels than some of our global peers.
Got it. Ashish, Jan suggests that, and this is dealer checks suggesting that there has been a slowdown in January in terms of where the demand goes. But brokerages are also suggesting that Feb and March will make it up for the loss that we've seen in Jan. You were also expecting a strong Q4. Is that reading correct?
Oh, absolutely. I think there was a slight disappointment. Actually, not disappointment. Maybe 3 or 4% below where we expected to be, largely on account of the fact that the school holidays in North got extended beyond 8th or 10th. But February has already made up more than enough for those 3 or 4% deviation to our expectation. So I think quarter 4 will turn out to be a strong quarter. There's no doubt in my mind about it.
Got it. Strong Q4 is the expectation coming in from, Ashish. Ashish, thank you so much for taking out the time and speaking with us at NDTV Profit. With that, back to you, Nisha.
Thanks so much, Mahima. And with that, completely out of time on Markets at 12. Thanks so much for tuning in.
New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Heenal Dadia, and Sharad Dubey, who's standing at the NDTV Profit Market with all the action in the markets today. Sharad, over to you. I mean, interesting day of trade. That consolidation is something that continues.
Exactly, that's the right point, Hiral. Thanks for that. Largely, we saw yesterday a good short covering coming in, but we are expecting some good up moves because the expectations of FI's DI slow is something we are looking at. But today itself, the opening was good. but a good correction coming from the day's high level, but a minor up move coming in. But remember, we'll see a lot of volatility in the day's trade today. There is Sensex monthly expiry at play also, and at times the big guys don't let the small guys make money. Nifty Bank, let's talk about that also. Is it mirroring Nifty? Let's see overall how the technical setup is looking like, and yes, it looks exactly like that. That means your larger private banks are also not supporting. Let's talk about the key triggers. What are very much important to track in this day's trade today? Sensex monthly expiry is at play. That is something you should watch out for, especially the last 90 odd minutes in the trade. Options data is suggesting a range bound move. Even the VIX has actually cooled off, so better good option trade may not be possible for the retail. The medium term technical setup is still maintained for both Nifty and Nifty Bank. To put that in perspective, it's the buy the dip strategy holding up right now, but it's a medium term setup. Short covering continues for the second straight day in the IT space, and that's actually coming off, and that's a technical move, to be honest. The mid cap is outperforming Nifty index, and even the small caps, that is where we are seeing a good value buying for the second straight day. At least it's in the positive. The global risk on sentiment is there, the AI trade which we spoke about in the IMO, and now also we see that is also playing out. FI support may continue going ahead. There's a good cash market buying. FI shorts are also below the 80% mark. So nevertheless, market is breathing a sigh of relief right now, but we can expect a consolidation in the day's trade today. Over to you, Hiral.
Thank you so much, Sharad, for that. So consolidation is the keyword in today's day of trade. Let me take all the viewers through the watch list. Tata Motors PV. Strong volumes with the Shriram Finance, which has hit a 52-week high. Profit booking coming in on a Coal India, and the volumes very strong when it comes to Eternal. Sanofi, again, the company has actually reported a strong set of numbers, and that's the reason why that stock is buzzing in trade, along with the KSB, which is also seeing some good strength on the back of earnings. Jyoti Structures is at a 3-month high, and a SpiceJet has actually rebounded in trade after the block deal that we saw in yesterday's session. Balu Forge has signed an accord with NATO, and that's the reason why some strong moves on that one, and there is a block deal of 663 odd crores that has happened on a Home First. Chola Financial, Valian Subaya to exit. That's the story on the streets. What's cooking there? And you have a E2E Networks, which has launched a QIP. Diageo has lowered its guidance, and that's what is putting pressure on our United Spirits. And you have Aditya Infotech, a block deal, a buzz in terms of that counter in trade. So these are the stocks we're watching out for. But let me go across to Sharad, who will take the rapid fire with Osho Krishnan of Angel One. Over to you, Sharad.
Thanks a lot, Hiral. Good afternoon, Osho. Always a pleasure to have you. We'll start our rapid fire. Buy, sell, hold. That's the mantra. But in a very short term period, you're going to talk about it. The first stock is Tata Motors PV. The stock is doing well in the trade. Of course, the long term issues are there regarding JLR, but the volumes are slightly picking up. Is this a bottom fishing happening? And if yes, medium term setup for it?
Very good morning, Sharad. So overall, I am quite bullish on TMPV, and expecting that with the kind of double bottom breakout, the counter can see a kind of a 415, 420 kind of zone on the higher end. So one should stay invested and even can add more in this counter.
All right, the next stock is Shriram Finance. Of course, the stock has run up a lot. What's the important levels to look at right now?
For Shriram Finance, first level to watch out for is 1100. If it persists above 1100, then we can witness another movement towards 1125 from short-term perspective. While on the lower end, 1040, 1045 remains a very strong support zone for the counter.
And the next stock is Coal India. Slight dip coming in this counter, and buzz in the street is that the February dispatches might be on the lower side. Your views on that on the technical charts?
Any dip in Coal India should be seen as buying opportunity. 415 to 420 is the accumulation zone for the counter, so one should stay invested in the counter. 475 to 80 will be the medium term target for Coal India.
All right, the stock we used to talk about between 300 to 320 levels, that's Eternal. Now it's in that 250, 260 range. What are the key views right now on that?
It has become quite bearish as of now. There has been a kind of a A-shaped breakdown in the counter, so I'm expecting that any kind of further plunge towards the zone of 225 to 30 might support the counter, but at current levels, better to avoid, wait for stability, and then can start accumulating Eternal.
Okay, on a micro cap, Jyoti Structures order wins are coming in, and large investors are again lapping up this counter. It's at 3-week high, 3-month high level. Sorry, your views on that? Is it set up for a positional up move going ahead, or you'd avoid this counter?
See, firstly, it's a penny counter, so technical perspective might not work very positively or very accurately in the stock. But I expect that on the levels front, 1450 to 1650 is the next potential resistance that can be seen in this counter.
All right, and a large, blocks were moving yesterday's session, SpiceJet, and again the investor interest and even the trading community interest has come in this counter. Your views on it?
From a longer term perspective, one might look for buying opportunity, but again, the technical front is quite oversold. So some relief pullback can be seen, but on the higher end, 2022 is the first potential target that can be seen in this round.
Order wins and tie-ups, Balu Forge is in focus. Your important technical views on that?
For Balu Forge, I am expecting that with the kind of recent traction the counter is into, there is a possibility of a revival in the counter. Although the first hurdle is 510, 515 odd levels, so one should wait for those levels to get surpassed. If it happens, then 620 would be the target from short to medium term perspective.
Osho, the next stock is Home First Finance. There was a block also early in the morning, likely a PE seller. Your views on it? The stock is down. Good buy, or you'll see more stop losses on that?
Overall, I'm expecting a kind of a strong momentum in the counter in the coming period, but there is some volatility in last 3 trading sessions, so one should wait for a consolidation zone. If it consolidates or stabilizes above 1200, then one can look for buying opportunity in this.
All right, that's the rapid fire for you. Over to you, Hiral.
Thank you so much, Sharad, for that. Osho, stay with us. Let me first just address the clarification that is coming in from a Chola Mandalam investment. What they are saying is some media reports were indicating Veli and Subbaiah's exit, and those reports are factually incorrect. Apart from that, that's the key statement, in fact, that's coming in from the Chola Mandalam investment company's corporate communication team as well, that the exit report is entirely baseless. He continues to be the executive chairman at, Chola Mandalam Investment, and the exit report is factually incorrect. The reason why that small dip that happened on the counter, maybe you'll see some recovery at the end of the day as well on this stock, but currently that stock is seeing cuts of 2.5%. Osho, quick view when it comes to Chola Finance.
Good afternoon, Hiral. See, overall, I'm expecting that the kind of technical setup the counter is into, I'm expecting a decent bullish momentum, although there has been volatility in today's trading session, so one should wait for the news to get subside and the aftermath about it. But overall, on technical front, 1670, 1680 is a very strong support levels, and 1750 to 60 is the resistance level. So one should wait for a breakout above 1760, and from there onwards, we can expect a bullish continuation pattern in the counter.
Okay, so that's with regards to Chola Finance as well. But let's see what's trending on Google Trends today, because we've taken you through the stocks that NDTV Profit identified, which were trending in trade. On Google Trends, interesting moves on an Angel One. That stock is down in trade. SpiceJet we've spoken about. Eternal volumes absolutely strong. AMD Industries and NTPC. From this list, Angel One and NTPC is something that I want to pick with you, Osho. How are you looking at both these counters?
See, firstly, I cannot comment anything on Angel One, but today is the...
Yeah, sorry, apologies. I missed that.
Now coming to NTPC, the counter has seen a very strong traction, so the counter is overall into a bullish phase, but there is some kind of profit booking that can be seen in the counter, so I expect that any kind of dip towards 365 to 70 should be considered healthy, and then one can look for buying opportunity on the lower end. So NTPC is looking positive, 370.65. One should wait for those kind of levels and then again should try to accumulate the counter.
All right, thanks a lot, Osho, for that. But moving on, let's move on. Remember, earnings season is over or not? There are a couple of earnings also coming in to give that perspective. We are joined in by Jasmeet. Jasmeet, I really love your tie, the way it has moved.
Thank you.
But on KSB, how is the numbers looking like?
While if you look at the overall KSB aspect, we see a good set of numbers coming in for the company when the margins have expanded, and we have seen a broad-based growth. So we see good news flow coming in for KSB.
All right, so that's the numbers coming in. But Sachin D'Souza is also joining us. Hi, good afternoon, Sachin. We just spoke with Jasmeet on KSB. Your views on that?
Hi, good afternoon, and good afternoon to all the viewers. So, see, the KSB is into pumps and industrial pumps, so basically, and it is related to the government capex theme. Though the sales and the order take has been kind of muted, but when we look at the valuations and when we know that in the budget we have seen that that kind of growth which we expected in capex, it didn't come through. So looking at that, I think at current valuations, it still remains slightly stretched. So I would say that at these valuations, looking at at least 1 or 2 years moderate kind of growth. So not very structurally bullish at this point of time. Company remains a strong play into this industrial theme, but yes, valuations remain quite stretched at this point of time.
All right, KSB was fun, but let's talk about the commercial vehicle segment also. Interesting analysis from Mahima. Hi.
Hi. So basically what is happening is that the question really here is that all of these stocks have run up, right, around 40-odd%. So whether valuations are stretched or not in the CV market is the question. In terms of returns, Tata Motors CV, of course, got listed on 12th of November. So since then, Ashok Leyland has run up 48%, Tata Motors CV around 56%, Nifty Auto around 3.5%, and Nifty has been down around 1.5%. In terms of the stock price, what has led to this outperformance? Overall, GST rate cuts have led to that. In terms of Q3 FY26 sales, Ashok Leyland saw a growth of 24%. Tata Motors around 20%. The wholesale division saw a market share at around that 47%. In terms of what could, going forward, aid the rally, there's high average age of trucks in the system at 10 years versus normal age of 7 years. Going forward, we'll have to see whether that's stretched or not, whether it will augur growth for these companies. Ashok Leyland Management Concall said that to go back to 8 years fleet age would also take a few years. Onset of quick commerce is leading to last mile needs for trucks and export currently from 7% to LCV total sales is what they're seeing. Other avenues of growth like buses will be also another trigger. So this is the overall view of what's happening in this space.
Thanks a lot, Mahima, for that. CV space, of course, Ashok Leyland is on the red, while Tata Motors CV is on the positive. Sachin, your views on it, which one will you pick?
So basically, in commercial vehicles, we feel that the Tata Motors is undoubtedly the prominent, player, and it will remain that kind of player. Second largest is Ashok Leyland, and when we look at either it is passenger vehicles or commercial vehicles, the growth is phenomenal, and the old age trucks are going away. The new technology is coming in, and all the companies which are dealing into the kind of enterprise segment who are using these vehicles, they are already upgrading themselves. So from looking at that perspective, the valuations also looks quite comfortable. So yes, I think the main focus will be on Tata Motors. I think it will continue to enjoy the highest market share, and now the Force Motor has also entered into that category. So Tata Motors, Force Motor, and then Ashok Leyland. In that sequence, we like this space.
All right, but there's another earnings season also, and coming back to Mahima again, this is Sanofi India, right? So what's the numbers looking like? Is it good?
Yeah, so it's Sanofi Consumer, and this is Q4 for them because they follow calendar year. So overall, second consecutive quarter where they've seen a growth of 40% plus. They've sustained the growth momentum across key business segments. Domestic sales saw a growth of 23%, and export sales grew by around 9 times, of course, on the back of lower base as well. Revenue up 47%, EBITDA up 44%. Margins slightly took a hit because of cost of raw material rising, but overall net profits also saw a growth of around 50%. Other key developments, well, stock in trade reduced by 67%. Depreciation reduced by around 2.4 times, and other expenses also saw a reduction of around 47%. So this is the overall view of how the quarter is panned out for Sanofi Consumer.
Thanks a lot, Mahima, for that. And we just thought that the earnings season is over, but then again the earnings started coming in. But over to you, Hiral.
Okay, thank you so much for that. So this is with regards to where both of these companies go, Sharad. But another one is United Spirits also, which is in focus after its parent company Diageo has lowered its 2026 sales and profit outlook. I think Mahima, I'm not sure if she's still with us to talk to us about the same. Mahima, that stock actually showing you that kind of pressure, 2.5% downtake. How big an impact are you seeing?
Is there? We are keeping her very busy. This is a third link for her. Mahima, United Spirits, it's down. What's the entire picture?
Right, so basically what has happened is that Diageo, which is the parent company of United Spirits, yesterday did come out with cutting its guidance with regards to sales and profit. It, of course, did fell in European markets by around 13%. The company has said that the organic sales are going to be lower by 2 to 3% and profits are going to be flat. The company reported that weaker demand in North America and China have affected the earnings, but positive commentary coming in for United Spirits. They said that largely the double-digit growth coming in is from the prestige and above category. Sanofi. The management also highlighted that the Andhra Pradesh operations, which will resume, will augur growth going forward. And the CFO, that is Nick Jangiani, has confirmed that consideration of stake sale in RCB is definitely on the card. So this is the overall update coming in on United Spirits and the development as to why the stock is moving.
Thanks a lot, Mahima, for that. But Sachin, two stocks we just discussed right now. One is, of course, United Spirits and other was Sanofi. Both Mahima gave her views on it. Your views on both of the stocks, fundamentally, which is looking better now?
So, I mean, if you compare, see, both are different segments. Sanofi is like OTC market player, and that segment remains really, really resilient. Their valuations are also comfortable, and when we look at this segment, it's like a retail play, and this kind of play when it is available in the zone of 45 to 50 kind of multiple, but still the company is growing by more than 25% year on year, and Indian consumer market is quite big. All the categories, whether you say diabetes or the main brands like generic brands like Combiflame, also all the segments are doing quite well for Sanofi consumer. I think they understand the Indian consumers and their requirements on the healthcare side. I think the company will continue to do well. About United Spirits, I think the main game globally, maybe we'll see the muted kind of growth in the spirit business, but yes, the segment in India will continue to grow. Even outside, I think the category of premiumization will go up. Slightly stretch on the valuations. If you want to compare it, so I would actually go for Sanofi, which looks more structural play and at a reasonable valuations as compared to United Spirits.
Okay, so that's with regards to where United Spirits goes, but Biocon has secured a US approval for liraglutide. That stock though at the day's lowest levels, marking its entry into the fast-growing weight management segment. The approval strengthens its GLP-1 portfolio and expands its presence in the US market. We spoke to Siddharth Mittal, CEO and MD of Biocon. Let's listen into what he had to say.
So you just received the approval yesterday, and now we are preparing for the launch. We of course had a back order for supplies in Europe, but for the US, we are expecting that within the next 30 to 45 days, we should be able to launch the product.
Okay, so that's with regards to launch, but let's understand what analysts think about this entire GLP-1 category, the kind of pricing pressure that could be coming in, because you have innovators who've gone ahead and slashed prices, and that could somewhere put pressure in terms of generics while looking to launch as well. In fact, the differential between the innovator's price and generic price is very minuscule right now, and that is what is going to be the concerning area. But let's listen into what Vishal Manchanda, Senior VP Institutional Research at Systematic Shares and Stocks, had to say.
So markets are going to expand multifold as the price points come down. So my sense is like we have about 20-25 million people using GLP-1 pens in US and Europe. So like if we have even half of those patients using GLP-1 pens in India, so we have a similar population size like the US and Europe put together. So even then, the market is going to be very large, maybe in excess of 10,000 crores, and even after assuming a substantial discount to the current prices.
Okay, in fact, let me get in Sachin's view. Sachin, how are you looking at this entire GLP-1 category? And to add to that, if you have to see a Biocon and the other 7 to 8 generic players who are entering the space, how would this portfolio go for them?
So one, that GLP-1 remains a big opportunity, but I think we should not be looking at only on GLP-1. I think there will be many patents which will expire in next decade, right? So I think a lot more opportunities will come in, whether it is for generic or it is for biosimilars, right? So all these companies, whether you call, Cipla, Lupin, Dr. Reddy, or even Biocon. So the whole thesis will be dependent on their R&D, the kind of innovation they can bring in. Now, I think with the advent of AI, I think that acceleration will only go up for these companies. They know how to do it. It is just the data crunching and making things possible into the healthcare segment. And I feel that this particular thing will be really benefited not only from the GLP-1 perspective, but yes, from the other drug perspective also.
All right, moving on from pharma and AI, let's talk about Centum Electronics. Interestingly, the management has given a growth guidance of 25 to 30% in the coming time, especially from the order win coming in from HAL. In an exclusive chat to NDTV Profit, Nikhil Mallavarapu, he's the joint MD of the company, gave important views on it. Listen in.
Q3, our order book was close to around 1,800 crores. That includes all different parts of the business for us. This quarter, apart from, of course, this significant order, we are expecting some other important opportunities to also come in Q4 that's related to space-based orders, as well as a few other critical programs that we've been working on. So we expect, and I'm only considering the phase one part of what we talked about of the program. So, which is about 70 crores. So we expect our order book to further go up in Q4, a fair amount. And again, like I said, will give us a fairly strong visibility to continue a healthy growth rate going forward of 25 to 30%.
That's the management of Centum Electronics talking about the growth guidance. But Sachin, to put in perspective, if Centum Electronics is in your coverage radar, what will be your view on it?
Well, when we look at the overall theme of defense and specifically on the electronics, side, what concerns us that there are a lot of companies which have already entered into this space, whether it is, Data Patterns, Gensar, and there are a lot more startups which are ready to enter into this space because the government has been very open to the startup, companies to get into, defense and aerospace thing. And their earnings are always lumpy in the sense that if you get a very big order from HAL, you get very good profitability for maybe a few years, and then the volatility in earnings can come in. And now we are living in terms of defense stocks are the best times because the geopolitical scenario is quite bad outside, right? So we don't know how it will pan out in next 2 to 3 years. So as these stocks have rallied a quite big way in last 4 to 5 years for the right reasons because of the demand have gone up. But whether it is a good time to enter into such stocks, I think we will remain little cautious in that perspective.
Okay, so that's Centum Electronics. But very quickly, let's put up a Jindal Poly on the screens and see what the stock is doing in trade. It's at the day's lowest levels, and a couple of lines coming in terms of the NCLAT, which has squashed the order, which, when it comes to Jindal Poly. If you can just get those lines on the screens. Jindal Films, we're talking about Jindal Poly, which has been in focus in today's session as well. The class action against the company is the first in India, is what we are picking up right now. And apart from that, the NCLAT had admitted class action suit versus the company. The NCLT has now gone ahead and dismissed the appeal by the company versus NCLT order. That's the latest that we're picking up when it comes to Jindal Poly, and that stock, I think, has got renamed to Jindal Films, down nearly 4.5% at the day's lowest levels. Sharad, over to you when it comes to gold financing companies. It seems brokerages are picking up their momentum as well on all of them.
Well, it seems like Hiral, brokerages are having different views coming in when it comes to the gold financiers. And I'd just like to point out what's happening. Jefferies are very bullish on it. They are stating that the gold loan numbers are on the higher side. It's up 42% year-on-year basis as of November 25. And there is some competition also increasing as well. But on the other hand, Macquarie is a bit skeptical. And they are stating that if the retail is going so strong, especially on the gold loan front, there might be some restrictions coming in from the RBI as well. So two foreign brokerages, but very opposing views coming in. Sachin, I'd like to get your views on it. Of course, fundamental views are most respected, but either of those two, Muthoot or Manappuram Finance, which is better right now? Are the valuations still very high for both of them?
Yeah, so I think Manappuram still the valuations are comfortable, and the kind of private equity funding they have recently raised. I think we have been seeing increasingly improving in the fundamentals for Manappuram Finance, and even in the valuation side, they remain very reasonable as compared to Muthoot. So we have always been with Muthoot, but the kind of rally it has shown, and now trading at price to book value almost 4. In that I think the margin of safety is quite limited with Muthoot Finance, and that is when the gold prices have gone up. So from looking at from that perspective, if you want to compare it on the valuation side and on the going forward, what we project in terms of the asset quality, so we feel that the Manappuram is better placed as compared to Muthoot Finance.
Manappuram Finance is better placed than Muthoot Finance. That's the view coming in from Sachin. Thanks a lot, Sachin, for giving your time and giving important views on the fundamental stocks. But that's all, folks. Time is over almost, and stay tuned for the next show. And this is all from me, Hiral, and the entire team which has put up the trending stocks.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
It's a tepid day of trade on the Lal Street, Nifty below 25,430, while benchmarks hover close to day's low. FMCG and PSU banks on the back foot. Pharma and IT remain resilient. And Sanofi Consumer on a tear, a good set of numbers in the fourth quarter. Revenue jumps 47%, while the export sales grow owing to a lower base. And it's Cholamandalam Investment that is in the spotlight. Murugappa Group's Valiant Subbiah strikes a long-awaited family settlement. This clears the way for him to exit his stake in Cholamandalam Investment. That's the latest coming in, and there's also a clarification there. Yes Bank's multi-currency forex card has been hit by a major fraud incident. This affects more than 5,000 customers and is linked to Latin American merchants. Meanwhile, Reliance Group's Anil Ambani on ED's lens appears at ED's office in the national capital for a second round of questioning in a money laundering case. This after the agency attached his Pali Hill property. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets and see what they're up to. When you talk about Nifty, in fact, it's hovering very close to day's low. In fact, at day's low is what Nifty is doing for you right now. When you talk about the sectoral picture as well, we'll talk about that as well, but it's largely a tepid day of trade that you're looking at. So whether you look at Sensex as well, you're looking at that day's low level when you talk about Sensex as well. When you talk about the sectoral picture, like I said, it's tilted a little bit in the favor of red right now. So there's media, FMCG, PSU banks, and the consumption sectors that are on the back foot, as you can see on your screens. What's faring well right now, remaining resilient, is something like pharma, autos in top gear as well. Not exactly in top gear, but still managing to eke out a little bit of a gain there. IT still remaining resilient. Even as we speak, just about oil and gas also managing to remain a little bit resilient right now. But when you talk about the list of losers, it's a long one at that. Home First Finance is one counter that is tanking in trade. Something like this Agility India, Afcons Infra as well. Those are some of the counters that are under pressure. But you do have Coal India from within the Nifty 50 pack, something like a Trend, Power Grid, NTPC, Asian Paints, Wipro and Tata Consumer that is under pressure. What's faring quite well in terms of the Nifty 50 pack is something like a Tata Motors PV. Even something like a BEL is doing quite well for itself, 1.5% uptick there in a market that is quite tepid as we speak. So that's the kind of picture that you have in terms of some of those stocks that are in focus as well. Let's quickly take a look at some of these other counters as well. Of course, there's Yes Bank that is in focus. It's not seeing much of a reaction, so it's managing to remain a little bit resilient even despite that particular reaction that we had coming in from that fraud case, and that's the update that you're looking at. But before we get you a lowdown on all that has been happening with oil prices, let's hear it from the man of the moment when it comes to the crisis. US President Trump has emphasized previously, last week, he emphasized that military action remains on the table unless Iran shows willingness to negotiate. And against the backdrop of the Tehran-Washington meeting, it's very important that we go across and listen into that bit of commentary as well.
We're either make a deal or we're going to get a deal one way or the other. We're either going to get a deal or it's going to be unfortunate for them.
And we said straight 10 days. Give them a deadline. Firm to make a deal?
I would think that would be enough time, 10, 15 days, pretty much maximum.
Alright, and there you go. So that's the word coming in from US President Donald Trump as well. And that's that entire clock that is ticking when it comes to this particular deal. Against that backdrop, let's quickly take a look at this particular meeting that I'm talking about. So when you do have US-Iran talks, it's the third round of nuclear talks that you're looking at right now. And you do have that deadline also looming, like Trump mentioned in that particular bite that you've also heard. But you do have Oman's foreign minister who's going to be delivering Iran's latest proposals to the US team, acting as a mediator here. Other than that, Trump had given that deadline of March 1st to 6th roughly to strike that particular deal, and that's exactly why the clock is ticking on this one. When you talk about oil prices against that backdrop, you're looking at oil awaiting those important cues. Seems to be in a little bit of a holding pattern right now, so that's oil just steady at this point in time ahead of that OPEC plus meeting as well on Sunday and those Tehran-Washington talks, because you do have world's oil artery that could be at risk, that Strait of Hormuz that I'm talking about. Other than that, when you talk about gold prices also right now, extending gains right now on the back of geopolitical tensions in the West Asian in the West Asian continent as well, and that's something that you're looking at. Bullion climbing close to that $5,200 an ounce level as well, and that's something that we're looking at in terms of the backdrop broadly here when you talk about gold as well as oil prices. But with that in mind, let's also connect with our guest this afternoon, Biren Vakil, commodity consultant, Paradigm Commodity Advisors, joins us on the show. Mr. Vakil, thank you so much for taking time out. It is a very important day to be speaking to you right now because you do have that Tehran and Washington meeting. Of course, oil seems to be broadly in a holding pattern as we speak, but it's actually quite some strength that you're seeing return as far as gold is concerned for much of this week. Do you think that the Tehran-Washington meet has a role to play here and a critical one at that?
Gold is stuck in the range of 48-52, where 52, 20, 40 seems to be profit booking zone. Lot of fraud reduced during recent correction from 56 to 44. I think market is gulping for fresh energy to attain 55 or beyond level. So major trend is upward and still intact, as big picture like debasement trend is still very much intact.
No, absolutely. And you've had that gain coming in to the tune of about 6% of the last 6 sessions, roughly, that is, I'm talking about when you talk about gold prices here. Do you think that the fundamentals are intact when you talk about gold prices? Do you think that the entire geopolitical uncertainty is going to be a key tailwind going forward when you talk about gold?
Yes, geopolitical tension, especially Red Sea area, MENA, that is Middle East, North Africa. Risk premium is still not fully priced in, especially Great Lake region like Rwanda, Burundi, etc., which holds nearly 60% of precious metal and critical metals. What I'm sensing is maritime navigation challenges at various places, Baltic, Red Sea, Caribbean, Hormuz, is the major white card open. So gold and oil both are, as of now, behaving like war commodity as well as safe haven.
No, absolutely. And that's something that we're looking at. Oil, of course, broadly seems to be in a little bit of a holding pattern because I feel like the market could be awaiting those clear cues coming in when you talk about the Tehran and Washington meeting. But what do you think about silver? Because, you know, you do have those levels close to that 1 month high that you're looking at. You do have some strength seems to be returning in the silver market as well. How are you looking at this? Do you think that this is going to be a little bit of a broader trend from here on? Do you think that they found some footing right now?
I think tomorrow would be an important day because first notice day of COMEX March contract. If enough deliveries we can see during next week, we may see little bit pressure, selling pressure towards 80 or maybe 75. Chinese futures market is still inverted. So, and inventory at Shanghai exchange is very low, almost 6-year low. So I think inbuilt story is still positive, and in compared to gold or other metals, silver still may outperform.
Absolutely, but given that the way that things stand when you talk about gold and silver particularly, do you think volatility is the name of the game a little bit here when you talk about both of these metals right now? And are you seeing the upward momentum that could sustain in the near term? Of course, throughout the course of this year, nobody can possibly anticipate, given the kind of changing dynamics that you have in the market right now. But in the near term, are you forecasting a little bit of a bullish trend coming in for the next 3 months?
Temporary market has discounted these tariff jitters because US has clarified precious metal will be out of this global tariff 15%. But demand side or supply side economics is still very much favorable for silver and as well as other precious metal, especially for platinum. So for 3 months, I would still prefer to be on buy and dips side. Tentative targets for London spot is around 80 to 1110, and for gold, tentative targets is 44 to 55. Here, 48 seems to be initial floor, which sounds durable floor.
Right, no, absolutely. And when you talk about the big talking point as well, let's talk about oil prices, because right now, of course, they're in a little bit of a holding pattern, waiting for a little more of a cue coming in when it comes to Tehran and Washington right now. But what is the overall sense that you're gathering here? You're looking at the world's oil artery, of course, and that's the Strait of Hormuz that I'm talking about. It's quite a lot of uncertainty that you have at hand. Is there something that worries you in terms of the kind of levels that we're going to be seeing if there is any negative development on this front?
I think there is a lot of oil in terms of floating oil cargo. But freight tankers rate, especially super tanker rates, are firming up. Recently, cargo traded around $2 lakh a day, which is highest since 21. So this is a telltale sign for fear of some supply side security. Technically speaking, I'm sensing 75, 80 for medium term, say for April to May area. And for near term, 55 seems to be a very strong support area.
All right, then. Thank you so much for helping us out with that. A very quick question, this one. I just wanted to quickly understand, out of all the commodities that we've discussed this afternoon, which one are you most bullish on? Just a quick answer here.
Platinum seems to be dark horse.
All right, and platinum seems to be the dark horse, and we hope to be discussing platinum at length with you next time that you join us on the show. Thank you so much, Mr. Vakil, for taking time out and joining us. So there you go. That's the entire outlook coming in. Platinum is the dark horse, but of course, we've discussed gold, silver, and even oil, and that's the entire outlook that you have when it comes to the entire commodities complex. With that in mind, it's time for a very quick break. More news and updates on the other side.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Welcome Welcome back. Thank you so much for staying tuned in. Well, it's time now to take a look at some other news and developments right now. And AI, of course, is part of our dinner table conversations, but it is also a source of concern when it comes to deepfake AI-generated content. In fact, you do have Communications and IT Minister Ashwini Vaishnav, who's issued a sharp message to digital platforms saying that they must take responsibility for the content they host, especially as deepfakes and synthetic media rise sharply. Let's go across and listen in to that bit of commentary.
Platforms must take the responsibility for the content that is hosted by them. The online safety of children, the online safety of all citizens is the responsibility of the platforms. Non-adherence to these principles will definitely make them responsible, because the nature of internet has changed now, and synthetic content should not be generated without the consent of the person whose face or voice or personality has been used to create the content.
Alright, and there you go. That's the entire word coming in from the IT Minister when it comes to deepfakes and AI-generated content. But with that in mind, let's also shift focus onto the ED that is provisionally attached Pali Hill residential property of abode of Anil Ambani in the Reliance Communications bank fraud case worth about 3,700 odd crores under PMLA. Cumulative attachment when you're looking at of the properties in the group now stands at somewhere close to 15,700 crore rupees, and the property is located in the posh Pali Hill area of Bandra, as you can see on your screens. Counts top Bollywood stars among its neighbors. That's the background on this particular area as well. But with that in mind, let's go across to NDTV's Saurabh Gupta, who's joining us now from outside the Pali Hill property. Saurabh.
A major step by the Enforcement Directorate as it continues its investigation into allegations of money laundering against, of course, RCom, which is an Anil Ambani, associated company. Now, the Enforcement Directorate says that it has provisionally attached the Pali Hill residential property abode of Mr. Anil Ambani in the Reliance Communication Limited's bank fraud case. Now, what the ED goes on to say is that RCom and its group companies avail loans from domestic and foreign lenders, which is of course a total amount of rupees 40,185 crores, and this amount is outstanding. And the ED also goes on to say that the ED investigation has revealed that among other assets, the Pali Hill property, pictures of which you see right now, was aggregated into the Rise E-Trust, a private family trust of the members of Mr. Anil Ambani's family. This was done to make it appear as though Mr. Anil Ambani is not involved. The ED then goes on to say the intended effect of this corporate restructuring was to ensure wealth preservation and resource generation by aggregation of the property in the Rise E-Trust and shield it from the personal liabilities of Mr. Anil Ambani in the form of personal guarantees extended by him to lender banks against the sanctioned loans to RCom.
Alright, and thanks Saurabh for getting us all of those details right from Pali Hill. So there you go, that's the posh Bandra locality that you're talking about, that particular property that has been attached after the ED has cracked the whip when it comes to Mr. Anil Ambani. But let's also move on and talk to you about Yes Bank that is in focus on the back of a multi-currency forex card that has been hit by a major fraud incident. Now, this affects more than 5,000 customers and is linked to Latin American merchants. The stock not doing all that much, but nonetheless, it is a story that is in focus that Nisha is going to be sharing more details about. Nisha, over to you.
That's right. Yes Bank has detected many fraudulent activities when it came to its multi-currency forex card, and 15 of these transactions have been detected which are fraudulent in nature and all related to the e-commerce merchants coming in from Latin American countries. The entire fraud amount is amounting to about $0.28 million, and it affects 5,000 customers of Yes Bank using these prepaid forex card. What the company has said is that it has taken stringent measures. The vulnerability really came in because of the absence of two-factor authentication, which is, remember, something that really fortifies the Indian e-commerce and online transaction system, which is not present in all the countries across the world, and especially here with regards to Latin America. So the company, the bank, in
order to protect the interest of its various customers, has really taken stringent measures to also block the e-commerce transactions to certain countries where there are no such safeguards available, and also has said that more measures will be taken and they'll tighten the grip on these fraudulent transactions. We also gather from reports that RBI, the banking regulator, could have stepped in and even inquired about this forex card fraud that has happened at Yes Bank.
Absolutely, and thank you so much, Nisha, for helping us out with all of those details. So there you go. That's a quick look in terms of that particular fraudulent transaction that has affected about 5,000 customers when it comes to Yes Bank. With that in mind, let's quickly take a look at what the markets are up to. Of course, Nifty and Sensex close to days low, but when you talk about the sectoral picture, it's actually pharma that is quite resilient at this point in time, holding up quite well when you talk about major sectors. Let's also get your check going in terms of what is happening when it comes to pharma. Of course, you do have a bunch of sectors that are in the red, so pharma is leading gains, and there's also autos that are remaining resilient against that backdrop. Let's take a look at India's drug makers that are gearing up for an entry into semaglutide as the patent on the main molecule expires in March 2026. Nearly 10 companies that you're looking at that are preparing affordable versions, with generics also expected to launch at significantly lower price points at this point in time. Hiral, in fact, is joining in with some more details here. Hiral.
Absolutely. The originals have slashed their prices much in advance, and I think what they are trying to do is trying to match what the generics would come in at as soon as the patent expires, which is on the 20th of March 2026. Now, to add to this dilemma, the other question is what happens in terms of the size. The size is still expanding. The generics are already working, Tamanna, in terms of a 80 to 90% gross margin profile on all of these products. And hence, you're not going to see a major impact coming in there. But yes, if they would have got X amount, the pressure would continue on that front. But let me quickly take you through what's happening. If you have to look at day one of semaglutide launch, 10 companies are preparing for affordable multiple launches. Now you have Sun Pharma, Dr. Reddy's, Zydus, Cipla, Lupin and Alkem. You have Novo Nordisk, who holds the secondary device patent, which goes into 2030 as well. Now the generics are planning a 50 to 60% price, which would be lower, 50 to 60% lower price versus the innovator brands. And there's a possibility that the prices could go down by almost 80%. That's what we are looking at. And they're saying that the monthly therapy could actually fall to 3,500 to 5,000 rupees. So that's that price band you should be watching out for. Indian companies are also expecting early exports to non-patent markets. Now, on this aspect, if you see, innovators like Novo Nordisk and Eli Lilly are fighting back by slashing prices, as Tamanna mentioned. And the Indian companies are saying that they will face high customer acquisition costs versus global brands. So that is going to be the pressure point for them. Generics will also crash prices, and the first 12 to 18 months may see some supply shortage. So on the back of the supply shortage, there could be some bit of a comfort that could be coming in, because manufacturing these complex peptides at a billion dose scale is something which is going to be incredibly difficult in a short period of time. So yes, we are talking about pricing pressure over here. Two, we are talking about pressure in terms of scaling up to the kind of volumes that will be needed to sustain the kind of business. But I think the key is going to be, as soon as the innovator patent expires on the 20th of March 2026, the impact will be known. Very quickly, Sun Pharma, again, semaglutide and novel GLP-1 portfolio is what they are focusing on. They have received the DDCI approval, and they are in phase 2 trials. Again, Dr. Reddy's, they're doing the generic version of semaglutide. Zydus Life, liraglutide and semaglutide, both are these products that they are working with. Cipla is also working with semaglutide as well as tirzepatide. And you have Biocon, which is again working on semaglutide, which is the API and the finished version. Now, why this becomes important for Biocon is because they've secured a US approval for liraglutide. And this would actually mark their entry into this fast-growing weight management segment. The approval is actually strengthening their portfolio and expanding the company's presence in the US market as well.
No, absolutely, and thank you so much, Hiral, for getting us that update there. So that's approvals galore when you talk about the entire pharma pack across majors. In fact, we also caught up with Siddharth Mittal, CEO and MD of Biocon, to discuss the timeliness when you talk about the US commercial launch. Let's go across and listen in.
So we are, you just received the approval yesterday, and now we are preparing for the launch. We, of course, had a back order for supplies in Europe, but for the US, we are expecting that within the next 30 to 45 days, we should be able to launch the product.
All right, then with that in mind, let's also quickly take a look at the pharma market that is likely to expand multifold as India prepares for affordable semaglutide, and that in fact is the word coming in from Vishal Manchanda, Senior VP Institutional Research at Systematics Shares and Stocks. While speaking to NDTV Profit, he said all of this. Let's go across and listen in.
So markets are going to expand multifold as the price points come down. So my sense is like we have about 20-25 million people using GLP-1 pens in US and Europe. So like if we have even half of those patients using GLP-1 pens in India, so we have a similar population size like the US and Europe put together. So even then the market is going to be very large, maybe in excess of 10,000 crores, and even after assuming a substantial discount to the current prices.
Other than there you go, that's the entire word coming in as far as the entire pharma pack is concerned. But with that in mind, it's time's up on this edition of Lunchtime Trades. Thank you so much for tuning in.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Soumit Sarkar, and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today. Now, firstly, let's see what's on the show today. Firstly, we'll be speaking with the management of Sedemac, which is a new company looking to raise close to 1,088 crore rupees via an IPO. The IPO is a complete offer for sale where the promoter and the existing investors will sell their partial stake. Secondly, we'll be speaking with the management of Dhanuka Agritech. The stock is down nearly 33% in the last 1 month, and what we'll be questioning the management is that whether earnings will bottom in FY26 and what's the way forward for Dhanuka Agritech. We'll be also highlighting the stock Orient Electric. That stock has been gaining in trade on the back of strong volumes. If you look at the volumes, they are nearly 16 times its 20-day average. Apart from that, if you look at Atul Auto, that stock is up nearly 32% in the last 1 month, and the stock has been gaining for the second consecutive day. What could be the reason behind this up move of Atul Auto is something that we'll be discussing on the show. And Ceylon Exploration, or Antelope Ceylon, the new name of this company. The stock is down for the 5th consecutive session. In the last 5 trading sessions, the stock has declined nearly 17%. What could be the potential reason behind this decline, and what's the way forward for Ceylon Exploration is also something that we'll discuss on the show today. Now, if you look at the market, the Nifty is down around 60 odd points in trade, now nearly 42 odd points in trade. Not much of an action that we are seeing, a muted day of trading. And the Nifty is currently trading around the 25,400 level, which is just below its 50 and the 100 DMA. And previously also we have seen the Nifty getting some support near its 200 DMA, and currently it's trading above that level in the market. Now on the sectoral side, if you look at it's the Nifty Auto Index, which is the top sectoral gainer, and on the loser side we have Nifty FMCG, which is one of the top sectoral losers in trade. When it comes to the Nifty Small Cap Index, that's also been trading in red today. But what are the key specific stocks that have been buzzing, Mahima?
Right, so yes, as you rightly mentioned here, right, the small cap 250 has turned into red. Of course, did start its day in the green, but with regards to some specific names in the small cap space on the broader end of spectrum, you have Renaissance Global, which is seeing good gains of around 10% in trade today. Something like an Orient Electric is also seeing gains of about 8.7%. Suryoday Small Finance Bank is also trading 8% higher. Jyoti Structures also trading around 8% higher. Something like a Neogen Chemical is also doing fairly well in trade today, up by about 7% odd. Something like a Zaggle Prepaid has also turned into the onto the green side today and up 6% as we speak. Atul Auto also doing fairly well, up 6% as well. Dishman Carbogen, Sundaram Clayton, as Premier Energies are some of the other counters that are doing fairly well. So that's with regards to where the small cap space is concerned. But Somit, there is an IPO that we are looking at.
Well, yes, Ceramic Mechatronics is the company's name that is getting or looking to raise funds from the market. It manufactures multiple components like electronic control units, electronic fuel injection, ISG, and some other motor controls. But let's go across to the management of Ceramic Mechatronics. My colleague spoke to them. Let's listen to that bite.
I want to start by asking you that, the issue is fully offer for sale. How should an investor look at this? Because a lot of private equity and early investors are now exiting from the company.
Yeah. So first of all, the private equity investors that are selling, they're not selling all of it. They're actually selling approximately 30% of their holding because of their own liquidity reasons, etc. But more importantly, about the company itself, broadly the numbers work out like this: for every additional dollar of revenue that we do, we need approximately maybe $0.15 to $0.2 of capex and about $0.2 of working capital. Okay, so for every additional dollar I make for growth, okay, about 0.35 to 0.4 of investment needs to come in. Okay, where will this come from? Okay, so that leads to the question of our profitability. If our profitability is strong, then this can be fueled just by the internal accruals. Okay. That's the story of the company. Today we are running at about 20% EBITDAs as displayed in the RHP, and that is more than sufficient for us to propel a growth of about 30-40% without needing any money at all. And further, our debt to equity ratio is very favorable. If you want a little bit more money for even additional growth more than 30-40%, debt is available. Over and above that, I mean, if you're growing at more than 100%, etc., we will take equity, but we don't think that we are in a position where we need to take equity for the next 3-4 years. So there is no need for the company to raise capital now, and that's the reason we have not done it. So it's a purely offer for sale.
All right. So your RHP says that there's heavy dependence of revenue from TVS Motor, particularly one company. So how are you seeing this risk of concentration of clients, and how do you plan to increase your client base, and what is actually the client base between India and overseas segments right now and going forward?
So first of all, customer concentration is a risk for any business. Okay, so if you have customer concentration, the reason is actually quite simple. First is that if your customer itself starts doing badly, then you're also pulled down. Second reason, which is I think what worries investors more, is that okay, if the customer is doing well, but your relationship with the customer goes bad, okay, or the customer has other options, then you are at risk. Your numbers are at risk. So these are obvious risks related to customer concentration. But in every situation, it's important to understand the specifics of the situation. So if you ask the question, why is it that TVS has, we have heavy dependence on TVS at this point in time? The main answer is that the key technology that we have built, sensorless commutation as applied to in two and three-wheelers, both ICE and EV, that technology is a first in the world. And we have carried to the market where TVS has been the anchor adopter of the technology. Okay. So when you have an anchor adopter, you will have heavy dependence in the early journey of that technology propagating, and that's the reason why our numbers show that. Okay, and if you looked at a little bit more carefully, like where we were in FY25 versus 9-month FY26 that we have shown in the RHP, you can see a trend, a bit of a dropping trend. That's reflective of other customers coming in. We have also mentioned in the RHP that Bajaj Auto is now a significant customer. Okay, so it's a very natural process that when you first introduce technology, you have anchor customers, and it is a case of mutual dependence. They respect us, we respect them, and it's a case of mutual dependence, and that's the reason why it's seen like that. The other question that you asked about what is our mix across geographies, the main selling that we do outside of India is not in the two and three wheeler space. It is in the generator space and the e-bike space. E-bike is a close cousin of the two wheeler space, but generator is a very different story. So our customers outside of India, okay, are heavily generator manufacturers in the US, or there are tier ones who are operating in the e-bike market in Europe. So that's our mix. In India, it is the two and three wheeler manufacturer and also all the generator manufacturers. So we have about 10 to 12 significant customers, and like any B2B heavy technology business, you go to the big adopters to say that, hey, this is a new technology, why don't you adopt it? That's been our journey. So we have about 10, 12 big customers, and of course TVS concentration is there. Right?
All right. Yeah. So you would say that Indian concentration is more than the overseas right now?
Absolutely.
And going forward, how do you see this?
It will continue to be the case. Our bread and butter market right now is the two, three wheeler market. And that is not going to go away because we have lots of things to do in the two, three wheeler market. And we do expect that because of that, in our revenue mix, the two, three wheeler OEMs, whether it is Indian or whether it is Japanese or something, they will have a significant portion. Okay. And the other portion will be generators. But generator market is a lot smaller by itself than the two, three wheeler market. So even if we have very good presence there, on our overall numbers, the generator contributors will be lesser. But now we are going after, like we have mentioned in the RHP, other markets. Like we are going after power tools, we are going after CVs, etc. So over a period of time, we believe that the big players there will also start occupying. Okay.
Right.
And how much we sell to whom depends on the relative size of the market and all the strengths of our propositions there.
Got it. So as of now, it's India and overseas. Talking about overseas, with US trade deal, tariffs, what sort of risks do you see with the whole, your clients over there? And also marginal supply is taken care of from China. So if you could talk about the whole geopolitical risk to your business.
Yeah. So the tariff, we do sell parts to the US. We export parts to the US. So the tariff situation is applicable to us. First of all, I think it should be clear that the tariff is not paid by us. It is paid by the importers. That is, our customers pay the tariff to the US government.
Okay, all right. So you heard the management. Of course, the IPO opens tomorrow for subscription, and the details, of course, were flashing on your screen right there. But switching focus to Dhanuka Agritech, the company is in focus. Of course, stock has been under pressure since the past 1 month. To discuss as to how, of course, firstly the Q3 quarter has gone by and how things are shaping up, and whether FY26 is the end of where the earnings bottom out. To discuss all of this, we're joined by Mr. M.K. Dhanuka, Chairman of Dhanuka Agritech, joining us now. Mr. Dhanuka, thank you so much for taking out the time. My first question, before I move on to forward-looking guidance, is that Q3, the kind of, the numbers that have panned out, how much of the growth has come in from volume versus value growth, and what is the kind of price hikes that you've taken in Q3, and going forward, what is it that you're expecting in Q4 as well in terms of price hikes?
Volume and value growth was 2% difference in the third quarter. But for the whole year, we don't expect any major change in value and volume. And unfortunately, this was a bad year. In 40 years, we have never seen degrowth. This is the first year in 40 years history of Dhanuka that the company has shown degrowth. The major reason was that the monsoon was erratic, and the herbicides used for soybean and cotton crops, they were not consumed at all. But so there were a lot of goods returned this year, and the crops of grape and chili, which consumes the highest sprays for the pesticides, they were damaged because of the high rainfall. So these were the major reason. Apart from that, the biostimulants, government put a ban from 17th June onwards on sale of biostimulants. So around 50 crore sale was impacted because of this known sales of the biostimulants in this financial year. So these were the reason of degrowth in this 9 months.
Okay, okay, you had a bad 2 quarters in a row. That's fine, sir. But how's Q4 shaping up so far? First 2 months of the fourth quarter. Are things improving on ground? Can we expect growth in the revenue number in the fourth quarter?
Yeah, definitely. We are confident that we will be able to have single-digit growth in the fourth quarter. And overall, we hope that by the year end, we will be able to deliver around 2% negative in comparison to last year.
Mr. Dhanuka, what percentage of your total revenue is coming from new products that you've launched recently in FY26 coming from? And FY27, what is the pipeline looking like in terms of launching new products?
See, major we have launched Melody Duo, which we acquired from Bayer Crop Science, Germany. So that gave us around 25 crore value-wise sales in these 9 months. And apart from that, there was no major product. Dinker was launched in herbicide segment, but that has not performed well. So we hope to launch 2 new fungicide in the next financial year.
Sir, just wanted to understand, actually I was going through this HSBC note and that said that anticipated El Nino effect will lead to weakened monsoon in 2026. How are you reading into this? Are there any early updates or that suggest that monsoon could be weaker in 2026 as well, or are the water level reservoirs on the higher side that could make up for even a weak monsoon?
As per information, the water levels are at 75% level in most of the reservoirs. So we hope that even if El Nino comes, it will not impact the whole of India. Some parts of the India will definitely have the impact, but it is too early to comment on that because the IMD has said that they will come out with the exact forecast by April.
Mr. Dhanuka, with regards to competition, what are your views like? Because there is competition which is increasing in this space. How are you protecting your market share at the same time protecting the margins as well? What is the strategy in place?
you see, we are giving more thrust on reaching to the customer. So till now we were not having the information about the retailer sale, but we have developed a system and app we have made, according to which we can track the sales of the retailers also. So in South India, we are appointing big distributor like FMCG. They are distributing to the retailers. So we hope that our reach to retailers will increase in times to come, which will increase in the sales. Apart from that, we are introducing new molecules year after year, first time in India with the help of the Japanese company, and we hope these new molecules will add to the sales.
The Dahej plant which was commercialized, can you share some updates? How many products have been launched? What is the kind of sales that we are looking at?
Yes, we have introduced, we have manufactured one more product apart from bifenthrin technical, that is difenconazole technical. So presently we are manufacturing 2 molecules at our Dahej plant, and next year we hope that the Iprovalicarb technical, which we acquired from Bayer Crop Science Germany, we will start manufacturing the Iprovalicarb also from this Dahej plant.
Mr. Dhanuka, correct me if I'm wrong here. Your FY26 guidance suggested that the revenues will largely be flat and EBITDA might see a downtick of around 100 basis points. FY25, you ended around 2,000 plus odd crores. I believe that FY26 is also going to be around that number. But FY27, what is the prediction that you'll make in terms of top line and bottom line?
We are expecting double-digit growth if the monsoon remains normal in the FY27.
All right. And this double-digit growth in terms of top line is what you're saying, correct?
Yeah, double-digit in top line, and the EBITDA will be to the extent of around 19%.
Okay. And what about, the overall, growth in terms of where your new products go? You did talk about how they've been growing, but let's say 1 or 2 years down the line, what is the kind of growth that you're expecting from these new products?
We expect that the products Pars and Lanevo, which has not performed in this current financial year, they will be performing well because we are giving more emphasis in marketing efforts in next financial year, and these molecules will give very good growth to Dhanuka in coming year.
Right, and sir, just wanted to understand one more thing, going back to the Dahej plant. By when are you expecting the plant to be EBITDA break-even?
We hope that by March 27 end, we will be EBITDA positive.
And what could be the margins, say, for FY28 from that plant?
It's too early whether we will be able to establish another plant over there with the or we get the Japanese molecule for contract manufacturing. So it will be depending on all these parameters.
Okay, Mr. Dhanuka, thank you so much for being so candid with your answers and of course taking out the time and speaking with us at NDTV Profit.
Thank you.
All right, moving on and shifting focus to the F&O space, it's time to look at how the setup is looking like. Of course, there's Sensex monthly expiry playing its part, but Sharad, what is it, what are the cues in fact looking like?
Well, to be honest, the indices are not giving any kind of, a trend right now. But of course, the technical setup in the medium term is good. You mentioned rightly the Sensex monthly expiry is also at play. But the reds have become more than the greens since the last time we came at 1045. But Reliance is definitely holding up. Adani Ports and BL also doing the trick. But the sell-off, of course, is coming in India in Power Grid, NTPC and Eternal back. The selling is back in Eternal as well. So we could say that the biasness is slightly turning towards the negative side. Let's pull out the BankX also because no major support is coming from the banks. Also, all the major banks are in the red. So yes, big cuts coming in HDFC Bank, and that's also dragging the key constituents. But let's look at the stock specific moves. A long build up happening in Mankind Pharma, and that's going up. It was 3% last time we checked. Now it's up 5%. And Tube Investments makes it to the list. It's up 4%. Let's look at the short covering candidates, and we have Oracle Financial, which was there in the morning, but IDFC First Bank, that's a surprise. The markets have a very funny way. But long unwinding coming in for Samman Capital and LIC Housing Finance, and short build up Dixon Tech, that's up almost, that's actually down 3%, and Muthoot Finance also makes it to the list. Both of these stocks are seeing good short build up happening. So these are the stocks buzzing in the F&O space.
Right, thank you so much for bringing us those details. Now, shifting to the next small cap stock that we're going to talk about, and that is Atul Auto. The stock has gained over 32% in the last 1 month, gaining 6% as we speak, and has been up in the second consecutive session today. In terms of what the company does, basically operates in the three-wheeler segment of automotive industry, manufacturing, and a complete range of vehicles under the Atul brand. It manufactures and exports auto rickshaws as well. In terms of the recent Jan update coming in for the company, the three-wheeler IC engine saw a growth of around 41% year-on-year growth. The EV L3 segment saw a growth of around 3.4%, but the EV L5 segment degrew by 54%. This is the domestic side of business that I'm talking about. In terms of the domestic plus export business, the three-wheeler IC engine saw a growth of around 46%. EV L3, of course, they don't export, so the growth remains the same around 3.4%, and the L5 as well, the degrowth of around 54%. In terms of the other recent development that took place for the company has approved the acquisition of L5 electric three-wheeler business from its subsidiary, that is Atul Green Tech Private Limited, and this acquisition was for around 35 odd crores. Lastly, in terms of where the Q3 numbers stand, overall revenue saw an uptick of around 18 odd %, EBITDA an uptick of around 70 odd %, and margins did see a growth of around 370 basis points at that 12% mark, and net profit saw a jump of around 98 odd % to 15 crores. So revenues have nearly doubled for them this particular quarter. So that's the view with regards to where Atul Auto goes, and the reason as to why the stock has been buzzing is because of its strong performance. One of the reasons is its strong performance in Q3.
Well, shifting focus to one of the top gainers in the small cap stocks, to one of the top losers in the small cap sector, and that is Antelopus Celan. Now, if you look at this counter, the stock has been down for the last 5th consecutive session. It has lost close to 17% in the last 5 trading sessions. Now, what does this company do? Firstly, they had completed this merger of Celan Exploration and Antelopus Energy, which was the promoter company of Celan Exploration. So this was a reverse merger and listing which happened of the promoter entity, and this was a composite scheme that was approved back in 2023. The combined entity was renamed to Antelopus Celan Energy in August 2025, and this company is into the business of oil and gas exploration and production. It is one of the first companies to secure development rights for 3 discovered oil fields in Gujarat. Now, if you look at it, the company's portfolio, there's 5 core onshore field assets in Gujarat, plus some additional assets that it got post the merger with the parent company, that is Antelopus. Now, these assets span across, some of them are mature producing field, while some of them have high potential of development opportunities going forward. Now, pre-merger, the company had 5 fields: Bakrol Field, Lohar Field, Karjisan, Ilao and Camby Field, and post the merger with Antelopus, they got 4 more fields, one in Duarmara, Dangeru, D31 and D11. Both this D31 and D11 are offshore Mumbai and Mahanadi fields that the company had. Now, as per the estimates, the production capacity is nearly 55 million barrels of oil equivalent as per the 2P reserves that has been estimated. So that's quite a huge opportunity that could come in for this company going forward. Now, if you look at the third quarter updates that had come in, the production was close to 1,500 barrels of oil equivalent per day, which was a growth of nearly 35% on a Q-on-Q basis. And despite lower oil prices, we had seen a revenue growth for the company coming in at close to 20% only because of this higher production that has come in. And moreover, this 1,500 barrels that we had seen of production, the exit rate guidance is much more of around 1,800 barrels per 1,800 plus barrels of oil equivalent per day by March 2026. And apart from that, if you look at the Karjisan field, that is one of the major reason, the rising production is one of the major reason coming in from this Karjisan field, and it is also a high return on capital employed field coming in for Antilopis Solan. And if you look at the production sharing contract, that was also extended, which has led to much more earnings visibility coming in, because this in short reduces the amortization drag, which means that depreciation will be spread over a longer period of time, and hence the impact coming in into one financial year will be lower, and that leads to higher earnings coming in for the company. And apart from that, there is also possibility of monetization of one field in Assam and one Cambay gas monetization. There are possibility of both these fields getting monetized, which could also lead to better earnings for the company going forward. However, given the fact that the stock has been weak for the last 5 trading sessions, this could be largely because of the global news that we are getting from the oil and gas space. So any weakness coming in into crude prices could lead to weakness in the share prices of Antilopis as well. Moving on to Orient Electric, yet another top gainer on the back of strong volumes. If you look at the volumes, they are nearly 16 times its 20-day average. Let's get in Jasmeet to understand what could be the potential reason behind this kind of a move.
Well, Samir, thank you for that. The stock is buzzing on the back of the heavy volumes, and if you look at the overall stock performance, the stock is nearly up in trade to about 8%. Now, if you look at what the company does, company operates in the electrical space. They provide fans, lights, geysers, and they operate as an electrical brand in India. Now, in terms of the recent news, we said our company has announced the price hike between 3 to 3.5% in the Q3, which will be applicable from Q4 itself, and we can see the top line grow from there on. Now, talking about the Q3 numbers, we did see a good revenue growth at 11%, but in terms of the gross margin, that saw some kind of impact. That was on the back of increased commodity pricing, which should normalize going ahead. But management expects the Q4 demand to pick up from February onwards, and Q4 to see a healthy growth in the results. Now, if you look at the segments did see a broad-based growth. Something like an appliance segment saw a double-digit growth in terms of the overall momentum in Q3, while the double-digit growth was seen in switches segment as well. But the fan and the LCD segment saw a single-digit growth, which should be picked up going ahead. Lastly, on the electrical consumer durable segment, that saw a strong mix coming on the back of the heating and the premium fan mix which they sell.
Okay, all right, Jasmeet, thank you so much for bringing us those details with regards to where Orient Electric stands. But with that, we're completely out of time on this edition of Small Cap Buzzers. But do stay tuned. Ask Profit up next.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to.
Welcome. You're watching Ask Profit here at NDTV Profit. I am Mahima Vacharanin. With me is Soumit Sarkar. As you know, when we started the small cap buzzers, at that point of time also the Nifty was down by about 42 odd points. Right now it's down by about 43 odd points, down by about 0.17 odd %. The Bank Nifty also in that similar range, down by about 0.19 odd %. Let's try to pull up the heat map to see as to what are the counters that are kind of putting pressure on Nifty as we speak. You have Power Grid, which is the top loser, down 1.7%, followed by NTPC, Eternal, Coal India, Ultratech, Asian Paints, Trent. All of these counters under pressure, down by about 1% each. But on the flip side, you have counters like Tata Motors, PV, which has continued to gain throughout the day and is up 1.7%. BEL, Eicher Motors are some of the counters which are doing fairly well. Let's try to pull up the sectoral heat map to see as to how things have changed there, because at the start today we did see IT leading that pack, but that's come down. IT has cooled off from its day's high point. Defense is leading, up by about 1%, followed by Nifty Pharma and then Nifty Oil and Gas. But on the flip side, media losing ground, down 1 odd %. FMCG continues to be under pressure, down by about 0.5 odd %. In terms of the broader end of spectrum, let's pull up the mid cap 150 and the small cap 250. The mid cap 150 still in the green slightly, up by about 0.2 odd %, but the small cap 250 has turned into red. It's down by about 0.14 odd %. Quickly, the BSE 500 before we move on to the queries for the day. You have Tejas Networks, Orient Electric, KSB on the back of its earnings, Tanla Platforms as well as Data Patterns, all up in that range of 5 to 13 odd %. But on the flip side, you have Home First Finance, Nippon Life, Aegis Logistics, Streamlease as well as Affle India, all under pressure, down in that range of 3 to 5 odd %. So that's with regards to where the markets go. But with that, let me also welcome in our guest for the day, Sameer Dalal of Natwarlal and Son Stockbrokers, and Chandan Taparia, Head Technical and Derivatives Research at Motilal Oswal, joining us now. Will be, of course, joining us shortly. Thank you so much, gentlemen, for taking out the time. Sameer, a very good afternoon to you as well. I'll take up the first question, which is from Sriram Raghuraman, who's writing us from Chennai, asking about Poshak Limited. I know this is a very small company. His average price is 821. Wants to know from a 1 year perspective, can continue to hold the counter or not. Sameer, any view on this one?
Sorry, unfortunately none.
Sure, no worries. I'll take up the next question then, which is from Lakshmi, who's writing us from Hyderabad, asking about Spandana Spurti. She's got 50 odd shares at the levels of 450. She's an investor. Should she average out or hold at the current levels? Your view, Sameer?
I can continue to hold the stock. I think it's going to take a while before it gets back to the cost that she's bought it at. Unfortunately, she's bought it at a high price. But things are beginning to slowly turn around. But if I were an investor, I mean, for me, I would look at other opportunities in the market. So because I feel it'll go up, I'm saying hold, but otherwise there are better opportunities which should move a lot faster in the market.
Right. The next query is coming in from Mohan from Coimbatore, and it's on Laurus Labs. He's holding few shares bought at a price of 400 rupees. He can continue to hold this counter for the next 2 years. Should he hold it or sell? Sameer, any view on this?
Yeah, I think Laurus Labs is doing extremely well. The profitability is increasing, the top line is increasing, margins expansion is happening. So all of the things are positive. We believe growth momentum will continue. Would I buy it at this point? Immediately, no. I'd wait for corrections because the valuations have expanded a bit. But if you are already holding it, stay put. I think the stock over the next 2 years can do well and probably be closer to 15, 16.
All right, so that's the view coming in on Laurus Lab. The next question is on Phenolics cable, and this is from Manohar, who's writing us from Pondicherry. He wants to know if this is the right time to buy Phenolics cable from a 1 to 3 month perspective. Chandan, I'll come to you on this one. A very good afternoon to you. What's the view like?
Yeah, very good afternoon. Phenolics cable looks quite positive. In fact, we have positive view on the entire wire and cable industry. However, in last almost 20 months, stock has seen a corrective move from 1700 to almost 700 kind of level, but now it is bottoming out and finding the positive price pattern on the daily and the weekly chart. So some buying interest could be seen in the counter with the support of 835. It can head towards 895, 900 kind of levels.
The first live caller query coming in from Mysore. Vishwas, you can go ahead and ask your query.
Hi, sir.
Hi.
Sir, KPI Green Energy stock. Quantity 1,131. Average price of 450. Current level loss 77,000, sir. Seller road, sir.
Can you hold for long term, Vishwas?
Short term.
Short term. Chandan, any view on KPI Green? Do you expect the stock to recover anytime soon?
It's very tough to look at the recovery. In fact, the trend is negative. In fact, just 7-8 week back, it headed to 500, but again drifted lower and entire recovery fizzled out. So I believe weakness could be there. It would be very tough for the counter to get the swing or follow-up action. However, there is the threat of the downside price structure. So as of now, till it remains below 410, it can go down to 350, 333. So my suggestion is try to exit some position. It would be very tough to get the bounce in the counter.
Okay, so that's the view coming on KPI Green. But the next question is from Sarma, who's asking about two counters. She's got 1 lakh to invest in, and she wants to know whether that could go in Motherson Sumi Wiring or Samvardhana Motherson for the next 1 year. And of course, which one and what is the good time and right price? Sameer, I'll come to you on this one. Your view?
So Samvardhan Motherson Sumi is a better bet if you ask me. Even the wiring business is good, but we think the growth opportunity for Samvardhan Motherson is much higher. Ideal price to buy closer to 110. It's run up a bit again. Valuations are a bit expensive. Yes, the auto sector is doing well, and which is why the stock is at these higher prices. But wait for a correction and then buy into that one.
Next caller query coming in from Pune. Mr. Gupta, you can go ahead and ask your query.
Yes, I can. Hello.
Yes, please ask your query.
Sir, I am having 750 shares of CRISIL.
Okay.
Right. I purchased 100 shares at the rate of 500 rupees. Right.
Okay.
Long back.
Okay.
Yeah? Then they got split into 1 to 10. So now my cost is 50 rupees only.
Right. So you want to hold this counter for long term? Or would you want...
Yes, I can. I am already holding.
Okay. Sameer, any view on whether Mr. Gupta should continue to hold CRISIL? He's already sitting on a very good amount of profit.
Yeah, continue to hold on to it long term. I mean, look, it'll be a slow mover for the simple reason that a lot of the juice is already into the company. But the rating agencies are going to continue to do well. They have great operating leverage, no capex requirements as such. ROEs and ROCs are very strong. So we'll continue to do well. But if you're expecting it to be a multi-bagger from here over the next 3 years, unlikely. If you have maybe a 7-8 year view, yes, you'll get a multi-bagger kind of a return.
All right, so that's the view coming on CRISIL, but the next question that we have is on IRFC. The viewer is asking if he can go ahead and take a fresh entry into this one. Chandan, after the OFS, of course, not being subscribed fully, they did drop subscribing for its green shoe option, and it's come back to the price at which the floor price was set at. But right now, do you think it's the right time to make an entry?
No, it's the trend and setup of the counter is negative. It has been making lower top, lower bottom on the weekly chart. In fact, now trading at multiple months low level. So structure is weak, and once it holds below 100, it can open the further downside towards 92 to 88 kind of level. So better to avoid. Structure is weak, so it would be very tough to get a recovery. In fact, the time of recovery, we have seen fresh selling pressure. So one can avoid. Counter can see a corrective move of 10-15% from even current levels.
Next query is coming in from Satya from Bangalore. It's on Vedanta. He's holding 3,500 shares, bought at a price of 733. The current share price is hovering around that level. Chandan, any view on Vedanta?
Yeah, one can continue to hold Vedanta. We have positive on the Nifty Metal Index, and Vedanta is one of the strongest counter. So I think one can hold the position with support of 700. It can head to a 770 to 795.
Right. The next question that we have is from Mr. Vara Prasad, who's writing us from Hyderabad, asking about HG Infra. He says that he's sitting on a huge loss on this one. He wants to know whether he should sell, hold, or average. Chandan, what's the view like?
Yeah, so talking about HG Infra, in fact, the trend is negative. And the clear negative trend is visible in the monthly chart. I think from last almost 9 months, every month-on-month basis, the stock is falling down. In fact, from last 19-20 months, counter has seen a corrective move from 1880 to below 550 levels. So structure is weak. I don't see any recovery or follow-up activity after the recovery. So better to avoid till it remains below 600. It can go down to 520 to 500.
The next caller query coming in from Bangalore. Suresh, you can go ahead and ask your query.
Yeah, hello sir. Actually, I purchased Amar Raja batteries around 950. Now the price is like around 850. So
Okay.
can I add more? Can I?
And you can hold the counter for long term?
Yeah, long
Okay.
term means yeah.
Samir, any view on Amara Raja? Should he average or should he exit?
I think he can hold on to it. I wouldn't recommend averaging just as yet. Look, there is new capacities for them coming on from the lithium side, which is all going to be great because that will lead to growth and all of that, but it's still going to be a while before they do it. Usually when you put in the capex, by the time the order flow comes, the profitability comes, takes a year and a half. So probability the stock could slide down a little lower first before it goes up, but long term, stay put. I think there is opportunity to make good money in this long term.
Okay, all right. The next question that we have is from Mahendra, who's asking about Texmaco Rail. He's got 1,200 odd shares at an average price of 164. He wants to know if he can hold, average, or exit. Chandan, from a slightly long-term perspective, what are the charts indicating?
So the trend setup for most of these counters are negative in the railway space, and it has been making lower top, lower bottom. However, we have seen a corrective move from 300 to now almost near 200. So let it find some stability. One can buy at lower levels, but let it settle at 100 or 95 before we go for bargain buying, because the way counter is falling down, the structure is weak on every time frame. So just wait for stability, look for 100 to 95 level first before we talk about the bargain buying.
Next query is coming in from Pune. Sunil is holding 1,100 shares of NMDC, bought at a price of 82.59. He wants to know any short-term target on this counter, Chandan, and any stop loss that he should keep in mind.
Yeah, so talking about NMDC, in fact, we have positive on the metal mining counter. However, NMDC is comparatively consolidating in a range, but yes, multiple supports are intact. So my suggestion is one can hold the long position with support of 77. It can head to 92 to 95 kind of levels.
Okay, all right. So that's the view coming in on NMDC. The next question that we have is on Siemens. Anil Singh wants to know if this is the correct price to make an entry, and ideally what should be the right price. Chandan, I'll stick with you for this one. What's the view?
Yeah, so talking about Siemens, in fact, we have seen good recovery or support-based buying in most of the capital goods name. Talking about Siemens, it has been consolidating in a range from last almost 40 weeks. It has multiple hurdle near 3350 to 3380. It is now hovering near to that level. So it requires a small follow-up activity, and I believe this breakout could happen the way the narrow range is being formed after the recovery of last 3-4 days. So one can keep the support near 3260 for an upside target towards 3500.
Right. The next query is coming in from Shikha Kapoor from Bareilly, UP, and it's for you, Chandan. Wants to know whether can she buy BSC at the current levels. Any view on this?
Yeah, so if you ask me about BSC, we are positive on the capital market theme and mainly the capital market, the infra place. So BSC is buy on decline. Major support is at 2550. till it holds 2550, I believe any decline is buying opportunity for an upside target towards 3200 to 3500.
Okay, all right. So that's the view coming on BSC, but we've got our next caller. Kunal is calling us from Chennai. Kunal, hi, a very good afternoon to you. I believe you have a question on KPIT Tech.
Yes, good afternoon. Yeah, I would like to know the outlook on KPIT Tech since it's a little bit in the oversold territory. So any short-term to long-term insight would be helpful. Thank you.
Okay, all right. Samir, I'll take this up with you. KPIT Tech, what's the view like?
Yeah, so we are positive on KPIT Tech. We honestly believe the entire AI thing is a bit overdone. The correction in the stocks is a bit overdone. Now, I'm not saying that growth is going to come back in that space right away now, but KPIT Tech, when you look at it, it's not a pure play IT company, right? It is a product-based company. I mean, IT solutions, but a product-based company which makes products for the auto sector. We believe that space is going to grow. And the stock has corrected quite sharply and the valuations have become a lot fairer. So we think this is a good time to start accumulating KPIT. I think over the next 2 years, you will make good money. So buy is the call on this, but accumulate it slowly over the next maybe 3 months.
The next query is coming in from Ashwini from Chennai. Wants to know the short-term target on Bharat Electronics for the next 2 to 4 months. Chandan, any view on Bharat Electronics?
Yeah, so we are positive on the selective defense and mainly the B year. It looks quite attractive the way every small decline is being bought. So he can hold the position with support of 432. Okay, I think the query is related to BL. Yeah. So with support of 432, it can head towards 470, 482 kind of levels.
Okay. The next question is from Bhavani, who's writing us from Chennai, asking about Bajaj Housing Finance. Wants to know if this is a good buy at the current rate. Samir, would you recommend that?
So, okay, let's put things into perspective. Bajaj Housing by itself is a good company. Growth is good. Valuation is a little expensive. But if I have to make an investment in a housing company, I wouldn't put my money into Bajaj Housing. I would rather buy a Sammaan Capital at this point or an LIC Housing Finance. Sammaan being the top pick, one, because they're getting the fund infusion, new promoter category coming in. So what that will do is lead to a re-rating. It's trading at under 1x book value. LIC Housing Finance also trading at 0.8 times book value. Yes, growth has been a bit difficult, but we believe that as the banks vacate the housing finance space when corporate India starts borrowing, we will see the housing finance space growth coming through. And then what you will see is both of these counters will get re-rated up, which is not going to happen with the Bajaj Housing Finance, which is trading at 3 times price to book. So for me, those two are the better picks. But in all fairness, Bajaj Housing is a good counter. Would I buy it? No, because of the other two, not because of its individuality.
The next caller query is coming in from Hyderabad. Madhvi, you can go ahead and ask your query.
I'm holding HCL Engineering 150 shares. 811 is the price.
Okay.
So is it good stock to continue for long term or I have to exit?
Okay. Samir, any view on HCL Engineering? Should Madhvi continue to hold this counter for long term?
Yeah, unfortunately, she's bought it at a very high price. Honestly, if you ask me, we were positive on the business when the stock price was closer to 300, 350. If you go back maybe 2 years' time, since then the stock ran up all the way to 1,000 and has come down a bit. But valuations are still on the expensive side. The railway offtake, everyone's been hoping will pick up further, which is not happening. Of course, they do other electronics and defense equipments and all of that. So from that angle, we believe growth will happen, but valuations are a little bit on the higher side. So maybe hold an average when it comes closer to maybe 550, 600.
Okay, all right. So that's the view coming on HPL Engine. But moving on to our rapid fire round, Samir as well as Chandan, you both know the drill. Try to keep your answers as short as possible. The first one is on L&T. What's the target for the next 2 years is our viewers' question. Samir, your view?
I won't give a target, but yes, you can expect at least 10 to 12% CAGR returns over the next 2 years.
Satish from Bangalore is holding 25 shares of Gokaldas Exports, bought at a price of 815. Should he continue to hold or average or exit? Chandan, any view?
Can hold for target of 850 to 900.
JM Financial is the next one. Is it a good time to buy? What would be the best entry price? Chandan, your view?
Yeah, so I think if view is positional, can hold. Target is around 150.
Divya is holding 200 shares of Canara Bank, bought at a price of 148. Should she continue to hold, buy more for long term? Samir, any view?
It would just be a hold. I wouldn't buy more at this point.
Reliance Industries, from a next 5 months perspective, can our viewer continue to hold or exit at the current levels? Chandan, your view?
Yeah, can hold. 1300 is major support, and this time it can head towards 1600 to 1650.
Manas wants to know whether should he buy a Steel Authority of India, that is SAIL, at a current price. Any view, Samir?
So I'm not as positive on the metal counters from a long-term perspective because we've already seen a lot of run. So I would say avoid it for the long term.
Okay, Coforge is the next one. From a long-term perspective, can Mr. Menon continue to hold this counter? Samir, your view?
Yeah, like I said, the selling has been overdone. I think hold on to it.
Batuk Bhai from Thane is holding shares of Siemens Energy, 90 shares at a price of 2,949. Should he continue to hold this for the next 3 months, Chandan?
Yeah, we are positive on the power and energy counter, so he can hold this counter.
Okay, Mazagon Dock is the next one. Niket Garg, average buying price is 2548. Should I sell or hold from a medium to long-term perspective? Samir, your view?
From a medium term, sell. From a 3-year perspective, hold.
Rajiv from Gurgaon is holding 500 shares of ITC Hotels, bought at a price of 256. Should he continue to hold this, Samir?
Yes, absolutely. Buy more.
Okay, Karnataka Bank, 200 shares bought at the levels of 216. It is not increasing. Will it going forward? Is this question, Chandan, your view?
Yeah, I think this time it can head higher, can hold with support of 195. It can head towards 225, 240.
Lavanya is holding 500 shares of Quality Power, bought at a price of 916. Samir, should she continue to hold this?
Sorry, no view on this counter.
Chandan, any view?
Qualifier, yeah, one can hold for target of 1000.
Okay, Karur Vaisya Bank is the next one. Geeta from Hindpur is asking whether she can continue to hold this. And if yes, for how long? Samir, your view?
Yeah, if you have a 3-year view, hold on. 1 year might be a little sluggish.
Ashwini from Chennai is holding 145 shares of M&M Finance, bought at a price of 383. Chandan, should she hold?
Yes, you can hold for target of 400, 420.
Precision Wires, is this a good time to buy from a 3-month perspective, Chandan?
Yeah, can hold or buy.
Okay, all right. So that's the end of this rapid fire round. Of course, thank you so much, Chandan, as well as Samir, for helping us answer those queries. With that, we've exactly hit the 100 mark. That was the expectation that Puneet and I had. By the way, we did hit 100 yesterday as well. So it's not just the Soumit record that we always do. But with that, completely out of time on this edition of Fast Profit. India Market Close up next. Do stay tuned.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi guys, thanks so much for tuning in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia and Sharad Dubey. Guys, question for you. Have you ever walked into a movie theater and seen the trailer of a movie thinking that it's going to be absolutely fabulous, it's going to be a blockbuster, and then been completely disappointed by the end of the show?
Well,
Always.
I think
Always. धुरंधर भी देख लिया तुमने?
धुरंधर का ट्रेलर भी अच्छा था, but movie was also good. But I'm just trying to remembering which was a disappointment.
You've not been disappointed. You're not
I was
experienced
disappointed with the timing of Dhurandhar to some extent.
Maybe
very long.
Might be a disappointment.
Okay, this is stretching too much. We're talking about the equity markets. Let's take a look at what we're speaking about. Because the markets have actually given up all of those early gains and you're seeing red on the screen. Obviously, this is a disappointment. This is something that you've seen consistently all through the week. Any shade of green is being sold into for the benchmark Nifty 50. We have broken and holding below that 25,500 mark, which we stayed above for quite a while today. Sharad, it's not
Alex,
a pretty
you're
picture.
right. Now I got the joke. It's a bit slow, but the trailer was yesterday. And
the trailer
movie
was yesterday.
Nice.
All right, and let's take a look at the heat map for the Nifty 50, because really this is going to give you a sense of what is moving the needle today. There is significantly less green on the screen than there was at the start of trade. The green had actually stretched all the way to the second last line, but you have Tata Motors PV, you have a couple of other names in the healthcare space. You have Max Health, you have BEL, Eicher Motors doing okay, Sun Pharma, Adani Ports is okay. But on the bottom of the screen, you have Power Grid Corporation of India, CIL, NTPC, a couple of these PSEs that are not doing particularly well. Once again, Eternal makes its way to the bottom of the screen. Remember, it's lost quite a bit of ground in the recent past. If I remember correctly, yesterday it ended in the green, but broadly it's been a little bit of a downtick for this
and Alex,
company.
after a long time, I'm not seeing any IT stock over there.
Yeah, it's good news. So let's also pull up the sectoral indices to show you how this picture looks, and don't be surprised if there's more red on the screen. That indeed is the case. India defense is okay. I wonder where metal is. Can you spot metal? Metal is losing ground today, looks like, right? So this is media, of course, but you have had metal that was one of the bright spots yesterday and day before yesterday.
It has turned flattish, actually.
Is in the case today. So it's metal. Metal is just about flat in trade today. So what's working is defense, it's healthcare, it's pharma. Some of the defensives are doing okay, but everything else is looking a little wobbly.
Exactly, and I think the entire trade also, Alex, you mentioned the indices, that's also looking wobbly, and that's what the options data is suggesting. Let's pull out the key factors to watch out for currently. Yes, a Sensex monthly expiry is at play. You can expect volatility, and as we mentioned, the range-bound movement is there in the market. But if you have a longer time period frame, something like a medium-term setup, then as we discussed, this buy the dip strategy also might be working in. There's a minor adjustments which is going to be playing for Nifty Bank, so you can expect a little bit of movement. For this quarterly indices adjustment which happens, the mid caps are outperforming slightly the Nifty index, but overall if you look at the global macro specific, the risk on sentiment is still there. The AI trade is continuing, and we have seen risk on asset coming. FI supports is expected to continue going ahead. We are already below that 80% FI shorts mark, and we saw good buying also coming in from the FI, so that's something good. But European markets, they have opened mixed as of now. So largely we can see a little bit of consolidation kind of taking place in the market, but it's still wait and watch. Of course, that 200 DMA level of Nifty is still respected of 25,340. But Hiral, what are the stocks on your watch list today?
Sharad, it's very interesting to see the kind of names that we have, because the problem is the volumes are good on these, but no major movements coming in. You have the likes of a Tata Motors PV, a strong volume buzzer in trade today, followed by a Shriram Finance, which has actually hit a 52-week high. Coal India, we are seeing some profit booking in today's session, and a Eternal, where the volumes are pretty strong. So that's from mainly the bigger names. If you talk about smaller names, Sanofi Consumer, on the back of a strong set of numbers along with the KSB, both of these counters are buzzing in trade. You have Jyoti Structures, which is in focus, which is trading at a 3-month high. Now, SpiceJet is very interesting because that rebound did start in the last hour of trade in yesterday's session, and that has continued in trade today as well after the block deal. Balu Forge has signed an accord with NATO, and that's what is keeping that stock afloat. A 663 crore block deal on Home First is why the stock is in focus. And Chola Finance has clarified that Valiant Subaya's exit is not something that is happening. He's pretty much back, going to be there as well. E2E Networks has launched a 130 crore QIP, and a United Spirits. I mean, it's a Diageo lowering guidance impacting a United Spirits in trade. So these are the stocks that we're discussing in today's session, but let's get in. Samir Dalal and Rajesh Palvi of Axis Securities joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Rajesh, my question to you is, for how long are you seeing this consolidation, this range to continue? Because that's what we've been talking about since quite a few days now.
Yeah, good afternoon, Hiral. Good afternoon, everyone. I think range is still defined by the market, like 25,400 on the downside, and on the higher side 25,800. This band is playing out since last couple of weeks, and we are not able to go beyond these levels on a weekly closing basis, though we have crossed these ranges briefly, but most of the time market has consolidating in this range only since last 5-6 week, or we can say little longer period. Looking at the data in today's session, especially the put based concentration has shifted lower, as we have already broken 25,500 major put based concentration, and unwinding trade has been played out when we have broken this level. So now put base is shifted to 25,400, 25,300. And now we are almost closer to 200-day moving average, which is very crucial for this corrective move. So I think 25,350 is the crucial level based on the 200-day moving average. So that level needs to be protected by the market if at all Nifty has to show any kind of pullback from here. But looking at the other, parameter in the market, like, sectors where, strength is clearly there, like, sector like banking, automobile, even metal is also holding the strength. So these sectors are clearly showing that, still, and pharma and healthcare has also, started showing some sign of buying interest. So I think the shift is on the stock specific buying interest is there. Index is likely to remain in the range only. So I think one can focus on this sector where, clearly these sectors are holding the strength, and most of the stocks from these sectors are trading above to their near term, short term moving averages. So I think one can find opportunity in these sectors. Bank Nifty is looking, comfortable. So we believe that, banking stocks can continue further more strength.
Okay. Let's very quickly, Rajesh, talk about the individual stocks that you're finding attractive at these levels.
So I think Eicher Motor one can look on. Here we can see again good traction, and stock is again trading near to day high. Almost it's at all-time high trajectory. We are projecting target of 8250, 8300. On the downside, 8030 needs to keep as a stop loss. Another stock where we are focusing is from the pharma space, that is Dr. Reddy. A very strong rebound from the lower level, and on the weekly chart, stock has already broken its falling channel. And looking at the structure, we hold our bullish view, and we feel that, stock has potential to extend gain towards 1360, 1370. So one can buy with stop loss of 1290.
Okay. Allow me, Samir, to come back to you on what we've called today the stock of the day. And this is on the back of earnings, Sanofi reacting quite sharply, right? And Mahima joining in to tell you about why that is. She'll set the context, and then we'll go across to Samir to find out what he has to say about the earnings that have come through. 16% right now on the charts for Sanofi Consumer. Mahima, what stands out here?
Right. So, Alex, in terms of the key highlights, I think the first one being that this is the second consecutive quarter where the company has registered a 40% growth in terms of its top line. So, two consecutive quarters where it has been a good growth. Before that, also the company has been growing at that rate of 20-odd%. Sustained growth momentum has been seen across its key business segments. Overall, domestic sales has seen a growth of around 23%, and exports did see a growth of around 9.3%. Of course, 9.3 times, and this is on the back of a lower base as well, but good growth coming in from both domestic as well as export side. Now, in terms of where the numbers go, revenue did see an uptick of around 47%, EBITDA an uptick of around 44%, margins stood at 35.8% versus that of 36.5%, so slight downtick in terms of margins. This is, I think, largely on account of the increase in terms of raw material prices that we saw. In terms of the net profit, it did see a growth of around 50-odd%. The growth for the bottom line did come in from largely three expense cores. The first one being stock in trade, which got reduced by around 67%, depreciation, which got reduced by around 2.4 times, and other expenses, which saw a reduction of around 47%. So this is the overall view as to how the numbers have panned out for Sanofi Consumer and why the stock is up in trade today.
Okay, so that's with regards to where Sanofi Consumer goes. Samir, any quick view, because the numbers are pretty strong. The stock seeing gains of little over 16%. We will talk about the other pharma stocks as well in a bit, but a view on a Sanofi.
Unfortunately, I don't have a view on Sanofi, so I'm really sorry.
Okay. Rajesh, anything on the charts?
So stock was in downtrend, but today's move is very interesting, and now stock is managed to cross 20-50-day moving average. Though it's a very sharp run up. So I think if any cool off effect comes and the stock comes around 4,500 would be again, level where, one can buy with stop loss of 44.50. On the higher side, possible up move towards 4,800, 4,850 we may see again once the stock retrace little bit from the current level.
So that's Sanofi Consumer, but staying with the pharma pack, Zydus is another one where they've said that they will be launching generic semaglutide injections in India, and this is after the patent that expires in March 2026. In fact, a couple of brand names that they're planning to launch the drug under. This will be a single adjustable pen which will let patients select different doses, and this would actually lower costs as well. And they would hold exclusivity rights when it comes to reusable pens with pre-filled cartridges. So that stock is up in trade. Apart from that, a negative news coming in for Dr. Reddy's, where DAM Capital has said that Sandoz does not give any specific guidance on semaglutide launch in Canada, and they're looking for a potential launch in the second half of calendar year 2026. Now, semaglutide approvals or launches in Canada and Brazil could be delayed versus the current guidance that we had of the first half of 2026 that was given by Dr. Reddy. So this is something which could be negative when it comes to Dr. Reddy's. And we've already spoken about Biocon, which have got the approval in terms of I forgot the name. But one of the other GLP-1 drugs as well. Liraglutide, correct. That was liraglutide, semaglutide, and there is one more. Liraglutide, okay? So that's the entire GLP-1 portfolio. Apart from this, Aurobindo is another pharma stock which is in focus as well, because Eugia has won the US FDA approval for liver transplant drug, and the product is expected to come in the first quarter of FY26. So pharma, a lot of news brewing, but leaving aside Aurobindo right now, if you have to look at the other names from the GLP-1 portfolio, Samir, any views coming in there? Because the conversation right now is the kind of pricing pressure generics could face once they come into the market, because your innovators have already started dropping prices, and two, scaling up is going to be a concern with the kind of volumes that they need to produce.
Okay, so to answer the second part first, I don't think scaling up for any of these companies is going to be a very, very difficult task when it comes to it, right? Now the question comes is, what you rightfully said is that the pricing pressures are coming. But if you look at any drug that has been there, which is a new discovery, which comes off patent over a period of time, the prices fall, the market shrinks. So there was a particular drug about 4 or 5 years ago, which was about $2 billion size in the US, which is now about, I can't remember the name of the drug, but it's become $150 million size, right? The market size. So once the generics come into the picture, the market size shrinks. So I mean, just to assume that this kind of profitability will continue endlessly, I think that was a bit over expected. But you got to also look at it that that's not the only drug that they're making, right? They have multiple products, multiple product profile, new launches expected over a period of time. This is just one or two of them. So if you work on the oncology side, if you look at the kind of research that's going in, I think there's an opportunity. So for me, pharma is not dead. I wouldn't be too worried about this one medicine that is going off patent where pricing will come down and, all of those things. You look at the entire basket of products, I think the opportunity is still very large. Indian pharma in the US is generic based, and the more markets that we are able to capture leads to direct profitability growth, because it means operating leverage kicks through. And if you look at the gross margins, even of generic drugs, they are as high as 80-85%. So I don't think there's any problem when it comes to that. So for me, positive on pharma. The stock which I am very positive on at this point of time in the blue chip is, of course, Sun Pharma, followed by Lupin and Dr. Reddy. And in the mid cap, I think Torrent Pharma is something that's looking very attractive. Though they have very limited US exposure, I think that will increase over time and the profits will start.
These are the important picks coming in from Samir. But let's also listen into what Bicon's management had to say, and also we'll take the view of Vishal Manchandana from Systematics Shares and Stocks.
So you just received the approval yesterday, and now we are preparing for the launch. We of course had a back order for supplies in Europe, but for the US we are expecting that within the next 30 to 45 days we should be able to launch the product.
So markets are going to expand multifold as the price points come down. So my sense is we have about 20-25 million people using GLP-1 pens in US and Europe. So if we have even half of those patients using GLP-1 pens in India, so we have a similar population size like the US and Europe put together. So even then the market is going to be very large, maybe in excess of 10,000 crores, and even after assuming a substantial discount to the current prices.
All right, but let's just look at the F&O developments which are happening, and we had pointed out earlier when we discussed with Alex and Hiral about the options data. It was suggesting a range bound move, but a little minor spike has happened. for Nifty and Nifty Bank as well. But let's look at the stocks which should be in focus. Mankind Pharma, long build-up coming in. Almost stock is up 6%. A good institutional flow. Tube Investments also making it to the list. That's also up almost 4%. Looking at the short covering candidates, this of course includes Oracle Financial Services. This is also the top gainer in the Nifty IT index. Remember the flow which we saw in the short covering in IT, that has actually come down, and a lot of IT stocks are in green, but towards the, you could say, the same similar levels. But IDFC First Bank, that's up almost 4% and good buying coming in. And if you look at the long unwinding, not a major important trade which would come in like a Samman Capital, but yes, LIC Housing Finance, that's also down. Let's look at the key shorts which is being developed in the system. In the F&O space, Dixon Tech, that's down 2%, and even Muthoot Finance, they also make it to the list. Rajesh, I want to get you on this, especially on the short build-up on Dixon Tech. Street is fearing that some more sell-off can happen. Can you just give us a little bit of stop losses for this segment?
Yeah, so Dixon Tech is clearly in downtrend, and a series of lower top, lower bottom formation is taking place. In this process, stock is now trading below 250-day, 20-day moving average, and stock is now approaching towards its Feb 2026 swing low. So I think 10,000 is the crucial level for Dixon Tech on the downside. If it's break that level also, I think a fall can extend further, and possibly 9,800 would be the next level where stock can continue its down move. Those who are already on the short side of trade can carry their short position with stop loss of 10,500.
Got it. All right. On that note, it's time to go to our regular segment, which had gotten curtailed for a short while because Soumit wasn't here. It is Heard on the Street, and Soumit is back to tell you about what the buzz is from the dealing room. Soumit, there's a lot of stock-specific action, but it's pretty dull on the index level.
Well, yes, pretty much dull day of trade that we are looking at. But volume action continues to be there, even in few stocks that we are counting on. Firstly, when it comes to Bandhan Bank, what dealers are indicating is that there are buy flows on institutional desk. Dealers indicate that the management has given strong commentary to few of the institutional investors whom they met, and dealers are expecting now the fourth quarter to be quite strong, and hence even in a dull day, the stock at one point of time was up as much as 3% in trade. When it comes to Coal India, the stock is down in trade. Dealers are indicating that the Feb 2026 volume numbers could be weak, despite the fact that the base number is also on the weaker side. Despite that, there could be a drop in volumes is what dealers have indicated. In fact, they're expecting volumes to drop by nearly 2 to 3% on a YY basis. For GMR Airports, dealers are expecting a block deal to happen very soon. For HUL, multiple dealing rooms are indicating or recommending a sell call to their clients. So keep an eye out for HUL as well in trade. And lastly, when it comes to RBL Bank, there are buy flows on FI desk. Large foreign investors have been buying in trade, and even delivery volumes are expected to be on the higher side. So keep an eye out for RBL Bank as well.
Thanks a lot, Soumit, for that. But let's just pull out both the charts of RBL Bank and Bandhan Bank. It's of course a trader's favorite stock, and these stocks buzz a lot on flows. If you could just show both RBL Bank and Bandhan Bank, both of them on the intraday charts. Rajesh, out of these two stocks, on a very short-term basis, which one is looking better right now?
So if I have to select one, so then I'll go with the Bandhan Bank. Though fresh buying interest has been seen in this counter, and this is the 5th consecutive week where stock is making higher high low formation, and now stock is negotiating with its July 2025 swing high. Looking at the formation, we believe that there could be a higher possibility of breakout of this consolidation range. I think 192 is the important level to watch for. If it's break, then possible target towards 220 we may see on the positional perspective. So Bandhan Bank, one can buy and accumulate. On the downside, the 180 needs to keep as a stop loss.
That's with regards to a Bandhan Bank. In fact, the move in terms of Bandhan Bank also is very interesting in the last couple of months. If you just pull up a one-year chart, and you'll see the kind of gains that have come in on this counter. If it's actually corrected, I think it's a 7-month or no, from December to February, a strong surge that has come in after that correction that it saw in the past. So there is some bit of interest that's coming back on this counter. But moving from here, if you see in terms of couple of stocks that should be on our rapid fire segment now. Rajesh, quick views. Tata Motors PV, again a strong volume buzzer. In fact, we've been looking at Tata Motors CV as a play where the valuations are expensive, but still it seems there is no stopping. But what about a PV?
So one can buy at current level. Fresh breakout is there. So I think 410 would be the next target.
Okay. How about a Shriram Finance? It was one of the stocks which saw a good run up. If you see in the last couple of months, do you see that surge to continue?
Yeah, very strong structure across all time frame. Yes, one can continue to hold this stock. I think 1150, 1200 would be the next target.
Okay. How about a Coal India? Because now it started to see some bit of profit booking after a good 1 month.
I think still stock is holding the breakout of a 6-month consolidation range. I think 425 needs to keep as a stop loss. Possible target towards 445 we may see on a positional perspective.
Okay. You have Eternal also which has been seeing pressure, and if you see in terms of this stock, there has been a block deal. The volumes are also very strong in today's session. Last couple of days weakness has continued.
I think it's a short candidate. One can remain on the short side of trade with stop loss of 255. On the downside, possible target of 240, 235 we may see.
How much further pressure, Rajesh? A follow up on this one are you seeing on Eternal in case it breaches the lower levels as well?
I think it has already broken its previous swing low of 252. So I think if it's remain below to 252, possible 235 would be the next level to watch for in this downfall.
Okay, and very lastly, Jyoti Structures.
I think one can avoid at this juncture, though stock has shown some pullback, but still 15 would be the major hurdle to cross.
I do want to ask about RVNL. Pull up the chart as we're speaking about it, because at about 230 or 235 or thereabouts, you've seen an order win that has come through, and you see the kind of jump that the stock has taken. It's a pretty sizable order, 645 odd crore rupees from NMDC. This is for the construction order, or rather it's for construction that will take place in Chhattisgarh. We'll get you more details on that. Let me quickly go across to Samir. Samir, RVNL and a couple of these other players in the railway space, would you say that the tide is finally turning, that you've seen a few more orders come through, that you would want to see that earnings trajectory pick up, of course, but is this a sign of things turning in your opinion?
Well, we'd hope it's signs of things turning, right? The entire railway space, what had happened is the valuations had probably gone way out of whack back in the day. Stocks had run up significantly. But if you look at even RVNL as of today, it's still trading at about 50 times forward earnings, which is a bit on the pricey side, right? So, of course, orders coming through will be good because that means that you could probably get a higher turnover, operating leverages playing out. But valuations are still expensive. So you have to be a little more selective in the railway space, I think. So I would look at companies that are catering to the wagon side. I think there's more of an opportunity. So Texmaco Rail, Titagra Rail, those I think have a better opportunity of growth not growth, but better valuation comfort plus growth given the kind of expansion that's happening. So that is where I'd be focused more. Yes, these order flows are positive, and you'll see these 1 day, 2 day spikes, but then what everyone still eventually looks at fundamentals, and if the valuations are not justifiable, the stocks come off. So for me, RVNL at this point is still an avoid. Look at if you want the rail space, top pick in that space right now for us is Titagra Rail Wagons.
All right, but let's move on to the commercial vehicle segment. These stocks have surged around 40% since mid-November, raising questions on stretched valuations. Brokers like HSBC, Nomura and even Ambit still see value, backing names such as Tata Motors CV with buy ratings and higher targets. And as the demand and the CV upcycle gains traction, we get in more details. Mahima is there with much more on this and the valuation story of the CV space. Over to you, Mahima.
Right. So, Shara, the question really here is that after the kind of run-up that we've seen in all these commercial vehicle players, almost a 40% upside is what we've seen in a lot of these names. Are valuations stretched? Because forward-looking statements from company as well as brokerage's view, suggest the other way around, right? In terms of where the returns go since 12th November, because that's when Tata Motors CV got listed, Ashok Leyland has given a return of 46%. 58%, Tata Motors CV of 56%. Of course, this is the merger effect as well. The Nifty Auto has overall seen a growth of around 3.5% versus that of Nifty 50 seeing a degrowth of around 1.5%. Now, what has led to this stock price outperformance? GST rate cuts led to buyers sitting, overall on the sidelines before, of course, the GST rate cut, and then the inflow of orders coming in for all of these companies. Ashok Leyland, in terms of Q3 numbers, Ashok Leyland saw an uptick of 24% in terms of its total units. Even in terms of Tata Motors CV, the uptick was around 20% wholesale. MHCV also saw a market share at 47% for Tata Motors and 32% for Ashok Leyland. In terms of why these players could still have some leg of growth, first one being that the high average age of trucks is at 10 years versus that on a normal age of around 7 years. So overall, fleet operators will need to eventually replace the age-old trucks. Ashok Leyland in its con call did say that to go back to 8 years fleet age would also take a few years. Secondly, onset of quick commerce has led to more demand in terms of these trucks. Thirdly, export currently just is around about 7% of the total commercial vehicles, total LCV sales. So that has a huge scope of improvement and growth from here on. And other avenues of growth like buses will be another trigger as well. In terms of where brokerages view go, Nomura believes that there is still early stage of CV upcycle. Volumes are yet to cross the FY19 peak. FY27 industry growth can be much stronger if economic growth picks up, and expects strong 18% EPS CAGR between FY26 to 28. Nomura sees an EPS estimate for Tata Motors well ahead of consensus by around 12% in FY27 and 11% in FY28. Lastly, common analyst views, there's benign commodity prices, lower discounts and operating leverage that should offer margin tailwinds from here on. And in terms of buy calls, Ashok Leyland at 61% upside and Tata Motors CV at 87% upside. Valuations still trade between 11 to 13 times EV to EBITDA in line with the historical average. So this is the overall view of what the scenario is looking like in terms of where the commercial vehicles go.
Thanks a lot, Mahima, for that. Rajesh, to just get you on this, it's a good time to book a little bit of profits if somebody is already invested in the company for both Ashok Leyland and even Tata Motors CV. Your views on that?
So if I look at all these three stocks, Ashok Leyland still in the uptrend, and stock is holding strength on the near-term, short-term chart, and we've seen very strong run-up in this counter, especially in last couple of years. Stock is clearly in uptrend. So I think for Ashok Leyland, my advice would be to trail your stop loss around 200 level. If it's break 200, then only exit. Otherwise, I think carry your position as overall structure is bullish, and I think in this kind of volatility also stock is trying to hold the strength on the near-term chart. So this stock has potential to extend gain towards 240, 250 also going forward. But follow the stop loss of 200 if you are on the long side of trade. But Tata Motor commercial vehicle still, if we analyze on the short to medium term structure, stock is consolidating at this juncture. So here also strength is there, but follow the stop loss of 470 if you are on the long side of trade. If it's not break below 470, I think you may continue with your long position.
I just want to get you also on this. The CV upcycle, when it starts, it's not just a 1 year, 2 year story. How long is this story? And if that story plays out, who will benefit the most here?
Yeah, absolutely. If the story plays out, it will be a long-term growth story. But the point remains is that we've seen this one bump up that has also come because of these GST cuts. Now, the question is, can that momentum continue in Q4 and Q1 of next year? So we need to see that before we assume that the trend has changed. Because honestly, if you ask me on the ground level, I mean, if you look at industries, I don't see that much growth happening. So then eventually the demand for trucks may also start coming down. Apart from the replacement demand, fresh demand for expansion of fleets may not be as strong. So for me, I want to see continued growth. Stocks have run up quite a bit, and your question, which you had actually posed before, should you book some profit? So my view is slightly different. I feel a little bit of profit booking is warranted at these levels. you may get an opportunity to get these stocks 20-25% lower if something misses on the growth because it's priced to maybe perfection to slightly overvalued at this point. Now, when it continues, if the growth momentum continues for the next, if the economic cycle uptick happens and real estate, cement, industries all do well, then I'm sure these trucking companies these commercial vehicle companies will do really well going forward, and the stocks can move up further over the next 3 years. But the upside potential will get muted down to anywhere between 8 to 10%. And that is not great when you look at it from a 3-year perspective of a CAGR return of 10%.
All right, so a little bit of profit booking can be there for both these counters. But let's take a short break. But before that, let's listen in from Nikhil Malavarapu. He's the joint MD at Centum Electronics, who says company is expecting a growth guidance of 25 to 30% in the upcoming quarters following their big order deal with HAL. Listen in.
At the end of Q3, our order book was close to around 1,800 crores. That includes all different parts of the business for us. This quarter, apart from, of course, this significant order, we are expecting some other important opportunities to also come in Q4 that's related to space-based orders, as well as a few other critical programs that we've been working on. So we expect, and I'm only considering the phase 1 part of what we talked about of the program, so which is about 70 crores. So we expect our order book to further go up in Q4 a fair amount. And again, like I said, will give us a fairly strong visibility to continue a healthy growth rate going forward of 25 to 30%.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of
Welcome back to India Market Close on NDTV Profit. Now, defense as a pack is in focus in today's session, and this is on the back of Prime Minister Narendra Modi's visit to Israel. The conversation over here is, what are the defense ties going to look like? Because there are partnerships which are already in place, so there could be some enhancements happening on that front as well. Newer partnerships and collaborations could be discussed. Let's see what is on the cards. Where are we already in terms of India-Israel defense partnerships? What is the expectation and what could be in store, and the companies that benefit out of it? If you see the index as well, that is at the day's highest level. So there is something brewing on that front. Mahima gets us all the nitty-gritties and the details that one should be watching out for. Mahima, what do you have for us?
Right, Hiral. So over a period of time, we've seen India and Israel partnerships, evolving in terms of where defense goes. And from just a buyer-seller relationship, it has, further deepened and has become a multi-faceted strategic alliance. In terms of partnership, that is going to focus on co-development as well as co-production. India is Israel's largest defense customer. India accounts for did account for 34% of Israel's total defense exports between 2020 to 2024, and in 2026 the bilateral defense collaboration has reached around $8.6 billion. This is early in 2026. In terms of where the ties goes, the partnerships in terms of different segments, in the air and missile defense, there is Barrack 8, plus there is flagship joint development between DRDO as well as IAI. For drones, that is UAVs, extensive use of Heron TP, Searcher, Hermes 900 UAVs, plus Drishti Trends Starliner produced in Hyderabad via JV with Elbit system is in place. There is also loitering munitions that India uses, and that includes kamikaze drones as well. In terms of where the precision strike system goes, there is already partnership in place where, of course, India has recently approved $8.7 billion package. Spice 100 guided bombs, Rampage air-to-surface missiles, and Air LoRa ballistic missiles. These are, the offerings that are already in place. In terms of where the joint venture ties goes, major Israeli firms like IAI as well as Elbit as well as Rafale have JVs with Indian giants. Now, company names where there have been JVs or partnerships include counters like Adani Defence and Aerospace, Bharat Forge, you have Tata Advanced Systems, Mahindra Defence, Larsen & Toubro, HAL, BEL as well as Bharat Dynamics. In terms of where treaties goes, 10-year roadmap for AI, cyber security as well as quantum computing is in place. Bilateral investment treaty signed in September 2025 aimed at turbocharging as well as defense investments. In terms of where the other ties goes for missiles and bombs, there's key systems that include Spice 2000 guided bombs, Spike anti-tank missiles, as well as Rampage air-to-surface missiles. For surveillance, India uses there's Israeli Falcon AWACS advanced radar systems. And lastly, in terms of where strategic manufacturing hub go, there is Adani Elbit advanced systems in place. There's PLR systems as well as there's Kalyani Rafale advanced systems. In terms of emerging technologies, what we'll be looking at, there is anti-ballistic missiles in defense, laser weapons as well as Golden Horizon missile, and cyber security as well as AI. So these are the aspects that we'll be looking at in terms of where emerging technologies goes. But this is the overall view as to how partnership and ties have been between India and Israel in terms of where defense goes?
Okay, very interesting and quite the prospects there. Thanks so much, Mahima, for that. We're joined, I believe, by Vineet Bolinjkar, who's the head of research at Ventura Securities. Vineet, thanks so much for taking the time and good afternoon to you. I hope that you heard what my colleague Mahima just listed out about the prospects for Indian companies amidst this tie-up with Israel. But even beyond that, my question to you is, how do you view the Indian defense pack if you're talking about transfer of technology from overseas to India, especially at a time when India is signing so many bilateral agreements?
So basically, I think it is going to be one of those secular stories which is going to really augment the Indian industry. I believe that, it is on cusp of a multi-decadal growth story. It can be double digit because we are not talking only of about, rearming the Indian defense pact, but we are also talking of exploring and selling to the world. I think Europe and the India tie-up that has happened is fantastic. We've got very strong relationships with the Russia and now with Israel. So I think these are the largest exporters and ammunition, deployers, providers, etc. So I think India stands very well to benefit from this. I think there is a lot of focus that is going to come not only on capital equipment but also on consumables. So I think it's a secular growth story which is going to play out in double digits over the next foreseeable decade, I think.
A decade story. That's what Vineet is talking about. But let's move on to the rapid fire part 2 for India Market Close. Rajesh, you know the drill. We'll start first one. SpiceJet, the stock has rebounded in trade volumes at 3 times its 20-day average. Your views on that?
I think try to exit in this pullback. Stock structure is weak.
Okay. Balu Foj, they have signed an accord with NATO and the volumes are also at 4 times its 20-day average.
So 510 is the resistance. So if its stocks comes around those level, exit.
And Home First, it's in focus on the back of a block deal. Stock is down almost 4%, almost 5% now. What's your take on that?
Stock is at multiple support area of 1150. So those who are already on the long side of trade follow a stop loss of 1150.
And Rajesh, the next stock, E2E Networks, they have launched a 130 crore QIP.
Okay, so I think hold the position. At this juncture, I think 2480 would be your stop loss.
And Aditya Infotech, the block buyers include Abu Dhabi Investment Authority and Kedara Capital. Of course, yesterday there was a big block, but absorption seems strong.
Yeah, I think one can hold the position. 1480 needs to keep as a stop loss.
All right, so this is the end of the rapid fire and interesting picks coming in. But Aditya Infotech is something which is pretty much interesting on the surveillance theme. I just want to take this stock and get Vineet also in this. Vineet, if you could just give us the entire picture of this surveillance theme that has also picked up, and Aditya Infotech, the brand is called CP Plus. So your take on this entire theme?
So we don't track Aditya Infotech, but surveillance is obviously going to be the natural growth story emanating from, wanting to, track the markets, where individual investors are being tracked. And, that is a larger growth story also in the states of America, where, there's a lot of, security related ante coming up. So I think to that extent it will do well, but since we don't track it, cannot provide you much information on that.
Actually, ask a slightly broader question, Vineet. Since I'm speaking to you after a short while, the question is, at this moment, you're seeing quite a bit of consolidation, and any rise is being sold into. The point is that this worry on tariffs seems to be affecting AI, seems to be affecting IT. From gains of about 1.5%, it's up only about 0.1% right now, the index level. What do you think it'll take for a sustained up move? Is it going to be the fourth quarter earnings that we'll only see starting April?
So, there are a couple of things that I would like the street to address. One is that, when you replace software development revenues with AI, can you also expedite growth? Because, replacement and, getting newer business are two other things. So keeping that in mind, I think those are the two things that we would like the management to walk the talk after their quarterly numbers are out. And till then, we continue to remain skeptical on the growth story. Right now, valuations are comfortable. Some are in the reasonable valuation category. But, there is no mojo in the stocks because of the lack of growth.
Sure. In your category, the mid-cap space, the Persistence and the Coforge, once they were street favorites, but they had a good kind of sell-off within the last 2 days. They're trying to normalize any kind of, a positional setup which is looking good or you would like to avoid in the mid-cap IT space. Your views on that, Rajesh?
No, I think at this juncture, I'll say avoid at this juncture. We have seen a damage in the near-term, short-term structure for most of the large-cap and mid-cap IT space, though there is some pullback action in some of the pockets, but still looking at the overall structure for Nifty IT also, we hold at this juncture cautious view as there is no as such sign of recovery despite of most of the stocks are in oversold trajectory. So maybe we could see some more follow-up selling in these counters. So minor pullback should be used as an exit opportunity at this juncture.
Minor pullback means exit opportunities for IT stocks, but AI has been impacting all the IT stocks. There have been reports coming in. There was a Citrini report, but now an antidote has come in, and that's giving a different viewpoint. So I'm going to get both of them. And of course, we have got that through AI. But I'm going to give you the first reason. That's the document type. Citrini research, that's for 2028. They have, you could say, a speculative post-mortem kind of a setup in their report. But look at the quantitative rebuttal, which is coming in from Citadel Securities. Another important trigger would be the macro stance. What's the macro stance for Citadel Securities? It's techno-optimistic. That means AI is augmenting the economy. But on the other hand, Citrini research, a bull case, it won't be, it's a bear case. The techni-pessimist, that's the name which is coming in, and AI is breaking the economy. So that's a bit negative. That's what was spooking the IT stocks. Citadel Security comes up with a very new concept on the primary. This is the execution lag. That means the overvaluation could be there of the AI speed. And in the case of Citrini research, they have stated this is something called ghost GDP. That means high output and zero demand. So, of course, this is, you could say, negative coming from both the sides. Labor outcome, Citadel Security says there is going to be a net job creation. That means new service classes will be coming in and you should start training yourself on AI. That's what they're trying to say. But Citadel Research has a different viewpoint. They're stating 10% plus unemployment would be there and the white collar will be collapsing. Let's talk about another key category, that's the capital flow. Citadel Securities, they say reinvestment would be there of the surplus into the new ventures. But on the other hand, for Citrini, they say the profit hoarding would be there by non-consuming AI agents. That means the profits will be taken by the agents. That's pretty much interesting. S&P 500 view, how does it actually stack out? Citadel Security says it's a steady growth backed by margin expansion. That's the bullish view coming in. But on the bearish side, there is a terminal decline from 8,000 to near 5,000. These are the levels we are talking about S&P 500. Also, the key metric to actually track when we are seeing both of these reports, the first one is, of course, the substitution elasticity, the friction of change which comes in. That's on the positive side. But on the negative side, it's the consumption velocity. That's almost 70% of the GDP which can be impacted. So you can see how much key criteria are there. Two different stories are there. But it's pretty much interesting. One comes scaring the IT pack, another comes actually giving some hope to the financial pack. So this is where the AI versus bull versus bear scenario comes in.
Very interesting. I wonder what Vineet makes of this entire argument. There has been, of course, this argument of increased productivity and a churn, not necessarily a loss of jobs. But where in this whole argument, when it comes to India's listed space, do you come up on? Vineet, that was for you.
Can you repeat the question and can you be a little louder because I'm losing the volume?
Okay, so you've obviously not been able to then listen to Sharad's entire argument between the bull case and the bear case in the AI space. But the jury's out. So some people are suggesting that this is a bit of a bubble and that the implications of the adoption of artificial intelligence are overblown. Other people are saying that it cannot be ignored at all. And they're saying that productivity improvement will result in an improvement in margins for companies here in India as well. Where do you stand in that argument, and which stocks do you like based on this argument?
So, couple of things that we need to address is the fact that, in the international markets, job cuts are a result of AI implementation. That is also very true in the IT space that is happening out here. And we have to understand whether, the job cuts and the cost savings that are coming out of that offset due to implementation of AI is resulting in better margins for the consumers, for the clients. So to that extent, I think that, it will have to be passed on. And as I said, we will have to see a significant churn happening where the the revenue trajectory stabilizes and then starts picking up. So until that point where the sales growth does not come in, I don't think that there will be enough buyers for the growth story, and we will progressively get sold out. So I'm watching the next couple of quarters very critically, and from a negative opinion on the last 2 years on the stocks, we have somewhat moved to marginally neutral and actively tracking this space. So right now, no favorites on which stocks to buy.
Watch and wait is the view. Let me go across to Rajesh for a quick view on whether there are any BTST ideas, because let's face it, it's a quiet day, dull day on the index level, but there must be some stocks that you're looking at.
Yeah, definitely. Many stocks are showing sign of strength, and I think healthcare space where one can focus on for BTST. Fortis managed to view breakout. So here we are holding bullish view and looking at the breakout. We expect that Fortis can extend gain. 975, 985 is the target for BTST. On the downside, 950 needs to keep as a stop loss. Another stock where one can go with a BTST is IndusInd Bank, very strong breakout of multiple supply zone. And looking at the banking stocks also, we hold bullish view for banking sector at this juncture. So IndusInd Bank, one can go for BTST. 985, 990 is the target. On the downside, 955 needs to keep as a stop loss.
Okay, so that's with regards to where the BTST, STBT calls go. But there are a couple of other newsmakers that we need to discuss as well. Let Jasmeet take us through the list quickly. Jasmeet, over to you.
Well, thank you for that, Hiral. First one on my list is KSB. Well, this company stock is buzzing on the back of the earnings of the company. So if you see the overall growth, we see a broad-based growth coming in, and the revenue for the particular quarter was led by the overall pump segment, and even the valves saw a good growth of 2.5%. If you look at the key numbers, the revenues of 7.9%, while the EBITDA is up 31%, and margins saw a big jump of 300 basis points in this particular quarter. Further, the net profit also saw an uptick of 11%, and the stock is buzzing in the same regards. Well, the second stock is Shaily Engineering. Well, the company gets an order worth ₹423 crore for supplying of pen injectors for the pharma companies, and we also have a brokerage zone that came out with a brokerage on the similar order. What they say is they have maintained a stance buy with a target price of 4,000, while they say this order creates an overall momentum when it comes to semaglutide segment of the company. While if the next one is Diamond Power Infra, well, the company received LOI from KP Green Energies worth ₹93 crore, the order for supply of overall power cables, and this is to be executed by the month of June. Now, lastly, I also have Jindal Poly. Well, this is a bit interesting one, given that NCLT dismisses company's plea which the company had filed against NCLT admission. Earlier, NCLT had put allegations against the company for the promoter buying undervalued transaction, and this is one of the first such suits that India has ever seen.
Interesting. The stock is actually down about 6.4%. Thanks so much, Jasmeet, for getting us those details. I'm talking about Jindal Poly Films. The stock is about 2,700 crore rupees of market capitalization. Let's pull up the right chart and see where it is right now. It's 6.4% down. What you saw on the screen there was KSB. Any chance, Vineet, you've looked at this case? Because this is a situation where minority shareholders had a class action suit that they filed. This is not something that you've seen in India ever. It's something that you often see in the US. And they've actually alleged that there has been an undervaluing of transactions, related party transactions, going back several years. They've studied something that has taken place over the course of the last decade, and they've alleged that there is significant loss of value that has taken place. So, have you looked at this company, and are you familiar with the case?
So, leaving aside the corporate governance issue, I think the company is on a very good wicket. You're talking about KSH, right?
Jindal Polyfilms.
No, I won't comment on Jindal Polyfilms because we have not discussed this extensively. We haven't looked at it too much.
Right, let's just pull out the exchange stocks, BSE, CDSL, and even the broking stocks. Important commentary coming in from Bloomberg and NSE MD and CEO Ashish Chauhan has stated that the F&O volumes might be impacted on the lower side from April onwards as that STT, rise in STT comes in, and we're seeing a big dip coming in from the day's high for BSE. And just point out Angel One and Motilal Oswal as well, all the broking stocks, to give in the feel that the capital stocks, are they actually seeing a sell-off, but not so much reaction coming in the broking stocks.
It's mainly coming in on a BSE for some reason, why that sharp correction coming in there. I think that should be a conversation point right now.
Exactly. And Rajesh, your view on BSE, the stock itself is reacting to this important statement coming in. Your views on the technical charts?
So I think stock is still struggling to cross its 20-day moving average supply area. Since last couple of attempts almost failed to cross this level. Until the stock not crosses about 2850, 2900, I think a trend is likely to remain on the sideways consolidation. If stocks breaks below 2700 level, then we may see some more liquidation in this counter, and then stock can correct further. But I think till 2700 is intact, we may see a range bound activity in 100 rupees band for next couple of days.
That comment is very interesting that's coming in as well, with Ashish Chauhan mentioning about what is the need of the hour when it comes to the F&O side of business. I think that's what is creating that kind of a panic downtick in terms of BSE as a stock right now. It turned red, but pretty much on the borderline as we speak. Let's quickly pull up a United Spirits on the screens because Diageo has come out and given out a slight bit of a warning. They've cut their guidance as well, and that's what is putting pressure on this one. The parent of United Spirits fell 13%. The company has lowered its 2026 sales, profit and dividend outlook, and they've said that organic sales will be 2 to 3% lower. Your operating profit is expected to be flat as well, and weaker North America demand in China has affected earnings. Management, however, said that they did note strong performance in India. So India business is strong. So potentially you may not see a major impact on your domestic-oriented alcohol companies. That's what I could read between the lines as well, apart from the impact on United Spirits. And double-digit growth was mainly driven by Prestige and above. They've highlighted resuming of Andhra operations that will augur growth. And the CFO confirmed consideration of a stake sale in RCB, and that's something which has been doing rounds pretty strongly over the last couple of months. Vineet, any view when it comes to United Spirits and the other, alcohol companies? Because along with this one, you have a Sula also, which has been ruling under pressure.
So we are quite constructive on this space, and we think that Tilak Nagar is one stock which deserves attention. I think the recent acquisition provides a lot of room for growth. And so we are quite convinced on this stock idea.
Okay. So that's with regards to where alcohol companies go. A quick view, Rajesh. Anything on the Tilak Nagar Industries, United Spirits, United Breweries, Sula? You like anything on the charts?
I think United Spirit is still in the consolidation zone only. There is no movement since last couple of months in this counter. It's in range only. So if I go with other stocks also, most of the stocks are consolidating only. So I think some more consolidation is likely to be there as there is no as such strength on the near-term chart. So I think for trader, it should avoid.
Avoid call coming in for United Spirits right now. Thanks a lot, Rajesh and Vineet, both of you, for for giving your time for both technical and fundamental perspectives on the stocks and the markets. But coming back on the closing, of course, the Sensex monthly expiry is also at play, but markets largely expected to end flat. There was some volatility in the day's trade, but nevertheless, a little bit of short covering was definitely there in the IT pack, but then there was a slight reduction towards the end. Largely flattish, but that above that 200 DMA level, that's what we are looking at, and that has been good. What's doing really well is, of course, the Nifty Bank technical setup is still better than Nifty. And look at the advanced decline ratio for the second straight day. Let's show the mid cap and the small cap indices also, how they have performed. And lastly, I can say for the second straight day, the value buying is there. That means the breadth is improving. That's a good sign. Maybe the benchmark indices might not show you that much picture of the entire market, but the breadth is improving, and that is something which we will take it. Also, let's pull out the main stocks in the Nifty 50 index to show you what's happening there. And the key heavyweights, of course, the green have come up from last time in the last 1 hour. Reliance, TCS in the green, Tata Motors, PV, Eicher Motors doing well in trade, BL also seeing a 2% up move, and some kind of a selling definitely happening. HDFC Bank, that's a bit of concern, is down more than 1%, but Coal India, Eternal and Trend, these are the top losers in the Nifty pack. Let's talk about those sectors, how the sectors have performed, and largely we see our defense is doing really well. Remember, India, Israel meet is also happening. PM Modi is in Israel. We can expect something from defense as well. Already some announcements are there. Healthcare, pharma, the street is finding some kind of solace in a defensive pack, and that's why we're seeing some good movement happening, especially in the FNO space. Apart from that, even PSU Bank is seeing a good sense of buying, but what's not working is definitely a little bit of FMCG, but there's nothing to actually complain about. Markets are showing a good strength. Let's pull out the advanced decline ratio to give you another picture of how markets are moving, and we can just show the advanced decline ratio. And yes, this is where the changeover has happened in the last 45 minutes to half an hour. That is where we are seeing the divergence taking place, and it's a very good actually sentiment to actually see this green going above the red. But net it's pretty good for the broader markets. Let's pull out the BSE 500 index to show you more stock specific moves. And of course, Tejas network is doing really well. It's up 20%. Orient Electric moving, KSB on the back of earnings, seeing a good jump. And paper stocks also is something which you should watch out for. We had given you a hint also around 2 weeks ago that the prices are being hiked, and Q3, Q4 numbers is generally good for a paper industry. Also in the sell-off, there's a block deal impact of Home First Finance, and some kind of profit booking definitely coming in for Team Lease and even Affle and PCBL as well. So these are the stocks, but nevertheless, a kind of a consolidation is something which we are seeing in the market as we start the March series. So that's all, folks, for India Market Close. Stay tuned to NDTV Profit, and up next is Market Express.
Growing success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a highlight of all the headlines that you should keep track of this evening, and along with that, all the stocks that you should be keeping on your radar at this point in time. But before we do that, quick look at what the markets did. It was a mixed day of trade coming in when you talk about Indian equities. Benchmarks saw seesaw trade through the course of the day. Both Nifty and Sensex, after an early surge coming in, erased the gains during mid-session, eventually to end near that flat note as well in terms of broader markets. Let's talk about the broader market picture as well. Mid-cap index relatively outperformed, while small-cap index ended on a little bit of a flat note, mirroring the benchmarks. Let's also talk to you about the sectoral picture. Then the gains were largely led by defense and pharma counters. PSU Bank Index also staged a recovery during the day, followed by auto stocks. So that's something that you were looking at when you talk about sectors. On the losing side, something like FMCG stocks, financials, those were witnessing a mild selling pressure. So that's the entire sectoral picture as well. But let's also talk about stocks, and onto a stock that was buzzing away in trade, as you can very clearly see on your screen. Sanofi Consumer reports yet another strong quarter, posting over 40% growth for the second consecutive period. Domestic sales rise around 23%. Exports surge nearly tenfold on a low base. When you talk about the revenue as well, you're looking at a 50% thereabout jump coming in to about 250 crore rupees, with profit after tax up about 50% as well. And the company also improves operational efficiency, cutting stock levels, depreciation and other expenses, significantly maintaining healthy margins near 36%. Let's also talk to you about Shaily Engineering Plastics, that has clinched a major, somewhere close to 400 crore manufacturing and supply contract from a large domestic pharma company. On the back of that, the stock was buzzing away in trade. 2.5% uptick coming in on this particular counter on the back of that boost coming in to the sentiment around the stock and strengthening its position in the fast-growing drug delivery devices space. Now, when you talk about the long-term agreement, this spans about 4 years and involves the production of pen injectors, marking a significant expansion of the company's healthcare portfolio. Let's also talk to you about the pharma pack that has been in focus all day today. So there's Zydus Life that actually stands out on the back of gearing up to launch its semaglutide injection in India the moment the patent expires, introducing it under the brands Semaglyn, Mashima and Altomay. Now, when you talk about the DCGI that has already cleared this particular product for type 2 diabetes and even obesity, and when you talk about this particular version of the company, that's going to be featuring a first of its kind reusable adjustable pen device that is a major differentiator also coming in, also cuts costs and improves adherence. Let's also talk to you about DRL or Dr. Reddy's Laboratories that says that Sandoz has not provided guidance on the semaglutide launch in Canada, with a potential launch now likely in the second half of 2026. Now let's talk about approvals or launches of GSCMA in Canada and Brazil that could also face delays, which contrasts with the company's earlier guidance. So you're looking at first half of 2026 just for that little bit of timeline. And now from here on, you can be expecting a little bit of delay. Let's also talk to you about Poonawalla FinCorp that is in focus after UBS initiated coverage with a buy rating and a target price close to about 640 rupees, implying nearly 40% upside from the current levels that you're seeing for this particular counter. Now, the brokerage says that the NBFC is shaping into a solid franchise backed by strong management quality and a rare AAA credit rating that gives it access to low-cost funding. When you talk about the word coming in, they expect loan against property and gold loans to become the company's anchor growth engines in the years ahead. Let's also shift focus onto banks, then talk to you about Bandhan Bank that has received a significant boost after SBI Mutual Fund secures RBI nod to acquire up to 9.99% stake in the private lender. Now, when you talk about this particular approval, that has been granted via an RBI letter, and it allows SBI MF to raise its holding, currently around 3.45% for context, through its balanced advantage fund to just under 10%, subject to compliance with banking and securities norms. Now, this particular rule must be acted upon within just about a year, and SBI MF cannot be breaching this particular ceiling at any time. Let's also talk to you about SBI that remains firmly on CLSA's radar. In fact, the brokerage maintains an outperform rating and sets a target price close to about 1,200, somewhere close to 1,200 rupees in a note as well that playfully asks, who said elephants can't dance? You do have CLSA highlighting SBI's strong growth and profitability as well, calling it a core portfolio stock thanks to consistent execution. Now, in terms of other commentary coming in, they're also talking about how the company has successfully de-risked its balance sheet while still growing faster than the industry. Now, importantly, you do have CASA growth that is finally picking up after 3 muted years, and that's also something that CLSA highlighted. Let's also shift focus back to pharma because there's Lupin that is in focus here on the back of them confirming that the Maharashtra GST department has initiated an inspection and search operation at its registered Mumbai office. Now, officials are reviewing documents related to GST payments and input tax credit claims as part of a compliance-focused examination. When you talk about the company in terms of commentary, they're saying that they're fully cooperating with authorities and providing all requested information at this point in time. Importantly, the company has clarified that the proceedings will have no impact on its financials, business operations, or even ongoing activities. Let's also talk to you about Diageo, or the parent company of United Spirits that has trimmed its 2026 sales and profit outlook, sending the stock down sharply in global trade as well. The world's largest spirits maker now expects organic sales to come in 2 to 3% lower on the back of that. You did have USL also trading with a cut of about 1.7% thereabout. Despite the downgrade, Diageo in fact highlighted that growth in markets, the likes of Latin America, and even parts of Asia, including India's Andhra region, remains resilient at this point in time, with the company also expecting this to be offsetting some of the broader global slowdown. Let's also move on and talk to you about KSB that has in fact reported a strong set of numbers in the third quarter. Margins expanded sharply, revenue rose about 8% thereabout. While when you talk about their EBITDA as well, you're seeing a jump of about 30% coming in here, lifting margins to around 16.5%. When you talk about the profit as well, that is up about 11% on a year-on-year basis, and the stock, of course, was gaining in trade, up about 9.2%, following that robust set of numbers. Let's also shift focus back to brokerages now. Talk to you about brokerages remaining positive when it comes to some of the gold financiers amid strong loan growth. When you talk about Jefferies, they're saying that gold loans are rising sharply, helped by firm gold prices and easing regulations that could aid large NBFCs in defending market share. Now, they're also talking about favorable risk reward here for Muthoot Finance in terms of the companies that they're looking at. Meanwhile, Macquarie is flagging rapid growth when you talk about the segment and also expects the RBI to stay watchful at this point in time. It also cautions that any sharp correction when it comes to gold prices could impact growth but also recoveries. Let's also talk to you about Jindal Polyfilms that has faced a legal setback as the National Company Law Appellate Tribunal, or NCLAT, has dismissed the company's appeal against the admission of a class action suit by the NCLT. Now, the case, the first of its kind in the country, alleges undervalued transactions involving the promoters. The dismissal means that the class action proceedings will continue as admitted by the NCLT. Let's also talk to you about Diamond Power Infra. Now, that particular counter was in focus on the back of securing a significant order from KPI Green Energy, valued at about 93 crore rupees. Now, the stock, of course, was trading with a slight bit of a negative bias, but the contract is for the supply of power cables and is slated for execution by June 2026. This order underlines the company's growing role when you talk about the renewable energy sector and also adds to its order book. Let's also talk to you about Chola Finance, that has in fact dismissed media reports suggesting that Executive Chairman is going to be exiting Cholamandalam Investment Finance as part of a Murugappa family settlement. The company called the rumors factually incorrect and entirely baseless. Shares of the firm had fallen as much as about 7% in the start in the early hours of trading session today, but pared most of the losses following this particular clarification. Let's also talk to you about Centum Electronics, that was set for a strong growth in the coming quarters after securing a major order from HAL to the tune of about 600 crore rupees. Now, the company expects its order book, that is already near 1,800 crore rupees at the end of Q3, to grow further with upcoming space-based and critical program orders. When you talk about the commentary as well, you do have the joint MD of the company telling NDTV Profit that Centum Electronics is guiding for somewhere close to 25 to 30% growth in the next few quarters, reflecting that little bit of strong momentum from new wins and strategic expansion plans. Let's also talk to you about MB Photovoltaic, that says that it remains insulated when it comes to the US solar import duties, shielding its business from international trade pressures. When you talk about the company's manufacturing, that continues to be closely aligned with domestic demand. Also a little bit supporting steady growth here in the renewable energy sector. Let's also talk to you about the National Stock Exchange, that has begun inviting global and domestic banks to pitch for its long-awaited $2.5 billion IPO, which would become one of India's biggest market listings. According to reports, now the exchange has asked investment banks to submit proposals in the coming weeks as it works toward reviving its long-delayed plan after resolving key regulatory concerns. Now, the listing is expected to value NSE among India's most valuable financial market institutions. Let's also talk to you about the center telling major tech platforms that the 3-hour deadline for removing flagged AI-generated and deep-fake content will remain unchanged. Now, this is at a review meeting where officials in fact said that compliance with IT rule amendment is non-negotiable. In fact, platforms cannot expect exemptions or shielding if they fail to act quickly. The government also said that the bigger challenge right now is prioritizing harmful synthetic content, not just labeling requirements. And more when it comes to regulation against platforms, then Union Minister Ashwini Vaishnav has issued a sharp warning when it comes to digital platforms, saying that they must wake up and take full responsibility for harmful synthetic and AI-generated content. He's also stressed that non-adherence to the rules is going to be making platforms liable, and deepfake content must not be created without a person's consent. Vaishnav has also urged platforms to rethink revenue sharing, seen that creators, news organizations, and even researchers deserve fair compensation, and suggested legal action could follow if companies don't act voluntarily. Let's also talk to you about Indian Railways, that has announced 2 major reforms aimed at speeding up innovation and modernizing passenger services. The launch of a new rail tech policy and a fully digital claims tribunal. Railway Minister Ashwini Vaishnav also said that the rail tech framework will create a structured pathway when you talk about startups and tech companies to develop India's railway-specific solutions. At the same time, the digital tribunal is designed to transform how compensation claims are processed, reducing delays and enabling transparent time-bound decisions through an online platform. Let's also talk to you about SEBI unveiling a sweeping overhaul of mutual fund classifications, introducing a new life cycle fund category and tightening rules to ensure schemes remain strictly true to label. Now, the regulator has also standardized fund of funds structure, set investment caps, and also asked all existing schemes to realign within 6 months. The changes aim to reduce product clutter, but also prevent overlap and make fund choices clearer when it comes to investors. Let's also talk to you about India's next census, scheduled for 2027, is going to be a fully digital exercise for the first time in history, powered by a new census management and monitoring system. The portal is going to be replacing paper forms with handheld devices, digital maps, and even real-time monitoring. So that's something that you're looking at in terms of the digital push here. Over 3.2 million field staff will collect and upload demographic data directly through mobile systems. Citizens will also have the option of self-enumeration. Let's also talk to you about the Central Drugs Standard Control Organization that has modified norms for testing permissions to speed up drug approvals in the country. Under the revised framework, companies seeking approvals can obtain testing permissions more quickly, cutting regulatory delays. The changes, in fact, aim to streamline timelines when it comes to drug evaluation, but also improve coordination between labs and manufacturers and reduce bottlenecks when you talk about the approval process. Now, the CDS CEO says that this particular move is going to be helping expedite access to new medicines and also enhance the efficiency of India's pharma regulatory system, benefiting patients and industry alike. Let's also talk about the government of India directing petrol retailers to sell E20 petrol with a minimum somewhere close to 95 grade across the country from April 1st. Under the new mandate, in fact, all fuel stations must offer the blended petrol, which contains about 20% ethanol and 80% conventional fuel, aimed at reducing emissions and also boosting farm-based ethanol usage. When you talk about states and oil marketing companies, they have been asked to prepare for distribution and storage upgrades ahead of the rollout. Now, this is one move that aligns with India's ethanol blending goals and energy transition strategy. Just for a little bit of background here, and it's expected to gradually replace traditional petrol grades over time. Let's also talk to you about Apple Inc. that is in talks with major Indian banks and global card networks as it prepares to launch its Apple Pay payment service in India around mid-2026. According to people familiar with the matter, negotiations involve ICICI Bank, HDFC Bank and Axis Bank. So that's some heavyweights that you're talking about here, with discussions also including MasterCard and also Visa for support. The timeline is still fluid, but the planned launch signals Apple's push into India's fast-growing digital payments market here. Now, the service is expected to support Unified Payments Interface or UPI and card payments pending regulatory and banking approvals. Let's also talk to you about EdTech major upgrade that has acquired internship and training platform Internshala in a full stock swap deal, marking a major consolidation when it comes to India's skilling and employability space. While the valuation has not been disclosed at this point in time, Upgrad says that the move strengthens its learn to work ecosystem by combining its higher education and skilling programs along with Internshala's internship network. Both companies are going to be continuing operations independently, but will now collaborate closely when it comes to courses, assessments, and even placement-linked pathways for students and early career professionals. Let's also talk to you about Nvidia that has reported another record quarter coming in, posting about $68.1 billion in Q4 in terms of revenue. So you're looking at a 20% uptick sequentially and 73% on a year-on-year basis, driven by explosive demand when it comes to AI computing. Now, its data center business alone hit about $62.3 billion, which is an uptick of about 75% from last year as hyperscalers ramped AI investments for financial year 26. When you talk about the revenue as well, you're looking at a surge of about 65%. Let's also get you the commentary coming in from the management, because you do have the CEO who said that agentic AI is at an inflection point, and that inflection point, in fact, is something that has arrived, according to Jensen Huang, the CEO of the company, with enterprises racing to expand AI compute capacity. Now, businessman Anil Ambani appeared before the Enforcement Directorate amid an ongoing money laundering probe into companies linked to the Reliance Group. The questioning comes under the PMLA in connection with alleged financial irregularities involving group entities. In a separate development, the Central Bureau of Investigation has registered a fresh case against Ambani and Reliance Communications for allegedly defrauding Bank of Baroda of about 2,200 crore rupees between 2013 and 2017. Both investigations are active and details of Ambani's ED questioning have not been disclosed at this point in time. Let's also talk to you about Sikkim, that has been jolted by 2 back-to-back earthquakes, but officials say that there are no injuries or damage at this point in time. Luckily, a stronger tremor was felt late morning, followed by a smaller one shortly after, with both quakes centered in the Gyaltsing and the Mangan regions as well. Now, when you talk about the National Center for Seismology, that says that the quakes were shallow, which is why they were widely felt across the nearby towns as well. Now let's talk to you about India's Commerce Minister Piyush Goyal meeting US Commerce Secretary Howard Lutnick as well and Ambassador Sergio Gore in the national capital, holding what he called very fruitful discussions, in fact, to deepen trade ties. The meeting comes just days after the US Supreme Court struck down President Trump's earlier tariffs, prompting Washington to impose that temporary 10% tariff on all partners, which is a rate that Trump has warned could rise to 15%. And we've been talking about this, but India has postponed a planned delegation visit to Washington and is now studying the ruling's implications before moving ahead with the next phase of trade talks. Now, according to reports, the EU's proposed carbon tax on imports will remain part of the India-EU Free Trade Agreement discussions, signaling that the levy is not being rolled back despite India's concerns. Now, the issue will be handled through technical negotiations with Brussels, also willing to clarify the Carbon Border Adjustment Mechanism or CBAM, but not diluted. India has repeatedly argued that the tax disproportionately affects its steel and aluminium exporters. The official added that both sides are continuing to work on market access issues and tariff reductions, expressing optimism that progress can be made even as the CBAM debate remains a sticking point. On to some more international news then. Canadian Prime Minister Mark Carney begins a 4-day visit to India on Friday, his first since taking office, a key step in repairing bilateral ties strained in recent years. Now, he starts in Mumbai with business meetings before heading to the national capital, where he and PM Modi will be holding talks on Monday. Now, India's MEA has in fact said that the visit comes at an important juncture in normalizing relations, with both sides also set to review the progress in the India-Canada strategic partnership as well and explore deeper cooperation when it comes to not just trade but also investment, energy, education and innovation. Now, with the clock ticking and President Trump's March 1st to 6th deadline fast approaching, US-Iran nuclear talks have entered a tense third round. In a rare diplomatic relay as well, you do have Oman's foreign minister who's now carrying Tehran's latest proposals to the American negotiating team, a last-ditch attempt to break the stalemate at this point in time. The mood at the table is quite edgy, expectations mixed, and the stakes unmistakably high this week could decide whether the two sides inch toward a breakthrough or watch the window slam shut as well. And this is going to be extremely crucial for oil prices as well. There's a dramatic new twist when it comes to Nicolas Maduro drug trafficking case. His lawyer says US authorities are blocking Venezuela from paying his legal fees, citing sanctions that require special treasury approval according to court filings. A license briefly granted to Maduro's attorney was revoked within hours, leaving the ousted Venezuelan leader also unable to fund his defense. In fact, Maduro, taken to the US in a January 3rd raid, has pleaded not guilty, calling himself a prisoner of war. Now, a US federal judge has ruled that the Trump administration's third country deportation policy is unlawful, dealing a setback to the broader immigration crackdown. The policy, adopted in March 2025, allowed rapid deportation of migrants to countries other than their home states with minimal notice, without giving them a meaningful opportunity to object. US District Judge, in fact, has said that the policy violated due process protections and declared it invalid. He's also paused the ruling for 15 days to allow for an appeal. The decision underscores ongoing legal challenges to current immigration enforcement rules. With that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on
Market ends flat with Nifty below 25,500. Sectors closed mixed with the defense index after Prime Minister Modi spoke about deepening India-Israel defense ties and said that a strong defense partnership between trusted partners is vital. Fraudulent transactions worth $280,000 hit 5,000 of Yes Bank's multi-currency forex cards. The bank says it's working to recover all disputed amounts after blocking 688 unauthorized transaction attempts. Indian IT stocks gain after Nvidia announces record quarterly revenue of $68 billion and fourth quarter full year revenue jumps by 65% to $215.9 billion. Gold rebounds to edge towards $5,200 an ounce as investors await developments related to Tehran and Washington. Bitcoin inches towards $70,000 after snapping out of 3-session losing streak. Government maintains 3-hour timeline for taking down content, deepfake and AI content from platforms. Sources say it told the big tech that compliance with IT amendments is a priority and is non-negotiable. Commerce Minister Piyush Goyal meets US Commerce Secretary Howard Lutnick and US Ambassador to India Sergio Gore engaged in very fruitful discussions to expand our trade and economic partnership, Minister Goyal posted on his X account. Railway Minister Ashwini Vaishnav promises 52 reforms in 52 weeks, announces rail tech policy, invites startups to resolve innovation challenges and brings in Railway Claims Tribunal, a digital solution designed to streamline and modernize processing of court cases in RCT. Trouble mounts for industrialist Anil Ambani as the CBI registers another case against him and Reliance Communications for allegedly defrauding Bank of Baroda of 2,223 crore rupees between 2013 to 2017. Hello and welcome. A very good evening, viewers. This is Malika Mishra on NDTV Profit, and you're watching Profit 360, a show that gets you all the latest insights into markets, national as well as international news. Let's go straight to the day's market action first. Benchmark indices closed flat, with Nifty ending below 25,500 after sharp moves throughout the session. Sectors ended mixed, with the defense index especially gaining the most. Nifty Financial Services fell for the second day in a row as the weakness in financial stocks outweighed continued recovery in information technology. Let's go across to my colleague Jasmeet Singhai for a quick wrap of what happened through the day.
Nifty ends flat in today's trade. If you look at the overall picture, Nifty ends just below 25,500 mark and up about 0.06% in today's trade. While Trent and Eternal lead the overall fall in Nifty today, down about 1.5%, while Tata Motor and Eicher lead the gain in Nifty, up about 2%. The broader market ends on a mixed note. If you look at the Nifty Midcap 150, it's up more than 0.5% today's trade. And what led the gain in Nifty Midcap 150 is Mankind Pharma among the top gainers, which has gained over 4% today's trade. While Nifty Small Cap 250 also ends flat in today's trade, and we have overall Sagility and Home First, which fell the most in Nifty Small Cap 250, both down about 5%. If we look at the sectors end on a mixed note. Nifty Pharma gains over 1% in today's trade, while Nifty Media becomes a top loser, ends about 0.5% lower in today's trade. While Tips Music lead the fall in Nifty Media, down about 2.5% today, while lastly Nifty Financial Services fall for the second day in a row.
Thanks so much for that market wrap, Jasmeet. But being straightforward, headwinds in the IT services space is real. This is the view of Vikas Parshad of M&G Investments. In a conversation with us earlier today, viewers, the equity expert highlighted that while some mid-cap names have been unfairly punished due to the SaaS-pocalypse, he is still underweight IT index. Listen in to his rationale.
There are some small and mid-cap companies in particular in India that have been, we think, unfairly punished. Some tech platforms, some IT services that are listed in India but have a majority of the customer base abroad, but are very different from the heavyweight benchmark components that everybody is focused on. So again, we are seeing opportunities in this. There are some stocks that are down 20 to 40% just in February, as this SaaS-pocalypse, as some people are calling it, has taken root all around the world. But if you just focus on the IT services sector, the revenue headwinds are real. The cost structures are still high, given what might happen or the revenue opportunities that we might see in the next couple of years. So we remain underweight the IT services sector here.
With that being said, Indian IT stocks like TCS, Infosys and HCL Tech have been in focus after global tech giant NVIDIA reported another blockbuster Q4 with quarterly revenue surging to about $68.1 billion, driven by strong AI chip demand and data center spending. NVIDIA's results bolstered global tech sentiment, lifting the Nifty IT index nearly 2%, which is its second straight session of gains after recent weakness. Nearly all major IT stocks traded higher, reflecting renewed optimism around AI spending cycle and services demand that could benefit Indian IT exporters. In fact, during the earnings con call, NVIDIA's CEO Jensen Huang said the company remains confident about long-term cash flow growth, citing a fundamental shift in global AI adoption. Let's listen into his remarks.
I am confident in their cash flow growing. And the reason for that is very simple. We have now seen the inflection of agentic AI and the usefulness of agents across the world in enterprises everywhere. You're seeing incredible compute demand because of it. In this new world of AI, compute is revenues. Without compute, there's no way to generate tokens. Without tokens, there's no way to grow revenues. So in this new world of AI, compute equals revenues. And I am certain that at this point, with the productive use of Codex and Claude Code and the excitement around Claude Cowork and just the incredible enthusiasm about OpenClaw and the enterprise versions of them, all of the enterprise ISVs who are now working on agentic systems on top of their tools platforms. I'm certain at this point that we are at the inflection point. We've reached the inflection point, and we're generating profitable tokens that are productive for customers and profitable for the cloud service providers.
So key takeaway from that commentary: in this new world of AI, revenue is equal to compute. Let's now put the spotlight on defense space, which has been gaining in trade today. Most defense stocks, if you see, are on the rise as investor interest solidifies ahead of a potential India-Israel defense deal. Shares of defense companies like Bharat Electronics, HAL, Cochin Shipyard, Mazagon Dock and Garden Reach Shipbuilders, for instance, have all been trading with gains of anywhere between 0.5 to 2% in trade today. For instance, Nifty India Defence Index itself has been up and high in the green today. But as per media reports, PM Modi's visit to Israel this time is likely to go beyond just the realm of defence and could transpire into high-tech and AI as well. However, with the partnership gaining momentum, several Indian companies are set to share technology and manufacturing expertise with Israeli counterparts. And my colleague Mahima is here with the lowdown on the overall ties and how exactly does it benefit the defence sector. Mahima.
Over a period of time, the relationship between India and Israel, especially in the defense space, has evolved, and how, right? From a buyer-seller relationship to now a deep, multifaceted strategic alliance is what we are seeing in terms of partnership that focuses on co-development as well as co-production. India and Israel, in fact, India is Israel's biggest defense customer and accounts for 34% of all Israeli defense exports has been between 2020 to 2024. In fact, the bilateral defense collaboration has reached around $8.6 billion in early 2026 as well. Now, speaking about the partnerships in different areas of defense, air and missile defense, the two most important ones were Barak 8 as well as the flagship joint development between DRDO as well as IAI. In terms of drones, there is extensive use of Heron TP Searcher as well as Hermes and different other products like 900 UAVs plus Drishti Trend plus there is also India use of Harop as well as Harpy kamikaze drones. In terms of the partnerships in terms of precision strikes, there is India that has recently approved around $8.7 billion package. Spice 100 guided bombs plus Rampage air-to-surface missiles and air LORA ballistic missiles is also on the cards. In terms of ties, that is in terms of joint ventures, well, major Israeli firms like IAI plus Elbit plus Rafale have JVs with Indian giants. The companies that have exposures or JVs or partnership with these companies include Adani Defense Aerospace plus Bharat Forge, Tata Advanced Systems, Mahindra Defense, Larsen & Toubro, HAL, BEL as well as Bharat Dynamics. In terms of treaties, 10-year roadmap for AI, cybersecurity, quantum computing has been there. Bilateral investment treaties signed in September 25 aimed at turbocharging defense investments. In terms of the ties between the two countries for missiles and bombs, there's key systems that includes Spice 2000 guided bombs, Spike anti-tank missiles plus Rampage air-to-surface missiles. For something like a surveillance that India uses, Israeli Falcon AWACS is something that they've got from there, advanced radar systems as well. And lastly, for manufacturing hub, there are different JVs in place. You have Adani Elbit Advanced Systems, PLR Systems, Kalyani Rafale Advanced Systems, and for emerging technologies that we're looking at, that includes some things like laser weapons, Golden Horizon missile, as well as something like a cyber security and AI in combination. So this is the overall view of what one can make from this visit of Narendra Modi, and plus how defense has been the ground for India and Israel relationship.
Thanks so much for all those details, Mahima. But viewer shares of Jindal Poly tanked about 6% in trade today as India's first corporate class action case against Jindal Poly Films caught investor attention. The National Company Law Appellate Tribunal, or NCLAT, has refused to stop the proceedings. For a quick background, minority shareholders Ankit Jain, Reena Jain and Ruchi Jain Hanasoge, who hold nearly 5% stake, filed this case. They accuse the company's promoters and management of fraud and siphoning of about 2,500 crore rupees through undervalued sales of assets and related party deals. They claim Jindal Poly invested heavily in group power firms years ago, then sold stakes at very low prices to promoter-linked entities, causing big losses to public investors. Then on the 5th February, the NCLT admitted the petition and issued notice, but Jindal Poly appealed for a stay. Today, however, The NCLAT dismissed the appeal, letting the NCLT case continue on grounds of merit. Moving on, let's focus on gold prices as they rebounded after last session's weakness to edge towards $5,200. That's the mark they're currently hovering on. Investors also await more developments related to Tehran and Washington as a third round of nuclear talks is currently underway. Remember, all of us have actually been keeping an eye on this particular conversation. Gold, which is a store of value in times of geopolitical uncertainty, has been benefiting from concerns around a conflict in West Asia for much of this week. A slightly weaker US dollar also made bullion less expensive for overseas buyers. All this while brokerages are quite bullish, with JP Morgan the latest addition to the list. The brokerage predicts that gold could hit $6,300 an ounce by the end of this year. So that's the mark that you need to watch out for. But shifting tracks to Yes Bank, the lender's multi-currency forex card has been hit by a major fraud incident, and this affects more than 5,000 customers and is linked to Latin American merchants. My colleague Nisha Podar joins us with all the details. Nisha, what's going on with Yes Bank?
That's right. It's a pretty important fraud that has been detected at Yes Bank, where 15 transactions with the merchants coming in from Latin America on account of the prepaid multi-currency forex card that was issued by Yes Bank to its customers. This has impacted 5,000 of its customers with fraudulent transactions online on e-commerce transactions, and has really caused a fraud of $0.28 million. Now, this comes in because of the vulnerability when certain countries do not have two-factor authentication route for approving the transactions when the transactions are made online. Remember, the Indian online transaction system is well fortified because of the two-factor authentication, which is not available all across the world. Therefore, stringent measures have been taken by Yes Bank when they detected these fraudulent transactions, and several of these transactions were also declined. Unauthorized transactions were also declined. So they have taken stringent measures in order to avert, investigate, and also to block the e-commerce online transactions coming in from this specific country at the moment. Of course, the banking regulator, RBI, has also been said to ask questions from Yes Bank on this particular matter. But it is to be noted that definitely when a forex card is used, which is prepaid in nature, and you use it in the countries where there are no specific transaction authentications which are prevalent in India, then this vulnerability prevails, and that's the larger question to really look at.
Well, thank you so much for that roundup on what's happening with Yes Bank and the fraud that has just emerged. But viewers, Bitcoin has surged towards the $70,000 mark, snapping a 3-session losing streak as risk appetite returned to global markets. The move came alongside gains in equities after Nvidia delivered another strong earnings report, which helped lift broader sentiment. Bitcoin jumped as much as 9.3% to $69,987, its biggest intraday gain since early February, while Ether climbed about 13% to roughly $2,100. Analysts caution, however, that despite the rebound, the industry mood remains mixed, with an estimated 9 million Bitcoin still held below purchase cost, limiting over-enthusiasm among long-term investors. But moving on to an important story, the government has maintained 3-hour limit for taking down deepfake and AI content. 3 hours. Sources told NDTV Profit that in a meeting with big tech firms such as Meta, Google, OpenAI on the AI content rules from the 25th of February. Let's go across to my colleague Rishabh Bhatnagar, in fact, for all the details. Rishabh, what are you picking up on this matter?
Right, so there was a very important meeting yesterday between the government, attended by senior media officials and various representatives of big tech as well as Indian technology companies. And what the government essentially told these platforms was that they will not be making any changes to the amendments to the IT rules that were notified on February 10th. They came into operationalization on February 20th, and there were some concerns that were highlighted by these platforms that the 3-hour timeline for takedown of certain content is quite short. They cited certain operational challenges, but the government stood firm on its stance. They said that compliance with these is a priority and it is non-negotiable. They said that the liability for any violations that might come will be decided later on a case-by-case basis, but the government added that it cannot possibly be shielding these firms if they don't comply with these amendments to these IT rules. So what you and I as users of social media platforms can expect is that these AI labels, which is essentially some sort of form of labeling of deepfake or artificially intelligent content on our timelines and on our feeds, those labels might come into existence very, very soon, and you and I could possibly be seeing these very, very soon on our social media platforms. So that's what we're picking up from Meeti.
Okay, thank you so much for that update. And viewers, that simply means, as Rishabh highlighted, there is stringent action being taken against deepfake or artificial intelligence related content. And 3 hours window is something that needs to be tracked and looked into. But Ashwini Vaishnav, in fact, speaking along the same lines, has issued a sharp message to digital platforms saying they must take responsibility for the content they host, especially as deepfakes and synthetic media rise sharply. Let's listen into his comments.
Platforms must take the responsibility for the content that is hosted by them. The online safety of children, the online safety of all citizens is the responsibility of the platforms. Non-adherence to these principles will definitely make them responsible, because the nature of internet has changed now, and synthetic content should not be generated without the consent of the person whose face or voice or personality has been used to create the content.
There's another comment from Ashwini Vaishnav that we want you to listen to. Ashwini Vaishnav has also unveiled RailTech portal, ERCT, as part of railway reforms. He said the government is rolling out 52 reforms in 52 weeks for Indian Railways in 2026, building on 2 reforms already announced earlier this year. The broader reform push focuses on modernizing technology use, speeding up services, and improving efficiency across the rail network. Listen in.
रेलटेक का बेसिकली स्टार्टअप्स के लिए परमानेंटली ओपन रहेगा, ये परमानेंटली ओपन रहेगा और प्रॉब्लम स्टेटमेंट्स कभी भी नए सॉल्यूशंस दे सकते हैं. इसको टेंडर और एक वो अवधि और उसके बैरियर से निकाल दिया है.
Okay, and spotlight on India-US relations. Commerce Minister Piyush Goyal has met US Commerce Secretary Howard Lutnick and Ambassador Sergio Gore in New Delhi, holding what he called a very fruitful discussion to deepen trade ties between both the countries. The meeting comes just days after the US Supreme Court struck down President Trump's earlier tariffs, prompting Washington to impose a temporary 10% tariff on all partners, a rate Trump has warned could rise to 15%. India has postponed a planned delegation visit to Washington and is now studying the rules' implications before moving ahead with the next phase of trade talks. The Enforcement Directorate, in other news, has provisionally attached Pali Hill residential property aboard of Anil Ambani in Reliance Communications bank fraud case, which is worth about 3,700 odd crores under PMLA 2002. Now, cumulative attachment of properties in the group now stands at over 15,700 crore rupees. The property is located in the posh Pali Hill area of Bandra and counts top Bollywood stars amongst its neighbours. Let's go across to NDTV's Saurabh Gupta, joining us now from outside the Pali Hill property for all the details on this case.
A major step by the Enforcement Directorate as it continues its investigation into allegations of money laundering against, of course, RCOM, which is an Anil Ambani associated company. Now, the Enforcement Directorate says that it has provisionally attached the Pali Hill residential property aboard of Mr. Anil Ambani in the Reliance Communication Limited's bank fraud case. Now, what the ED goes on to say is that RCOM and its group companies avail loans from domestic and foreign lenders, which is, of course, a total amount of rupees 40,185 crores, and this amount is outstanding. And the ED also goes on to say that the ED investigation has revealed that among other assets, the Pali Hill property, pictures of which you see right now, was aggregated into the Rise E Trust, a private family trust of the members of Mr. Anil Ambani's family. This was done to make it appear as though Mr. Anil Ambani is not involved. The ED then goes on to say the intended effect of this corporate restructuring was to ensure wealth preservation and resource generation by aggregation of the property in the Rise E Trust and shield it from the personal liabilities of Mr. Anil Ambani in the form of personal guarantees extended by him to lender banks against the sanctioned loans to RCOM. Now, the value of this property, according to the
Let's quickly show you and cut across to live visuals of Prime Minister Narendra Modi in Israel. On your screens is also our External Affairs Minister S. Jaishankar, who's just walked out of that frame, but you can still see Narendra Modi and Prime Minister Benjamin Netanyahu. Jaishankar, in fact, is right now being felicitated by both the leaders. Remember, Prime Minister Narendra Modi is in Israel on a high-profile 2-day visit, making his second trip to Tel Aviv after the historic 2017 visit. PM Modi has also met Prime Minister Benjamin Netanyahu yesterday, and in fact, we also covered his address in the Parliament of Israel, the Knesset, which is also, remember, one of the first done by any Indian Prime Minister. These are live visuals on your screen. As you can see, a felicitation of certain dignitaries happening at this given point in time. Remember, PM Modi was also the first world leaders to sort of condemn the deadly attacks of Hamas, in which almost 1,200 Israelis were killed and some 250 kidnapped. But this time, the relationship between Israel and India goes beyond just defense. They're expected to tie and talk about trade in various aspects, whether it's technology, artificial intelligence, and a lot more. We're showing you live visuals of PM Modi and Benjamin Netanyahu felicitating key dignitaries who are in their presence at the moment.
Thank you both very much. And the presentation of the report of the 4th India-Israel CEO Forum will be presented by the Trade Commissioner for the Ministry of Economy, Mr. Roy Fisher, and the Ambassador of India to Israel, Ambassador J.P. Singh. Please take the stage. And now the implementation protocol to the agreement in commerce and services sector, the manufacturing sector, and the restaurant sector will be signed by the Director of Foreign Workers Administration at the Population and Immigration Authority, Mr. Moshe Nakash, and the Foreign Secretary for the Republic of India, Mr. Vikram Misri. Please take the stage. Thank you. The letter of intent on the establishment of the Cyber Center of Excellence will now be signed by the Director General of the National Cyber Directorate, Mr. Yossi Karadi, and the Foreign Secretary for the Republic of India, Mr. Vikram Misri. Thank you both. And now the Memorandum of Understanding between NPCI, International Payments Limited, and Masav, linking UPI, will now be signed by the CEO of Masav, Ophir Kadosh, and the Ambassador of India to Israel, Ambassador J.P. Singh. Thank you. And now the agreement on commercial arbitration will now be signed by attorney Dr. Menashe Cohen and the Ambassador of India to Israel, Ambassador J.P. Singh. Thank you. The Memorandum of Understanding between the International Financial Services Center Authority and the International Securities Authority will now be signed by the Chairman of the Israel Securities Authority, Advisor Yosef Zinger, and the Ambassador of India to Israel, Ambassador J.P. Singh. Thank you. And finally, our last one today, the Memorandum of Understanding on Artificial Intelligence will now be signed by the Director of the National Artificial Intelligence Directorate, Brigadier General in the Reserves, Erez Askal, and the Ambassador of India to Israel, Ambassador J.P. Singh. Thank you all for your participation today. I now want to welcome to the stage, to the podium, the Prime Minister of the State of Israel, Mr. Benjamin Netanyahu, and the Prime Minister of the Republic of India, Mr. Narendra Modi, to share a few remarks.
This is an amazing visit. An amazing conclusion to an amazing visit. It was short, but extraordinarily productive and also extraordinarily moving. I think there wasn't a dry eye left in Israel after your moving statement yesterday in the Knesset. And I can tell you that since then we've had also the opportunity to not look all deep into our hearts, but also into our remarkable minds that we have in our two countries. We saw an exhibit of innovation that excites imagination beyond belief. We spoke about cooperation with the extraordinarily talented people of India and our people, and we're working this into concrete plans. I'll just give you two examples. You know, you talk about precision agriculture. You know what that means. It means you don't average irrigate a field. You target a specific part. No, you target a specific plant. You water a plant. Well, why can't you water a specific student's mind? When we talk about precision education, we have now the software and the AI to reach every young student, boy or girl, and enable them to reach their full potential. And the limitations that were constraining us in previous times no longer constrain us. That is, to those who seize the future. The future belongs to those who innovate, and Israel and India are bent on innovation. We are proud ancient civilizations, very proud of our past, but absolutely determined to seize the future, and we can do it better together. we've decided to have a G2G meeting in India as soon as we can arrange it. We'd like to take the distinguished ministers who are here. I have to comment, my friend Narendra, you have an amazingly efficient government. What you can do with one minister and one ambassador. Now, it gives me thoughts. I don't want you to worry about it. Don't worry about it. But in fact, we know that the meeting of minds and hearts that we've had here will also continue in this remarkable G2G that is long overdue and will create an even greater boost to the enormous benefits that we can bring to each other and I think to humanity at large. And finally, I have to say at the end of this visit that I owe India, I don't know if I told you this, Narendra, but I owe India a great personal debt. You see, when I met Sarah for the first time, I think our first or second date was in an Indian restaurant in Tel Aviv. It was Rina Pashkarna. And I have to tell you, there is no question. First of all, the food was unbelievable. And Sarah was introduced to it for the first time, so it was a great first date, not only with the food, the date was excellent too. So obviously, I'm indebted to you, as are my children. And I want to tell you how deeply and from the heart we feel both our personal friendship and the friendship between our governments and our peoples. And may this continue and flourish and strengthen, as I'm sure it will as a result of this visit. Thank you. Thank you, Narendra. And thank you all. Thank you.
So I'll have to use Your Excellency, प्रधानमंत्री और मेरे मित्र नेतन्याहू, मिसेस नेतन्याहू, दोनों देशों के डेलीगेट्स, मीडिया के साथियों, नमस्कार, शालोम। मेरे और भारतीय डेलीगेशन के गर्मजोशी भरे स्वागत के लिए मैं प्रधानमंत्री नेतन्याहू का एक बार फिर हृदय से आभार व्यक्त करता हूं। 9 वर्ष पहले मुझे इजरायल की यात्रा करने वाले पहले भारतीय प्रधानमंत्री बनने का सौभाग्य मिला था। एक बार फिर इजरायल की ऐतिहासिक भूमि पर कदम रखना मेरे लिए गर्व और भावुकता का क्षण है। कल मुझे इजरायल के पार्लियामेंट को संबोधित करने का अवसर मिला। वहां मुझे स्पीकर ऑफ द क्नेसेट मेडल से भी सम्मानित किया गया। मैं इस सम्मान के लिए क्नेसेट स्पीकर महोदय, मेरे मित्र प्रधानमंत्री नेतन्याहू और इजरायल के लोगों का हार्दिक आभार व्यक्त करता हूं और इसे 140 करोड़ भारतवासी और भारत इजरायल मित्रता को मैं समर्पित करता हूं। फ्रेंड्स, हमारे संबंध गहरे विश्वास, साझा लोकतांत्रिक मूल्यों और मानवीय संवेदनाओं की मजबूत आधारशिला पर आधारित है, उस पर स्थापित है।